What's up, guys? Good morning. How you guys doing? I know I was a couple minutes behind. I was trying to get ready and go over some levels with you guys, give you guys some trade ideas. Welcome to the live stream. My name's Justin. I've been trading for about 10 years now, close to 10 years. Um, Markets seem to be pulling back. I had that feeling yesterday. It felt yesterday that we could not, or it's not that we could not. Give me 1 second. I'm sorry. What the fuck? Come on. It felt like we were struggling yesterday. Every time we went to try and, make a climb, it was pretty tough. So when the market went to close, I had a good feeling that we were going to pull it back, right? I was like, man, we're going to get a wick candle in here. You're going to get sellers to step in. And it didn't. You got a big candle to the upside. But look where we're at, right? Look where we're at. So this is what I mean by trading for close to 10 years now. This green candle here on a 5-minute chart, I could have swore we were going to reverse it here, but they waited. They waited. So what I'm going to do is we're going to go over the levels real quick. I'm going to give you guys my trade ideas. I was wanting us this peach line. Maybe I need to make it a bit bigger, but we did not hold it. And that's really unfortunate because that was the level I was watching. This level right here. We needed to hold this morning, and we didn't. We still might be okay. Listen, what do you guys see? All right, I'm going to ask you guys what you guys see while I do something real quick and write down. I have the list of what I'm watching. If we break yesterday's low, I'm going to go into this in 1 second on how exactly to start looking at these charts from a bigger perspective, right? Because we did something yesterday and we did something this morning that you're not seeing because nobody's telling you to look at it this way. This pink line is the weekly chart. On a weekly candle, where did we open? We opened here. Right around here somewhere, around 429, right? Something like that. So I want you to picture this, right? I want you guys to physically picture this weekly candle to the left, right here where this pink line is. Oh my goodness, I didn't do this. Oh no. I want you to picture it bumping into it, right? And you know how it wicks above it a little bit? It's wicking above it. And then there's no follow through extension. Now it's just going to break below it. And where's our downside? I think we get some downside today if we can't hold this level. If we can't hold this level, because what we're doing right now on a 5-minute, look, a new low, new low, new low, new low. But what are we doing? Right? We have a lower high, a lower high. We just put in our first higher low. Potentially. Okay? What is this? Or does it look like we're holding? Looks like we're holding a little bit. So let's see if we start to shift this mark, like shift it around. All right, let's see if we shift it around. Let me share this on Twitter real quick because I did not do that. If you guys could, if you'd allow me to get this video out to other people that would like to find a trading group and have someone to trade with, hit that like button. Comment down below, good, bad, ugly. I don't care. Comment down below. My goal is to get that plaque one day, but that's a lot of work. I'd have to do a lot of good things, and that's what I hope to do, man. I hope to bring you guys a lot of real, continuous, true value that allows you to grow your account and manage risk, right? That's the first thing we do is manage risk. Animal, my guy. You are. Where were you at yesterday? How's everything? Did you have a good weekend? It's good to see you. You guys might hear this. I'll turn the sound off. I just got to copy and paste this real quick. I'm going to put it on Twitter. I was trying to get some levels so that we're ready. You know what I mean? And we can just go right into it into the day. So that's why I didn't. I completely forgot to. I was more worried about brushing my teeth and getting you guys levels. So Oh, Lordy. So how are you doing this morning, buddy? We'll do stock market crash. That's a little clickbait, right? No, not twice. All right, come on. Let's get this over with. Come on. What are you watching this morning? You got anything on your list? I'm trying to rush and it's messing everything up. Messing everything up. We'll do that one too. Why not? Oh my gosh! I literally just typed SPX and they just said it on my phone. That's hilarious. And then we do the old 4X. We do the old 4X. Alright, crypto. Bada bing, bada boom. And then what do we do? What do we do? We work smarter, not harder. We clap it up. Finger to the Lord. Praise the Lord. Hallelujah. Great day. That's what we're going to have. That's what you're going to have. That's what I'm going to have. So if you have any doubts that you're not going to have a great day, we're not going to fucking kill it, you got to believe. You got to believe. You got to feel it. You got to, like, this is happening. Embrace it. You're a fucking winner. So am I. Guess what? Let's go win. Where are we starting at? The S&Ps. What I was saying. Weekly chart. I want you guys to picture something. Like I said, guys, I usually always do this. Can I back up 1 second? I have ADHD really badly. But listen, I'm going to come back to this. I want you to picture what happened here. All right, and what's going on. Can I go back for 5 seconds? Last night I did not do a live stream because I'm going to put out a video to help me not miss this again. This is JP Morgan. Last week, you go back about 5, 6 videos, I called this out very early, so early that your entry, this is why you need to join us, would have been right there on JP Morgan. You could have got this to this, and I had a box. You can go back to the video. I drew a box, and I said, this is where we're going. I would look to get this inside the top range of the box. Literally, I just put the lines there. Right there. I said, that's where we're going. From here. So again, I've laid out avenues. Yesterday, I was scanning through the market. And I seen this. And I said, I completely forgot. Because what did I had a circle here. Right? I had a circle there. If we go back to a couple videos, I had a circle, a turquoise circle that was like in this area, somewhere down here. It was like down here. And I said, if JP Morgan gets back down under this level, we get back down here. There's your 100-day moving average. I want to be a buyer. I want to be a buyer. I'm completely miss it. This is the 3rd time that JP Morgan has given you a beautiful extension. 4th time. This is a nice day too. This could have probably gotten you anywhere from 50 to 100% depending on where you were in options. Right? So it's a little unfortunate. I'm still, I don't know. I said it yesterday briefly that I missed it again. So how do we stop doing that? I've got a video for you. It's going to be coming out this afternoon. This afternoon, I'll have to leave a little early at like 2:30, 3 o'clock, because I have to go pick up my grandmother and then take her to the hospital. So let's go into the week. You're watching Disney right now? Nice. I like Disney too. You're probably talking about the show. Look at that nice resistance there. That's pretty nice resistance there. Just want to see why this isn't working. I swear, this is why Benzinga sucks. Because they pick and choose when they want to work. Like, if you have a business, a squawk, like, you got to have somebody show up covering the news, man. What is going on with my computer, guys? I'm sorry. Hold on. Give me. Oh my god, I'm sitting here talking and the mic was off. Thank you. Thank you. What I was saying is we gotta watch this area. If we put in a new low, that see how we're getting a tail there, kinda. We gotta watch. This is gonna tell us if we're making that shift, right? If we're starting to shift it, and we're gonna work our way to this 100-day moving average, up here at this blue box on the S&Ps. So if we are able to watch that shift, now watch the Dow, watch the Qs, watch IWM. One of them, other than the SPY, because the SPY is not going to be the leading indicator. It's either going to be the Qs, the Dow, or the IWM. The SPY sits in the middle, and it's the Qs, the Dow, and the IWM that'll rotate. One will lead, one will lag, right? Watch if one of them starts gaining ground for the SPY. Like, let's say if the Dow picks it up, right? The Qs will be last. If the Dow starts to lead, Q technology will be last. You'll see the Dow, IWM, and then the SPY, and then the Qs, right? So we look for that. You could also look for it on the way down. If the Qs technology start leading to the downside, then here comes the SPY, here comes the IWM, and here comes the Dow. Okay? We want to see if we're getting this shift. And what I was saying was, is this price action is sort of reminding me of this right here, right? Lower highs, lower lows. But it looks like it wants to range, but it doesn't. And it just continues and continues and continues. I think we might get that. We are oversold on the daily chart. We are oversold on the daily chart. Did I go over my thoughts to help you guys, to give you guys a thought process on reading charts on the weekly part of things, right? So this pink line that I have right here, this right here, this that pink line. Let me make it bigger for us. This one right here, right? That is the weekly close of last week. So if you picture the weekly candle, what did it do? It pretty much, what's today? Tuesday? Today's Tuesday. So Tuesday, Monday, Friday. Why did I do that? Hold on. That's not what it must have got deleted. It's right there. So That's where the other pink line was. That's where it was. That's where it was. I was wondering what was going on here. So Tuesday, Monday. Look, we're going down. Yesterday, man, it told us yesterday that price action was not to the upside. Yes, we got bought up, but it was a struggle. Look at every time we got bought up, down, down, and it could not get any type of momentum. So keep that in mind for whatever trades you have going on today. This weekly, this would be, so it's the white line. All right. This white line. So picture the weekly chart, that weekly candle. What did it do? We opened up here. We opened up right there at 429. We pushed up to last week's close, right? Think of it as yesterday, right? We pushed up into yesterday's close, which last week's close, right? Think about it as a single candle. We pushed up. We sat there right up above it. We were trying to hold. That's a failed hold above last week's close. We failed to hold above last week's close. That's important. So where is the downside to this candle? Where is the downside to it? That's what I'm trying to say. Where do we go? So if a weekly candle, which it doesn't mean that we can't find support back at like the low of, right? Because now if we sell off today, when we open up, depending on where we open up, this is going to be a wick. I know it sucks. I'm trying to see one candle. Here, let me do this. I'm telling you guys, these little things help. Because what we can look for, and we can say, okay, we pushed above it. Do we pull back down? Do we pull back down and hold that close? Do we hold Friday's close? We pushed above it. We're sitting there. Do we pull back and hold Friday's close? If we cannot hold it, where's the downside? The downside might be at least 2% away throughout the week. Things can change, right? That candle's about 3%. But I would look for some support. Where would support be? Support would be down at 425, right? 425 on the SPY. You do have 420 down at this weekly 100-day moving average. We have the 200-day moving average. So today, what I would look for is to see if we can hold, if we pull back into 430, which we're below it. We're already below it, right? We're below 430. We reclaimed it yesterday, and now we are below it. So what would I look for on the market open? If we could not hold the close and we're down below it, I want to look for the push into 430 and then the sell-off. Am I making any type of sense? Are you guys understanding what I'm saying? I got to get into like what it is I'm going to do today and stuff like that. There's some news with Amazon. So again, you got up above it again briefly today. Awesome, bro. Awesome. I hope that helps. So we know 430 is our number. Look at us sitting around here. Look at us sitting at 430.55, 430. It's this white line, right? So do we push up into it and now we make a resistance and we head to the downside? Because there's no clear negotiation between the governments. That means the velocity of money, there is an extraordinary amount of payments that are going to stop. Like that's the economy, like part of the economy is just going to get halted. They may have saved money. They can still spend money. But that means there is the traveling of money going out to people and individuals and places stops. Interest payments, payments to like businesses, payments to military like businesses and like all kinds of stuff. So it stops, right? That's a big punch. That's like getting hit in the rib and you lose and you got the wind knocked out of you. Till you come to an agreement, it's like a little bit of a breather. So pretty clear there's no agreement just yet. And until we get one, I expect the market to do this. And they may show them. And again, the other side to this is that I've said this before. They use this time to their advantage, which is free press. They have free press right now. Absolutely, bro. Absolutely. That's a good way to put it. That's a beautiful way to put it. It really is. So let's go into some of the trades. We were watching Tesla yesterday. We made a nice trade on Tesla. Oh, yeah. So I'm gonna put that video out later tonight if you guys want to watch it later. And then I'll do the watch list. Yesterday I didn't do the watch list because I was just doing some personal things. And it bugged me. I actually was tired, and I'm like, you know what? Let's just go do it. In the times of being tired, this is when you got to do it. But I was like, we had a slow day, and there wasn't really much to talk about, right? There really wasn't much to talk about. There was no new news. So, and I felt like I couldn't provide much benefit. So I'm gonna watch Tesla again. I'm going to be watching Tesla. What am I going to watch with Tesla? I'm going to watch that. I'm going to watch this level here, right? 243. I want to see if we break 243 and we turn it into resistance. I was saying from the beginning, I think Tesla has the most room, along with like Google, if we go to the downside. Like your semiconductors, AMD and Nvidia, are already oversold. That doesn't mean they can't continue to the downside. We did bounce off the 100-day. So if we break yesterday's open on Tesla, which is 243.50, 243.42, which is also an area of support, this is the level I'm going to be watching. 243, it's like 243.25, 243 like 30 in that area. All right. And then I'm going to look to see if we can break yesterday's, which we are. On the daily chart, we are back down here wait, let's see where it opened. We pulled back. Let me see. This is why I want to have that on my... Oh, awesome, man. Yeah, good luck on that soccer match. Yep, go have fun, bro. I appreciate you stopping by. Appreciate you, buddy. If you could, give me a like, man. Hit me a like. And enjoy your soccer match. You have a good rest of your night. It's always good to see you, buddy. And I hope all is well, bro. So we opened, and then we close. Oh, awesome, man. I figured you already did. I didn't even need to say that. I know you guys look out, and I appreciate it. You have a great rest of your day, buddy. All right, so we opened, guys. So we opened, and we sold off immediately. And we pulled it back. So we are still sitting at open on the daily chart. Let's look at this. I got to hurry up because we got 10 minutes. I know I got to do better. I got to do better. So we're still sitting here. This is going to be the level that we watch to break. If we do break this level, I will look to get some downside and see if we can't get Tesla back down to 238. So I'm going to look for Tesla, right? So if I write down Tesla, which I already have it written down, and I say 243 breaks, 243 area, 243 breaks, we're going to look to take it back down to the 100-day moving average. We're going to look to take it back down to 238. Which isn't much, but it's a few dollars, right? It's a few dollars. Yeah, it's like 239. It's not that big. 239, 239.75. And then obviously we break there. Hello, 228. Let's see. It's... Yeah, that is a nice area of boom, boom. Yeah, we could go to 228, 229, 228.50. So I'm going to write down 229, 228.50, 228.75 would be our final target on that. But you do have a range here that we're sitting in. So we could get upside. Again, we could get upside. The upside would be the upside of this range here. And that would be your 50-day moving average. Upside is 50-day moving average. So I'm reading upside 50-day. If we can get there. You have some minor resistance at 248.50. 248.60. All right. 248.60. See that? Pretty clear range. This you do have a little minor area right here at 245 that we made resistance. So again, we can still bounce. We can still, this market opens up, we go to the upside, and I'm going to watch. I'm going to be watching and see where it is that we can no longer continue to the upside. And I'll watch this turquoise pink, or this turquoise dotted line, which I'm going to make a 2, is Friday's close. So that's where I want to see if we struggle or not struggle. Okay, and there's that dotted line there. So that's our area of resistance that we're going to watch in the median term. All right, in the median term, it was pre-market resistance. I got to figure out why my stuff isn't working, so I do apologize. If you guys have any questions, throw them in the chat. If you guys have any type of hate, bring me all the hate. Play a hater's ball, anything. All right. The things on. So if you guys don't know, Microsoft has their thing with Europe and like the Take-Two deal, like that deal with whoever it is that they're doing it. That's coming up here in October. So you might start hearing some news with Microsoft. Keep that in your mind. Just getting my stuff ready here. I'm gonna throw up Tesla. Give me the SPY. We gotta make this a little bit bigger. That's what she said. Sorry if it's too big. That's what he said. That's what I said. I mean, let's see here. Damn it. Look, they're taking the trade from us. Fucking assholes, man. They do this shit all the time. They do it all the time. They sell it off right before the market opens, man. It's such bullshit, man. They do it every fucking time. So what do? We're going to look for a bounce. No big deal. It's all good. They do this shit all the time. It pisses me off. I should have got short yesterday afternoon. Like, right at close, I should have just, like, had my finger on the trigger. All studies, give me... No, I don't want mad 8. What? What is going on here? All studies. There it is. MACD. Let's see here. Add studies. Alright, give me time and sale. Give me level 2. That's still a lower high. Oh my god. Look what it did, guys. It took away all my moving averages. Oh my god. You gotta be kidding me, man. This is what I hate about Thinkorswim. What the fuck? fuck. So I gotta do this shit again. And then we are going to appearance. Alright. Unbelievable. So you see how we got some support there, team. So what I'm going to look for, like on Tesla, and maybe right out the gate with a lot of these moves, is a bounce. I want to look for a bounce. You'll have to watch and see what the Qs are doing. Alright, so there is your resistance. It's like a double. Good luck today, guys. If you guys have any questions, just hit me up. So there we go. This was our opening price on Monday. Right there at 243. Alright, that's where we opened. 243.39. 243.39, and where are we? 243. 240 high four, just like 243 flat. So again, where's our downside target? It would be down by 228 or so. Remember this area there, all right? Remember this circle that I have here. Just see if yesterday's low gets broken. Watch if yesterday's low gets broken, because if it does, bye-bye. And you better know where your targets are. You know, find where's your support. You got to know these things. You know, if I think we can sit here and find support. I want to see if we can get a bounce off of this area, but we may not find the bounce till we suck a little bit more out of this market. Send a little more fear. Again, there's some, you know, big business is getting put on halt. So, all right, guys. 1 minute. Let's go. Let's kill it. We're killers. Let's do it. If you guys have any trades, throw them in the chat. Any ideas, throw them in the chat. That's what we're all here to do. We're all here to help each other make some damn money and manage risk. This screen's frozen, isn't it? Where's Tesla at? It just picked up. That's nerve-wracking. That I don't like that. And there's our bounce. What did I say? There's our bounce. Let's go. Let's go, guys. Let's do this. Let's do it. Stay focused. Stay focused. What's the number? 243. 243 broke. That was my level, was 243. This was a clear look at it tapping into it, making it resistance. Give me Tesla. Let me see here. Okay, so there's a break above it. There's your break above it. Into pivot low. Again, this could be still considered a lower high. We just got to be patient and figure out the pattern. Like we gotta that was a clear break. It's flirting with this area. So as you guys can see, it's definitely the area, and brutal. So what I do now is I would wait for a bounce back. Hopefully we get a bounce back. If we don't, we don't. Man, look at the extension, guys. Shit. Where's yesterday's low? Okay, so there's our 100-day. That's where we're going. Looks like we're going back to the 100-day moving average. Shit. I'm being patient, guys. I'm being patient. I think Apple's going to the downside too. I would like to get Tesla. If I want to be short Tesla, I want to be short up here at 244.75 if we get it. That's going to tell me, because that's going to make my risk to reward best. All right, 244.75. 244.75, 244.68. If we continue to make that a resistance area. Right here at this line. That's my level. Man, it's still struggling, but it's wicking about. I feel like we're going to hold it. There you go. Go ahead and rip. Now the shorts know they're done. We're going up here. They know. There you go. Run it up. Run it up. Nice. There goes the market. So I'm keeping both trades in mind, the short and the long. The SPY, if we go to the upside, I expect us to get back to 430. I expect you to get back up to 430. If you do find any upside today. My target for the SPY again would be 430. Let's see how we do here, guys. 244.75. It's getting a little wicky up there. It's a low look so far, a low volume bounce. Whoa, whoa, I took it. Oh shit. I took it. I'm in that Tesla trade. Oh man. Shit. Shit. That's okay. I'm not down bad at all. What's my entry? Oh yeah, so I'm green. 109, 108. No, I didn't mean to do that. No, 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 no. Oh no, no. I did not mean to sell it. No, I sold it. No, no. Honest mistake. Honest mistake. Oh, shit. It's all good. It's all good. Ah, shit. Damn it. Damn it. Damn it. I was wanting to hold it for a pullback. I get a pullback down here to 243, 244. It's a wrap. I got those things cheap. SPY is struggling, guys. SPY is struggling right now. And Tesla's trying to hold it. Tesla's trying to hold. Oh, shit. That's brutal. Right? That's brutal. And I feel like she's going to... This is... Man. I was trying to get the order up just to have it so that I could... Hey, I mean, you know... Not perfect. I mean, I am perfect. Fucking best day trader there is. That's not. It's not fooling me. It's not fooling me. Damn it. That's brutal. A little frustrated with that. So again, I think the SPY, if it's able to break above this level, which is kind of just struggling, right? Do you see how the market feels heavy? The S&Ps feel pretty heavy. We get above this 429.60, 429.58. I would look for a push back to 430. Like I said, pre-market. Let's see if we push back to 430. If we can get above this level, it just feels really heavy. And there's Tesla just still sitting there. 430 is the middleman. 430 is your middleman. Tesla. Oh my God, I can't believe I did that, guys. I cannot believe I did that. Like, I can't believe I did that. I did not mean to sell Tesla. I got a really good entry price on that. I wanted to hold that for a minute. So it is just sitting up here. It is holding it as resistance. What I would do is, let me see. You're starting to just flag here. Let's see. See, and things have a way of. I don't trust that move. Just so y'all know, I would not trust that move just yet. That volume didn't move at all one bit. It either did, which I don't think it did. You had a nice MACD crossover, but that volume was pretty pitiful. But you got some consistency here. You do have some consistency here. I don't know why I can't talk today. Let me scan around real quick and see what's going on in the markets. It is time to be patient. Watch Tesla go higher. This is where people would start buying. If they're going to sell it off, they're going to do it here. This is going to be a failed hold above this double top pre-market double top. Look at the orders coming in there. 245.90. 96. There you go. 246. There was the bids are jumping up. Bids are jumping up, or were. Now it's changed a bit. Let's see. Let's see us get back up there. 90, 93, 97. There she goes. Come on. 13, 16. Damn. It's 940. It's 940. I still like the short too. You bastard. You see what it... Of course, let me not open my mouth again.
More highs now, 36.70 up 78%. India Michael Victor Tango.
Automakers who say, yeah, maybe it's time to take a pause on buybacks and give some of that back to labor.
Well, look, I think that I don't think management's SLNO trading. Big increases. It's true that the union hasn't had big raises in a long time, but I thought that President Biden would have been. Here's what I thought Biden would do. their way for some of this. But let's get people moving. Let's get people working again.
This
What I thought the president
Tesla does have a bit of momentum with it. It does.
will never be defeated.
It's got a bit of momentum with it.
What we used to do. Very upset about this. I am because we have a chance to have the GDP to get crushed by this. Well, maybe that would at an incredibly important moment of transition for these companies. Well, that's what's there was about EVs.
And there you go. So we got up to like yesterday's close.
Employs a lot of people and his factories. Of course, he opens in other places outside the U.S. as well. He's a big. That's pretty good. He's a huge winner in this. It's worked out pretty well. He's huge. By the way, kind of brought manufacturing back.
No way. There's no way. I could have just got that for 25 cents. Dude.
Now some of his exports out of China getting probed by the EU on some subsidies.
Oh my gosh.
Are we going to keep the 27% tariff on the Chinese? I asked Secretary Mondo that from Commerce. It's not clear, but if we get rid of that,
So this is your clear level. This is a clear level here. How you guys doing today? How you guys doing? You guys fired up? What's up? What are you guys watching? What's on the list? Yesterday, JP Morgan had a really nice day. I said it during chat. I briefly said it, and I kind of got over it. Looks like NVIDIA wants to pull back also, guys. NVIDIA looks like it's wanting to start pulling itself back.
I don't even look. I had Nucor on this, but I don't trust Chinese steel. By the way, how's that? By the way, it's in a lot of bridges. You better trust it. Yeah, a lot of U.S. bridges. I stood against that. And not only that, yes, I stood against that. But Evergrande, how's that doing? $30 billion deal.
The Chinese again always under a veil of secrecy. I think we're going to talk to you about that later.
I think what's interesting is when we have two senior managers, what happens? Let's talk about two different countries. I got some stuff. When a CEO screws up in our country, what happens? Are they detained?
All right. Dude, so the spy's still sitting here. This is you're gonna get longs to eventually give up. Something's got to give here. Let me see what data we have. I know we have some housing data. And I don't know whether I should just leave Tesla alone and let it go. Where's my 9 EMA? Oh, it's up there. That's so weird.
Guys, I want to try to explain the serious Liberty situation. I'll probably fail to do that. You can't. Everything associated with Sirius, with Liberty, is typically complex. But, for a lot, we have this tracking stock because they own most of Sirius, remember? In fact, they hold 3.2 billion shares of Sirius. They have 327 million of the
It said I see people.
outstanding shares of the tracker. So that works out to 9.8 Siri per LSXM. There it is. The A, look at the K as well, if we can. They're using a 1.05 ratio here. A 1.05 overall gets you to 10.3 ratio. That's what we're talking about. If you're a Siri holder, what are you getting is what you're asking me here, and I'm trying to explain it. You're going to get one share of the new company and 50.
I wonder if anybody's just sitting there trying to short Tesla.
That's not as much as if you're a holder of the tracker, right? This is together here. That's what the whole idea is. This spread
I think Rivian's also another one, team. Rivian's on its way up. That's a blasting off, guys. Shit. I missed that one. Brutal. That's why Tesla is doing what it's doing. Where would we look to get this? Let's see here. That looks like a break. It's a nice level right there. Nice level of resistance, which is making support. The next resistance level would be up at $23.
1.05, 10.3 ratio, LX 2.1 billion of debt gets you to that 55.
Looks like the SPY is actually starting to roll over, guys. Look at the pattern that it's putting in. It's like starting to top and starting to top itself up and over. It's a personal opinion here. 50-day moving average is up at 23.27. Boom. For Rivian. You might get a blast off though from the S&Ps, but it's really consistent. It's like you can tell it's algorithms just orderly. Like those candles are the same length in and out, but just the closing and an opening price is making it like a U.
So it's sometimes deviated from the underlying fundamentals. It's good for yeah. But again, we'll see if it gets approved. They tried once before, but it didn't get an offer.
As we go to break, let's get a look at the bonds. As we said earlier, overnight, 10-year 456 has come back a bit. Busy day today, 48 billion in 2-year auctions. We'll get new homes in a few minutes, moment later on tonight. Right now, 10-year right around 453.
Yeah, we're going down. So that was something I was looking for in the Qs was like 357.57, right? You can see that 357.50 area was, pretty much your resistance. There. If the Qs hold here, guys, I'm looking for 358 to the upside. 358. If we don't break to a new low here on the Qs, I want to look for 358. Yeah, 358 if the Qs don't break. Come on, I'm going to take advantage of today. Let's get it.
Municipal bonds don't usually get the media coverage the stock market does. In fact, most people don't find them all that exciting.
FSR Fisker shares hitting $5.99, up 12% after the company announcing a ramp up.
Municipal bonds from Henyon and Walsh. If you have at least $10,000 to invest,
After 300 vehicles per day delivered. That's Foxtrot Sandy Run.
Sorry, guys. So this is the area I'm watching for, 358. 358. I think we can do it. I really do. I think we can do it. Fucking Tesla, man. See, that's where I would have loved to have taken profits. Those are now... they're still down just a hair. Now they're not. Now they're not. Shit. Sheet. Fuck. Oh my goodness. So it looks like Tesla's going to separate itself from the rest of the market with Rivian. Oh my gosh. So the Q's broke. Oh my god. What's Nvidia doing? Because Rivian's going. I just... Fuck, man. It's just hard for me to get back in these when I was already in them so cheap. We're fucking winners. We're fucking winners. Let's do this. And where's the 200-day the 100-day moving average for Tesla? It's still down here at 238. It's still trying to bounce. You see how Tesla is still above the opening price? That's fighting the trend. Right? You're fight. There you go, Google. Google was the one. I fucking knew it, man. I forgot about it earlier. But it came back to me. It came back to me. Shit.
WISH Context Logic shares at the highs now, with Whiskey India Sandy Hotel up
Damn it.
0.25%. WISH
Brutal. This is a pretty bullish sign for the coming days, though. Right? We really have we have bullish divergence here. You're really starting to get that bullish divergence, guys. So hang tight. Hang tight, especially on Google. Look at your RSI and MACD. You're still putting in new lows while they are still up higher by putting in, you know, higher lows. So how do you spot trend reversals? Right there. That's the start of finding trend reversals. 129.80. 129.80. This could get ugly in the same breath. I had the fish on the pole. Had the fish on the pole. Pretty accidental part on my end. So Tesla is...
Low price stock with very heavy volume now, up 31%. Alpha Victor Tango X-ray, below 30.
I just want to short bet. I just want to short Tesla. I don't know why. I have no idea why I want to short it. It's the strongest of all of them. You gotta be fucking kidding me. You gotta be kidding me. Okay. So that's it. So there we go. So we have not broken into a new low. Can we get a quick reversal here? So I'm looking at the Qs and it's not as bad as I think. But it's getting ready to be because look at the volume.
Where they're talking about demand remain strong, margins improving, building the brand through growing showroom presence. They're using a $30 price targets at 21. This is just one unbelievably positive note. So
See if we get a bounce here. See if we can get a bounce.
that's doing well. That's the point you're in. Yeah, it's very interesting.
Man, you gotta be shitting me.
One thing we didn't get to,
You gotta be shitting me.
underperformance of Apple, one of the worst down names, even despite some of these lead times, at least for the basic iPhone 15.
Long lines are out for Apple.
So I'm still seeing an even amount of buying running through here on Tesla, guys. So I'm gonna be patient on that. I'm being patient on Tesla, guys. They are stepping in up here. And look. I don't know if you guys can see time in sales or not, but the market's just going, man. Fuck! Why did I not? I mean, we still haven't made a lower high or a lower low in the S&Ps. I think you are on the Qs. We're just falling out of bed. I sensed it. I sensed it this morning. Just watch these tails. See if it can start lifting itself up and whatnot. You just got to be patient. It's frustrating. That's trading. Right? That is trading. I mean, those options are still pretty much where I bought them, and they're at a lower price. So I don't feel bad that I got out of those. I didn't personally get out of those. I accidentally got out of those with a profit. So right, you see how it's just holding? SPY kind of just holding. It's a pretty nice resistance level there. This was the original level we were watching at 244. So that's why it's strong. So you got to watch. I sensed that there were some buyers in here. I felt that there were more buyers than sellers because it's struggling here though. This is your level. Sorry to cuss too, guys. Yeah, we agree. I'll just give you this money.
The settlement ends a bruising episode in which each side accused the other of enabling Jeffrey Epstein's abuses and led to a series of embarrassing disclosures of relationships that high-ranking bank officials at the time had with Epstein himself, including one.
There it goes. What I tell you guys, right? This is what I tell you. Tesla seems like it's got some strength. There it goes. Man, this fucking chat, man. And I do apologize this morning. I completely forgot to throw this on the studio so that there's like hardly no lag. No, I'm actually thinking about a long. I want to see if this market can turn around. We had some data that just came out. I took Tesla short and got out of that for a small profit by accident. It was a good thing. I did a little too much clicking. So the spirits just took me out of that trade. And that's why, though, there's an upgrade. There's an analyst upgrade on Tesla, and that's why it's got relative strength. So I'm glad that happened. So new home sales month over month, negative 8.7. That's well below forecast. That's what we want to see. That's what the Fed wants to see. New home sales, 675 million. Versus 0.7. That's under. Richmond Fed manufacturing a 7, a positive 7. New home sales month over month. Okay, down 8%. Consumer confidence 103 versus 105. That's good. Yup, it is the weakest. So there's Rick Santelli. But yes, there will be here in 1 second. I want to see what this market's going to do. Right? I want to know, are we going to break this low today? We're kind of just sitting here. Like, I want to short Tesla, but I need the market behind my back. I missed Google. I missed Google and Microsoft. They were the weak ones. If we get a bounce back and we can get some continuation, I'd look for a bounce back to 130 area. to get short. Rivian, if you don't know, has monster strength, or did. It's throwing in some tails now, but it was ripping off the bell. So I will be making a play here at it's 10 o'clock now. Let's see what happens. That's a nice little double bottom on Meta. It's below its 50-day moving average. Let me actually. Damn, I feel bad for them. Whoever's bringing in that chalk over there. Let's see here, guys. It's a little frustrating morning for me, but it's not frustrating because the Spirit saved me money. And like I said, I don't know if I said it or not. You can just make sure that the stream is forward because I accidentally did not put it on the studio like I said I was going to do. I did everything on YouTube and already made it and sent it and got the stream key. And then I was like, shit, I want to do it in the studio so there's no lag. I don't want no lag. I don't think there's that much of a lag. I'm not sure. But let me see. Yeah, there's hardly no lag. There's literally like no lag. It's like maybe a second. Maybe a second. What are you guys watching? And how are you guys doing? First, more importantly, how are you guys doing? Here we go. There's a new low. That's it. So now it's on. Now it's on. I was being careful. I was being careful in case we did not put in a lower low. But we're putting in a new lower low. I said it this morning. I'm like, man, this area, if it becomes resistance at 430, we didn't get there during market hours. I thought we could bounce to it again. And I sensed that we were rolling it over. But these assholes take the trades right as the market goes to open. Every day they've been taking I mean, it's not just, they've been doing it for a while, like the sell-offs. Like look at Tesla right before the bell. They just sent it. Right? They just sent it. All right. So look at Tesla holding up, guys. That's all right. So look at that. Look at the spies. I think that was it. Look, they just came in and bought the dip. Possibly. Look at that tail, guys. That's a huge tail. I think I'm gonna go take a look. Tesla still got some long. Look at those the volume for Tesla. I know it's got the RSI and stuff a bit higher. Hold on. It's gonna be a tough trading day. Just gonna be honest. It's gonna be a tough trading day. Let's see, Chris, what you got for us? Rivian, yup. Well, let's see if this market turns itself around. If that tail means anything, it's a possibility. That's good. That's awesome, bro. I heard it, and I didn't pay it no mind until I noticed how strong Tesla was. And I was like, hey, let me go look and see what's going on with Rivian, because I know there's something there to keep Tesla up like it was. Market was pulling back, and Tesla was still hanging up at yesterday's close. So here would be my trade is if we do get up above this 245.81-ish level and we can pull back to it and hold it. Right? I would like to see if we can start marching up to that 50-day moving average, but if the SPY and Qs are going to continue to sell off, it's going to be pretty hard. I just had I just had 50 contracts, right? At 30 cents. And I said, let me see if I can get a bounce, like, just let me get a little bounce. And I'm going to jump in those. And now they're at 41 cents. Like, it's pretty clear what the sentiment is right now. And it's still continuing. You do so. There you go. But look, those buyers that were there, bang, still red. Just sell, 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 sell. Meta's holding up nice. Tesla's holding up nice. Looks like Meta just broke, man. Why is it like so? It's hard now. They're up to 44 cents. Fuck. Now that's fucking 600, 700, $750 right there. Fuck. I just need a bounce. Please, just give me a bounce. I wish these sellers would step away, but they're not. This is going to continue all day, guys. I would have got in at the right time. I tried to grab 425. I tried to grab 50 contracts of the 425, and I was trying to get a bounce. And it kind of just fell out of bed on me. It was this candle right here. I was trying to get a little push up into that 9 EMA, and then I was gonna hit it because it's pretty clear what the trend is. But you have a few holding up. You have a few holding up. Meta, Tesla. Why it like why are they not going down? They might start now, but look at Microsoft getting murdered. You gotta be fucking kidding me, guys. I had this feeling that today was the day. I could seriously just fucking throw this fucking mouse right through this monitor. I really could. Why was I so keen on watching Tesla? Um, so we are down 1.25%. So expect a bounce. Right, you should naturally expect somewhat of a bounce here. Um, may not. Like I said, this is pretty serious. They're not. There's no deal. There's no deal. Hello 420. You might even say hello 415. When we gave back what we did yesterday, I said this morning, watch out. So AMD is still hanging out. Why? Like, you do have some of these names that are still not selling off just yet. They're putting up a fight. Like look at that buying going on Tesla. Time of sales is still green as hell. You had some sellers step right in there, right at this line. You just saw some sellers step in there, but it's met with a bunch of buying. That's consistent. The selling isn't as consistent. So my thought is, if this market bounces at all, you're going to see Tesla, AMD, Meta. You're going to see those names fare better than most. The thing is we got to capture and understand when we're sensing days like this. I sensed it this morning, right? They took it away a little bit pre-market. I was wanting to see if we were going to turn, because we did it pre-market. Now looking at this, we did it pre-market. This white line is Friday's close. We got up above it on that weekly candle. We got up above it. We hung out up there, couldn't hold it and climb higher. It finally broke. So I was wanting to look for the retest and get my entry up at 430 for the short. That was my game plan that I went over this morning. See if we can bounce back to 430 and then take it short. Nope, they gotta just, sometimes it's not on your terms, it's not in your area. So look at time and sales. It's a little more green than it was, right? The selling is starting to die out. See if you get a bounce. Like I said, we're 1.25%, 1.17 on the lows. See if we can get a bounce. I'm really upset that those 30-cent contracts are at 45 cents right now. That's a killer day, man. I mean, that's 100,000 a year, but just, a little over. Oh my God, motherfuck. Let's see if Meta can turn that into resistance. Meta has no momentum, so I'm not even looking at Meta. There's no momentum there. I gotta use the restroom. I'll be right back. Market bounces and now Tesla doesn't want to show the fuck up. Come on, cuz. Show up. Let's go. You're supposed to be strong, right?
Supply faster is a job loss recession. I think in the back of the Fed's mind, if that occurs, maybe they could alleviate some of the pricing pressure. But remember, the growth rate of home prices are very slow now, so I don't think it's to their interest.
Here it goes. It should bounce. Looks like you're putting in a nice pennant. Let's see if Tesla puts in like a little high there or something.
The whole foreclosure story is 9 to 18 months away from the first few months that we lose jobs. So that's not going to help them anytime soon.
But the discount in prices, or I should say the closing of that discount being less than last year, that's just a function of not enough homes being sold.
Not enough homes and stable demand.
See, I still can't even get those 50 contracts because it's at 38 cents. I'm not paying it. I can't do it. The move was made. I would love to take a short right there, but I can't. Can't do it. And I don't think anybody else is, too. I want to know where Mike's at. Mike, where you at, bro? This is why you should short. This is why, because shorting keeps the market honest. Shorting keeps the market honest. Just give me a bounce back. It's not going to. The momentum's to the downside. We're up 1.12% day. We might put in a 2% day, man. Let's see here. Let me go to the 4-hour chart. Why does it seem like we didn't sell off that much?
If you list your homes, majority of the times you're qualified to buy a home, and right now with affordability at all-time lows,
Feels like we haven't sold off that much. It's only because of where we closed at yesterday is why.
and to me, a job loss recession creates forced equity sellers.
I want to buy calls so bad right here. I do. I want to buy calls so bad.
One last thing, Ardana, I want to ask you a question about adjustable rate demand.
I'm going to sit here and watch Tesla for a little bit. And
That's a signal that consumers don't believe there will be meaningful relief in the years ahead. Adjustable rates loans are not like what it used to be, so the demand you might see is
there's nothing. Fucking nothing. Fucking nothing. Big nothing burger.
we're never going to see any growth in adjustable loans. The qualification processes are much different, and it's not the loans that we saw from 1996 to 2005. So to me, it's just a traditional 30-year fix. We're working off the 10-year yield. That's the main story for housing.
That's great. Hot stove has been touched.
I'm going to put out some more limit orders for TLT.
See you soon.
Speaking of housing, next hour we're going to continue the conversation with the CEO of real estate firm Redfin. That's coming up at 11 a.m. And as we have a break, watch shares of Fisker today. The EV maker planning to ramp up deliveries of its Ocean model to 300 per day. Bank of America also reinstating coverage of the stock with a buy, saying it has a lower risk business model than its peers. Shares are rallying 14.5%, above $6. Keep in mind this was a $30 stock back in 2021. We'll be right back. Hi, it's Christina again. I'm here to tell you about an all-new special offer from my friends at Jacuzzi Bath Remodel that you don't want to miss. You already know, Jacuzzi has been making water-filled drains for more than 65 years, and now they're bringing you this specialty offer.
I think I might get ahead of this move and look at Meta, Tesla, and throw something on there. So there's Tesla getting up into that area. There's the reversal. Can Tesla break out? Look, as soon as I go to turn away from Tesla, it goes. So let me not turn away from it.
It is done in the same day. You did not have to wait.
It's absolutely perfect. It's
That's green, boys. That's green. As far as the eye can see. A little mix in that area. Probably get a pullback. Yep. It's 50-50 right there. There they go. The seller's just trying to come in. Where the buyer's at? Come on. It's so 50-50 right here. That's why it's stuck. That's pretty crazy, actually. There you go. There you go. Buyers got it. There's back in. Let's go. Buyers are back in the game. Go, 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 go. Look, you see how it's green? See how green this is? Sellers are like, okay, let's try. Nope. Sellers are in control, or buyers are in control right now. See that? How long can they last, though? How long can they drive this thing up? Ooh, there was a big order through there. Big numbers through there. Did you see that? On the sell side? I don't know if you guys can see it or not, but buyers are there. They were not doing this just 20 minutes ago, so I'd look for some upside.
Join CNBC's Financial Advisor Summit. Hear from advisors and market experts on buying opportunities and generating consistent
All right, so
returns.
there's Tesla. Remove that.
CNBCevents.com/.
Welcome back to Squawk
Dallas
Street.
Fed Texas Services Sector Revenue Index 8.7 in September versus 16.2 in August.
As well. So we're
Dallas Fed
negative on the
Texas
week.
Services
And if you
Sector
look at the
Index of
breakdown
General
by
Business
sector there,
Activity
the
minus
S&P,
8.6
everybody's weaker
versus
right now. The hardest hit,
minus
communication
2.7 in
services,
August.
consumer discretion.
Nice, Chris. Nice. I wasn't sure if you guys were here or not, so that's why I wasn't talking. But it looks like this is the thing about bear markets, man. The volatility. We get big moves back and forth.
Here since 2016. Meanwhile, the broader
Funny how I said I wanted to grab some calls down there, and then it does decide to reverse.
1999. And it's surprising because
All right, so Meta did break. I might look at Meta, guys, and see if.
people need healthcare no matter
Let me see here. I know they're going to be expensive.
pharmaceutical companies are under pressure from Washington.
Study evaluating
There's a
its
new
treatment
drug
for
price
glioma.
law.
Shit.
And also the looming
That is
election
BFRG.
season isn't helping because politicians love to beat up on pharmaceutical
Oh,
companies.
come on, really?
Meanwhile, smaller biotech companies
That's
are
crazy.
less
Oh, hell no. There's no way.
pressure.
Yo, they want for.
Service providers like Danaher
Come on. There's no way. Well, how are you going to charge $5 for a $300 call?
seeing a big gain.
That's crazy. No way. There's no way.
Up about 50%
Hell no.
ahead of the expected approval of its obesity drug.
There's no way.
Just a sea change in the business.
Even getting a 305, right? That's 285. That's almost $3. So you're talking 6, 7, 8 break even. You got to get here by Friday for your break even price. There's no way. So if you're a seller, I would sell Meta. I would sell Meta, guys. I would. I mean, you do have a when it gets going, it gets going. But I can't trust that it's going to get going with the SPY selling off like that. So if you guys ever have issues trying to find out whether or not an option price is expensive or not, that's the basic, easy way to do it. You're paying. They want. Well, it was for a 305. It was 380. Now it's 375. You see how quick they're dying? Look, 360 bid, 370 bid. You know what I mean? Be a seller. This is a perfect thing to sell. You know, it could go up on you, but or 270. I'm sorry. Yeah, 281. 281 now. For 305 call. So that means you got to get to 308. 308 80, right? Well, no, that would just be 308. So 308 would be your break-even price. So you got to get there and then hope to get to 309, 310. It's not a good deal. Not a good deal at all. So we're going to keep it moving. If we find some momentum, maybe, by tomorrow, those options are going to be trash. I'm going to look at Rivian also with Chris.
PK Corporation getting a positive high on some volume, small volume.
There it goes. Watch those tails, though. You could start to get something here. You really could. Yeah, this area might be. You gotta hold. I feel like you gotta hold that area, and you didn't.
Is that what this is? Yep, it's ransomware and it's holding your systems and business hostage. So what do I do now? Don't worry, Rhythm can help with that. We'll eliminate the threat, secure your
I would watch 2343. 2343, but I still think that
Shares of Nvidia popping here to the highs 426.83. AMC.
Chris, you may have some resistance there, buddy, but it's still, that don't, you know what I mean? That's definitely never mind. I'm sorry. 2287. 2287 was the area I was looking at. And even right here, there's resistance there, resistance there. See what happens. You do got the volume to back it up. Good luck, man. Good luck on that. Pretty heavy selling there. So this is a lesson that I go over all the time. Do you know what this lesson is? If you're even still here, you just broke out to a new high and immediately rejected it. That tells you, let's see if it can take it back. But usually, see, Rivian's different because Rivian's not like it's not like a small cap, right? It's not easily influenced as others are, right? So it's a little bit different. You are holding the closing and opening prices there. If you get buyers here, this is where you want to see buying start stepping in. If you don't see a break off of this level and you see it break down, I would watch. I'd be careful. That's just saying what I would do. I would watch to see, because they're going to have orders sitting right here at this 9 EMA. And you broke up, you're pulling it back. See if you can hold this area. And bang, you should start getting orders there. You know what I mean? There should be a ton of orders sitting right around this area. There should be orders all in there to buy. Dude. Look at Nvidia, guys. Nvidia blasted off. Nvidia blasted off. Tesla, guys. There goes Tesla. Tesla's going. I should have just taken it for the break. Let's see if we can get a pullback on Tesla. It's probably not going to.
Sorry, we're just having some fun. He's a great sport about it. But FEM will
SLNO, Panther out with a note raising price target.
Snow has a price target raise.
I think it's going to be a
SNO.
$19 to $35. That's
Or
Sandy, Lima, November, Oscar.
never mind. Different snow. Different snow, guys. Sorry.
Does that simply mean that Apple, Alphabet, the Metas of the world are going to kind of tread water, if not go down?
I think you just hit the nail on the head. We had a huge rally in 2023 with
Paul
some of the mega
Meeks.
tech names, and I think too many people thought it was driven only by AI. Maybe it was 20% the AI theme and how important that will be in the future, but 80% exactly what you said. Remember at the beginning of this year, the consensus view would be you're going to have a recession this year, and that would lead to a pivot in rates, all before December 31, 2023. Now we might be able to skirt through in 2024 without a recession at all. And of course, we will have a pivot next year, but it'll be more subdued and pushed later in the year. And these tech stocks and other aggressive growth stocks really crave low and falling rates. And of course, that thesis has been pushed out quite a bit. So you've had stocks like Nvidia, fundamentals, sterling, but up a triple through the first half of this year. Of course, they're going to continue to consolidate, might even drop further. But I think the fundamentals of some select names are great, and it's not a fundamental issue. It's just take a look at the price chart and see what they settle, and then get ready to buy.
Well, you mentioned AI. We looked at all of your top picks, but the top five: Nvidia, Alphabet, Microsoft, AMD, Amazon. I mean, they are all right in that sweet spot in terms of investors who want to look for exposure to AI. So, how important is that? How much of a growth driver will that be, and why are these your top picks?
All right.
So Nvidia, for example, is probably
That's a low volume bounce back, guys, on the SPY.
a true benefit
Be careful.
because they're powering
Be careful.
the learning of the large language models.
I still feel like they got some bullets left.
Over the last couple of months is everybody talked about it early in 2023, but unfortunately for most companies, unless you're training the models, then maybe get into inference after that, AI is going to be further down the road. But I do think it's going to be a big deal. You lead with AMD and you lead with Nvidia, powering those models. And I do think that the other players, the Microsofts, the Amazons, the Googles,
Do we think Tesla holds and goes higher from here?
What about the fundamental question of regulatory action and charges from the government? We just heard from Steve Kovac on Apple, Amazon facing a decision. Are you not worried? I saw those are both in your top picks.
Yeah, so Apple is not. I think Apple is just, unfortunately, too slow growth to pique my interest. If you're a tech investor like me, you always have to have a core position of Apple, but you trade around it, but I'm underweight now. Amazon, I do.
All right, looks like AMD could get a bounce here.
Charges will be brought. It'll be a big splash in the headlines. That's coming soon. That's well telegraphed. But I probably would hold off on Amazon and at least wait till we
Come on, AMD.
see announcement pipeline. But man, I really like what they did last quarter.
Come on, 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 come on.
Growth in AWS, which is their profit driver, and even with all the cost cutting in the last year, they'll start to see a little bit of resurgence in profitability in their
Yeah, that's a farther drop than I would like to see on AMD.
announcement. Not an Apple fan right now.
Finally, Paul, you're old enough to remember, of course, the advent of the internet, or at least the excitement around it in the mid to late 90s, certainly reflected in stock prices during that period. How do you put
Man, the volume's low on AMD. It might go.
so to speak,
I'm not too convinced on this move here. I got to do some more digging on AMD.
House Speaker McCarthy said the House to vote on GOP stopgap measures.
Even if they were not even tech companies at all.
Okay, they're supposed to vote on it this week. Okay, that's all you've been saying, bro.
Earlier than this year,
That's all you've been saying.
we reported the second quarter results, and we'll begin to report third quarter results in a few weeks. You see some companies that will probably give up the ghost a little bit because they talked about AI, but they didn't show Nvidia anything in their financial model just yet. So they are similar, and that's why I was a little bit worried and reticent to jump on the bandwagon as some of these stocks were flying higher earlier in 2023.
Paul, always appreciate it. Thank you.
Best wishes.
JP Morgan settlement payment?
Carl, that's right. We're getting a little bit more new information here. We've got a statement now on JP Morgan's $75 billion settlement in the Jeffrey Epstein case from the U.S. Virgin Islands Attorney General Ariel Smith, who says this.
All right, I think I gotta take a short.
Meaningful anti-trafficking measures.
I think I gotta get short the SPY again,
Future, this settlement is an historic victory for survivors.
even if it doesn't work out.
Enforcement, and it should sound
Man, we're still down 0.8%.
responsibilities under the law to detect and prevent human trafficking. Now, the U.S. Virgin Islands say the commitments JP Morgan has agreed to include informing law enforcement when customers are identified as involved in human trafficking, terminating customers' accounts if JP Morgan has credible information it is engaged in trafficking activity, identifying and escalating clients associated with forced or child labor, trafficking, or slavery. And they say the settlement here is going to create a $10 million fund to provide mental health services for Jeffrey Epstein's survivors. But I want to clarify this because I just spoke to JP Morgan, who says that these commitments that were outlined in the press release of the USVI are previous and ongoing efforts. And these processes are not new. They were ongoing already. So there's already some dispute here about the specific new elements in the settlement today from both sides. And you get a sense that they're talking past each other a little bit as they release these dueling press releases this morning. That's back over to you.
Hey, we appreciate that. David Jabbers in D.C. this morning. We will take a quick break here with near 1% declines on the NASDAQ, the Russell 1000, and the S&P. Don't go away.
Hi, I'm Jason, and I've lost 202 pounds on Gola. I was 424 pounds, and my doctor was recommending weight loss surgery. To avoid the surgery, I had to make a change. So I decided to go with Gola.
I got some 425s.
Those are crazy.
Let me see if I can even get it for tomorrow.
She has no idea she's sitting on a gold mine. She doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell
Yeah, I got some 425s.
even a term policy. Even a term policy? Even a term?
Find out if you're sitting on a gold mine. Call Coventry Direct today.
There we go.
476.
Let's go.
Or visit CoventryDirect.com.
I gotta take a piece off there. I'm up 25%. Oh, you dickbag. No. No, man. It fucked me on my fill. Well, no, it didn't actually. I'm sorry. It didn't. It didn't. I apologize. It did not. So there you go with AMD. AMD looking like a tough level there.
Here's up 7% COSM.
Cosm.
What? There are no hidden fees. What you guys say?
Oh, take a pick. I thought you said
Did you know GoodRx can help you get a better price on your family's prescriptions?
What a whole asshole, man. Shit. They're up 50%, almost 50% right now. Shit. How did it get a difference there? That's like right where I sold it.
Prescription savings for the whole family. Another good reason to check GoodRx. This is the world's largest credit liquidity pool.
Credit liquidity pool.
$19 billion in daily accessible liquidity. $2.6 billion in price improvement with open trading. This is market access.
So what I'm looking at is the time and sales, guys. When we sold off at this level prior, that's what it looked like. What you just had right there. Now you have all this buying and stuff. You know, selling pressure seems to still be in control, but I can't pay 22 cents that I just picked up for 13 cents. Can't do it. I don't care how far it goes. I'm not averaging up. So, especially when the time and sales looks like that in level 2. So it's good to take notice of those things. Sorry, I didn't think anybody was here. Shit. Cosm is going too. If you didn't know that, I'm pretty sure it is. Let me fix this. Come on. Nice job, man. Yeah, it does. It's fairly strong. You're getting a lot of people that are just just going with it. I'm surprised it's still going with the market the way it is. But it is. That's a great job, man. It's awesome. And look, Tesla did go too. It's just one of those days. Man, that was a perfect entry on a SPY. Fuck.
Retiring well isn't a guarantee, it's a goal. It's easy when markets are going up. But what about when
I gotta do some serious soul searching.
for Fisher's retirement survival kit, featuring your guide to
I gotta do some serious soul searching.
stock market outlook plus the Fisher investment difference. 3
The day's not over with, but
free for calling 1-800-213-5317. Fisher Investments' disciplined approach will help see you through the market's ups and downs and give
look, that's some heavy selling, guys.
you a comfortable retirement. And our fees are structured so we do better when our clients do better. Call now for your free retirement
So everything is pretty much down. I mean, as far as ETFs, everything's pretty much down. Banks, healthcare, cyclical, defensive, technology.
Redfin CEO Glenn Kelman on the state of the housing market and the economic impact of the Fed's higher for longer rate vision. Squawk on the street till at Easter.
Moments like this, you're faced with an important question. If a ball lands in a cup and no one else sees it,
FSR. Was there any? Why do I know FSR? Fisker. That's right. So why are all these plays going up? Just because of the GM stuff? I guess. That's like I say. I got saved on Tesla when I got short. I got short, and it was bringing my order book up so that I had it there, and I clicked it twice by accident. And I was able to sell it with a bit of profit, which was thankfully it happened. I was really thinking because I didn't know that there was an upgrade on Tesla and stuff like that. I would love to take a long on Meta, but I can't at these prices. Maybe Wednesday into Thursday when options get a little bit cheaper, but I can't pay $3.05 for a 305 call. You know. Look at Amazon. Smoked. Look at the opportunity today. I could seriously jump off a bridge right now. This is the days that need to be taken advantage of. I felt it. I sensed it this morning. And that's why I tried going short off the bell. But I was in Tesla and I didn't know that it had a freaking downgrade or an upgrade.
precisely on the NASDAQ, which is much more sensitive to rising rates. This is a normal
So it's my own fault. It's my own fault. So thinking back, my head was in the right place to the downside. I was in the wrong name at the wrong time. If I was with not Meta, but if I was with Amazon, Google, Apple, Microsoft, anything other than the semiconductors and Tesla, I'd have had a great day. I'd have had a fucking banger day. Yes. Well, I did. I already did. I took that. I already took this, Chris. I took it off. I took that VWAP rejection. 13 cents to 20 some cents. Let me see. I I didn't get a nice price. Oh no, it was 13 cents to 17 cents.
The narrative that as strong
I already
as
took
economic
that.
data is right now, the concern will shift to a potential recession.
Yeah, I already took it.
Yet we will be watching that very.
I was already waiting for it. I'm like, you give me a test of VWAP. I got short up on this tail. Time and sales was really heavy on the sell side, and I'm like, there we go. There's our VWAP rejection. It was just, and those were for the 425 puts.
But a lot of them have been underweighted. The public, however,
I didn't go crazy on the size on those, so it wasn't that much money. Wasn't but 180 bucks.
lose his or her job. Those stocks are
If I'm doing quick math.
Months left in the year. You've got a target that now
Because I don't like when I'm in doing something like that, I don't just have it up on my thing. I have the order up. Like I'm ready to. I know where my entry price is, so I know where I want to be when I sell it.
the other way as well. October bottoms.
I get in at 10 cents and you're 13 cents, and I'm up at 18, 19 cents. Bang, give it to me. You know.
They open in the next 30 to 60 days or the next 30 60 hours.
You say, do you think some of this decline is due to the worries about a government shutdown?
Look, we heard that there's a potential downgrade in the works here. Yields going higher. It's all part of the calculus.
We're reading more about dealer gamma, risk parity, zero-day option volume. Is market structure okay? Or are you worried
Look, it's still nice resistance. But I feel like what we had here is not what we have right now. What we had, you fucking asshole, man. What you had going on here, right? What we had there, it's not happening here. It's changed. Look at all these buyers. Now you got some sellers. Here they are. Hello. Yeah, we're still here. Yeah, hello. Guess what? Yeah, so are we. There's your buyers. Right? See how consistent it is? And then we go back to buying. And then look, buyers. All right, a little bit of sellers. Let's go. See if the buyers step in right now. Look, there they go. All right, it's trending to the upside. They're fighting. Look at the buyers coming in there. The time in sales did not look like that when we were selling before. There was nobody buying. There was no stages of buying, stepping in at all whatsoever. You got a battle. You just got mixed bag right now. There's a mixed bag going on. Leaning toward the buy side. Leaning toward the sell side now. Still sell side. I think it feels like buyers are running out. Right? Look at all that selling coming in. Sellers are in control. Like, I don't know if you guys watch time and sales on level 2 and stuff. It does give you a real good idea on what's really going on under the surface. That's what gave me conviction to step in up here. That's what gave me conviction to get in there because the time because of the amount of selling that was going on. There you go. Now buyers are in. Let's see what happens here. Are you going to get some support here? Oh well. I'm just kidding. I'm not an evil person like that. Holocaust? What is she, 130 years old? Oh, never mind.
I hope you'll join me at International Fellowship of Christians and Jews. We can do something to relieve their suffering. Please do something.
I want to see if we can get ourselves back to. I want to see if we can get back up here to 430. I do. I want to see if we can get back up to 430. You have some relative strength with Meta. Oh, come on, man. Sorry, I didn't see your comment. It's been a little frustrating morning for me. Jesus Christ. Come on, dude. This is my day. This is my day.
Agitated for sure, and I think once we got the breakout in yields above the prior highs, that was the trigger point when equities decided they had to worry a little bit more. Yeah, I pointed out yesterday that last week the 10-year yield was only up like 10 or 11 basis points.
There you go. Start taking control. It feels like the buyers are running out. They cannot keep the continuation going, is what I'm saying. You have it right now. You have it. But, you know, there is not a sense or urgency to buy or cover a short position. You're going to see how long, like when the buying is really on, it's going to last long. It's going to last. It's going to continue. And it'll look like that. It'll just look like that, right? A little bit of buying, but still continuous selling. And the size. You got to pay attention to the size, too. Size matters. That's what she said. I mean, I don't really look at level 2 on the SPY. Because I kind of, you know... I mean, if you're scalping, maybe you should, but... I don't know. I just don't feel as though this level 2 is too relevant. That it's like, you know, that you could. It's not, to me. You know, I do have it up sometimes, but I can still get that picture painted through time and sales. See what I mean by saying we have a mixed bag in this area, and look what we're doing. Right? There's a mixed bag here. They're both just going back and forth. All right, they're going back and forth. See if we get some buyers in here. See if what you would have wanted to see there for that level to hold is that right there. That right there. Maybe they just needed a little push, but come on, I want like a little blast off to break through VWAP and hold VWAP and go test 430. I thought for sure we were about to have a continuation on our hands. I really did. I really thought it was going to be one of those ugly days where we get the 420. Still might be. Still might be. But I kind of ruled that out. I instinctively feel like if that's going to happen, they're going to do it now. They're going to start cutting these levels if it's going to happen. There you go. Pick your direction. I got to find something to trade, guys. I really do. I really do.
And I think the answer to that is the economy is proving to be stronger than people thought. I mean, I personally think that we shouldn't be
Let me
talking
see. I
about
mean,
the
like there is a
we should be
90-degree
talking
hill,
about
like
takeoff. There's an increase in data
needed
showing
for
the
buyers to
economy is
recover.
accelerating.
Yeah,
Argue
pretty
recently
much,
going up
right?
against
I feel like they're trying,
case that long-term interest rates should be
and like anytime any like little bit of progress is made
more speculative
to help out anybody else that's like waiting for confirmation to
with that
to
inflation.
step in, you're met with that. You see that wall
Actually more
right there? Did you see that? Look at this. It's like they're you don't get the continuation in buying
to accelerate
because of the sentiment,
to accelerate in 2020.
right? Like you tried,
The Fed could
but look what you're met with. It's like, where is it going to come in at? Is it going to come in at VWAP? We know. I got short here at VWAP. I got short there. But it's like any little bit of progress that's made, it's just met with, boom, a ton of buying.
yeah. So Carl, I think the amazing thing is
It would have. It would have, Chris.
right. It went from like
I failed myself because I was looking at Tesla this morning.
we saw jobless claims
I was looking at Tesla and I just,
in the context that
I completely got, yeah, SLNO, I seen that.
of a profits recession.
Nah, I didn't. I was watching a few. Let's see what I was looking at recently. There was a couple small caps that I was looking at that I almost played. It's not even gonna have it. There was,
America is hiring people in should tighten the labor market, which is why historically one of the reasons when you get profits revving up, the Fed tends to
let's see if it's over here.
because the labor market is getting tighter and tighter.
So are you
Yeah, it doesn't have it. I was looking at a couple, maybe B something. It was one that was at $2, I think it was.
Earlier in my career, Carl was
It was at $2 and it went to like, I want to say 3 or 4 or 5.
but I do think the way to invest is
Yeah.
rates going to be higher people think.
There was a couple I looked at because it took off. There were a couple that took off this morning. Can't remember if it was a I forget. It might have been I'm pretty sure it started with a B. Yeah, BFRG. Yeah. BFRG. I'm pretty sure it was like $2. I almost put in a bid for that. And then it got to $3 and there were some tails there. Yeah, it was here. There were like I was seeing when I looked at it, I was seeing these tails here that were put in. I'm like, all right, maybe I'll wait for a pullback, which it did pull back. You got your extension. So I got on this pretty early, but I didn't do anything with it because I was still coming up with the watch list, and I was on the phone. That actually might be an area. So that's not what you want to see. I think you get a little bit of buying hop in there. But since the markets are selling off, it's going to be a little hard to get small caps really moving, I feel like. And that's the reason why you're not getting any continuation to the long side, because they felt like they're met with a bunch of selling pressure. And I feel like that's why we're not making any ground going back up to the upside. Like, if I asked you to go long right now, you might do it, but some people, it all depends on what type of trade you're looking for.
Not trough, not strong, but trough aim. And I think that's what people aren't really like grabbing onto yet.
Yeah.
One of the things I point out to people is our industry, the financial sector, loves a soft
I mean, there's a technical bounce right there. Flat top resistance, bounce right off of it. See if you get some buyers to come in. But look where you're at. You're still right there next to VWAP, and then sellers are sitting at VWAP. So it could get a little boring. Because your sellers are going to want to sell up here, and your buyers are going to want to. Who knows where you're buying? Where do you want to buy, right? Right. This is why I was looking at 425 puts. Like, do you want to buy down here? I think I might grab some more calls or puts. Honestly, I think here comes the rollover. If they're priced right. No, I can't do it. They're 25 cents. Can't do it. I'm not spending 25 cents for a 425 put. Only for it to just one pop and then they're done. And they're down to 13, 14 cents on a daily. So that's out of the question. May work, right? It may pay, but I'm good. I'm just going to let it be. Right? Because that's not putting myself in the best position to do an, to make any type of money or manage risk. This is what helps me from losing less than I make when I'm right. Not taking the trade at all. Right? I understand sometimes paying up for it works. And there's certain times when you do want to do that. But right now it's 11 o'clock, 11:10. You want to wait to see if you get a bounce to VWAP. We get up to VWAP. We know the trend. And I executed that plan. I did. I got in short up here. Made a little bit of money. Not much, but decent little bit. Ask me that question, my guy. Ask me anything you want. No. I would hope that he would ask me, why did I not short today? Because I was stuck on Tesla. I was stuck on Tesla for some reason today, man. I don't know why. I don't know why I was stuck on Tesla. Yeah, I'll be here. Well, like I said, today, I was here all day yesterday. But yeah, you're right. You find some afternoon runner. I gotta go pick my grandmother up and go take her to the hospital. She has an appointment. So I will probably be done at like 2:30. Look, watch this son of a bitch roll over. Excuse my French. See if buyers step away. Look at that. Come on. It's not going to do it. Yeah, you got some buyers stepping in there. If it went, I'm telling you, you could have just got like this quick flush and it would have triggered, right? It's going to trigger those algorithms. Look. Let's see if this breaks and just like once you see it break, watch it flush. It'll trigger and boom, 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 and it'll just drop down. But this afternoon I gotta go run her to the hospital for a checkup. I'm not sure. It's probably because it really goes on to anything. How streaming? Oh yeah, I'll be here till the afternoon. NASCAR. I'm sorry, I thought it was somebody else. I thought it was somebody else that asked me. This afternoon I do gotta run, but I'll be here pretty much all day. Something happens, we'll be there. I'll be here. I'll probably stop at like 2:30, something like that. So we'll see what type of lunchtime continuations happen and stuff like that. I think it's gonna get pretty boring. But if we can, you may see a little bit of a continuation down here. I feel like it's curling it up. I feel like it's curling itself up. I feel like we're curling up. But I do know if we break, you could get a small little flush.
Over 1 million people have put Super Beats blood pressure support supplements to the test. And the numbers tell the story. We have over 66,000 5-star ratings and reviews. We're trusted by over 120 pro and college sports teams.
Watch it.
America's #1 selling beat brand.
See if it kind of falls out of bed. They're trying to save it. See if you get it some continuation here. See if it speeds up. It should. We should speed up. Like this is it. This is like they're either going to save it or they're not.
Private jet experience from One Flight's Pageant. You've got to see this. Like in your itinerary, search from over 5,000 planes. Hey, and you're on your
Look, now you're making it resistance. You broke that level. Now you're making that level resistance. Here it goes. Should.
always starts with your flight experience.
Call for a $20,000 flight credit.
I was born and raised for a time in Juarez.
Oh, they saved it. Look at the shorts covering. See how it got above that level and you got that quick gap? Probably can't see it too well. Like if I were to draw that support level right there, there's your battleground right there.
Go to cnbc.com/getpro for a free trial now. I'm Craig Whitten, and I help people find new homes for their unwanted jewelry and watches.
And what is my jewelry? We know that. Well, my jewelry is
I still think it's gonna break. I still think it's gonna break.
your gold, diamonds, and watches. When's the last time you wore some of your jewelry?
There can be thousands of dollars just sitting in your drawer safe deposit box.
After all, people have been buying and selling their jewelry to us for over 30 years.
I'm Craig Whitten, and I want to buy your jewelry.
That's awesome, bro. I haven't traded Forex. I have an account. My Forex account is only here through TD Ameritrade, but I never do it. I just haven't done it.
Just say the voice into your Xfinity voice remote to start watching. With Xfinity, it's a way better way to watch.
Watch DraftKings today.
There's a bit of the algorithm just starting to dump it. We should get a pretty decent sized candle on this candle.
Performance since July has been reason to buy a stock that's already jumped about 150% this year. It's been pretty much tracking the 50.
Oh, they saved in it. They're saving it. They're stepping in. See how quick it went reverse there? See how quick that went?
We are just a few days away from a potential government
Like, I think a lot of those little things there that people don't pay attention to like they should.
bill to keep the government funded for 45 days.
Like, let's say, just like even in small caps, like NASCAR probably knows, when you break to a new high on volume, and you're breaking through that, or you're breaking through, right? You have that initial morning high, and you break through it, right? You break up through it. This is the top of the candle. You break through it, and it bang, it immediately reverses. It immediately reverses. Well, you know, that's usually a sign that you know, it's not happening. It's not happening. So that was telling me a sign there that area, that low, they've regained it. They're going to, as of now, they've regained it. So let's see if we take our time and take a bounce and start heading to VWAP.
I do wonder if the market is starting to get spooked, not so much about the economic impact of the shutdown, but the fact that we could get downgraded again. Moody's warning that it's the dysfunction that could potentially lead to another credit downgrade.
Yeah, look, I think the United States is good for its debt. We're going to pay our debt back. But I don't
Oh shit. Here, let me use a 1 minute. What am I doing? I thought I had the 1 minute on.
have some big problems with our deficit. A government shutdown is not the way to solve them. Discretionary spending isn't the
That's
way to
crazy. I thought I had the 1 minute on this whole time.
at some point and have a real conversation. It's hard to see where and how that's going to happen.
Alright, I might grab a call.
Much easier job.
If we can hold that 90 in May,
It was JP Morgan earlier in the week that said the United
I might see if I can ride something to VWAP here. Let it pull back.
this broad picture is one explain
So there's your resistance.
what's happening with prices around the country.
Let it pull back.
Most of the rate increase is that the market
I know it's late. I know it's stupid to do one. See, that's so crazy. They want so much.
some of those recession fears receded. They're creeping back a little bit, but only a little bit. So I think most of it is the macro dynamic, but certainly our fiscal situation can't be helping. And it's of course a vicious cycle. 4.5% long-term borrowing, higher deficit means higher interest rates, and that's
Sorry, I thought I heard like that it was raining, but it's not.
Get some blame for the fact that look, these programs aren't cheap.
How do you like trading Forex?
Inflation reduction, they're going to require a lot of debt to be issued. The infrastructure.
Look at it trying to become resistance. Is that a failed break above that area? That might be a failed break above there, and now it's dumping.
Washington bears some of the blame. I think these were good programs.
Oh man, candles are getting smaller. This might be it, guys. It might be it for the day. Like NASCAR said, find something later. So there's my mistake of the day. I gotta write that down. I need not be stuck on one individual play unless there's a reason to be stuck on it, like news or something. I didn't know it had news, right? I'm just watching Tesla because I felt like the market was going to pull back, and I thought Tesla had the most meat on the bone to give me that move. And it looked like it wanted to do a pre-market, and it did a little bit, but there was an upgrade, an analyst upgrade, saying how this is beneficial to Tesla with what's going on, which is obvious. We all know it is. And that's my wasted day, right? That's the irritating part with trading is taking advantage of the day and the morning, not letting it slip by you. At least for me, that is my biggest pet peeve. I hate it. I hate it. Look, we just made that area resistance, guys. I can't stand it. Am I crazy? Is that a head and shoulders? Right? There's your neckline right here. Left shoulder, head, right shoulder. Break, retest, boom. Let's see if we start breaking it down. I mean, I usually don't consider those things patterns. I'm one of those. I'm in that camp where, like, it's pretty clear when you have an intraday pattern. Yeah, that's not. It's not that. It's not that clean. Like, you'll know when you see an intraday pattern, whether it's a cup and handle or in a whatchamacallit, reverse head and shoulders. Guess I'll get a little bite to eat and kind of just scan the markets and get ready for this afternoon and tomorrow and just face the facts. This Tuesday was wasted. So how can I go about my day and not waste it? How can I finish the day off strong? You know.
She has no idea she's sitting on a gold mine. She doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell more part of it to demonstrate.
At least we were warned that it could get pretty boring here. It's just the order flow is like 50-50. Obviously it's weighted to the downside, but you just have buyers picking it up, sellers selling it down, killing premium. So I'm going to scan the markets for a little bit. I'm going to go grab a little bite to eat. I'll be back in like 5 minutes. I do want to say I appreciate every one of you guys. Appreciate the conversation. Appreciate the help, the ideas, all of it. Grateful. Very grateful for it. I just hope that we can, that I don't let more of these opportunities slip under my belt because I'm too focused on one single stock or something. I gotta say, hey, where do I want to be short? Where do I want to be long? And not over pay attention to one thing. So I gotta work on that. I wonder if Nvidia sold back off. It did. Didn't sell off, but it pulled back. Let's see. Wow, those 425 puts are at 30 cents now. 31. 30. That's over 100%, man. That would have been too hard to hold that whole time. At least for me. I don't think I could have held that long. So there you go. You got a break of that support, and you see how the algorithms are kicking in there. See how it's got that continuation. You broke that support level.
And you can manage it all in one place.
I built this.
And it was easy.
She's gonna roll over.
Yeah, with Tesla and Nvidia bucking the trend. European markets mostly lower this morning as all eyes stay glued to interest rates. Nearly all the sectors in the red, tech and autos leading the way.
Damn it, man.
Now, the German 10-year bond yield hitting its highest level in 12 years today, which is a reminder that this is a global move. The moving rates helping boost the dollar to a new 10-month peak. That rally is certainly having an impact on the
And I do have limit orders out on TLT, so if I do get filled on that, I will let you guys know. I doubt I will, but for some odd reason, if somebody does take a bid, you know, maybe they get hit with mine. So,
We are keeping a close eye on Evergrande after disclosing late Monday that it failed to pay the principal and interest on a
all right, I'll be right back. Oh, there's a new low. I felt this trend, guys. I was telling you, I'm like, yo, this thing's going to get going back to the downside. I felt it. I felt it.
in the energy sector isn't necessarily happening. And of course, we've been talking about all these higher rates
Felt this continuation. You guys see how Tesla's not selling off at all? It's actually above highs. It's relative strength. Yeah, thanks for pointing it out. Yeah, I'll actually have to put that on there, man. Yeah. 425.52. I've got like 418.
Midday show today. Small cap midday show, whatever you want to call it, because that's where we're all. Well, you're in Tesla, and by the way, Max's position was pretty on Tesla, but right now Max is long Tesla.
I'm kicking myself in the ass because I said this morning, look at the rollover. They were just rolling it over, and I literally was talking about how the candles were, how they were opening and closing. It's a nice double bottom on the Qs, guys. I would watch the Qs. That's a double bottom. If I've ever seen a double bottom, that's a double bottom right there. Oh, and I will be here all day. That appointment got canceled. Yeah, I got you, Nesco. I see it. I just had a full mouth. I think I might try and go against the grain here and actually take a long. If this does hold on the cues, I may take like a quick scalp on the cues. I might. I gotta build the confidence first. Like it's gotta show me that they that these sellers are going to really stay there and hold their ground and bring this up. I don't. I don't understand what this truck keeps doing, coming back and forth, back and forth, back and forth. Maybe somebody's moving out or something. I'm trying to see, but I don't want to look nosy. Like, look, he's leaving again. What could you put in that quick? And that's old news about Amazon suing and shit. There was some oil USA news just a couple minutes ago. Jeez. They canceled an order or something like that. I don't know.
Because of Amazon ticking slightly lower, 127.04 now, down about 3% for the day. AMZN.
Wow. This is what's wrong with Bidenomics, bro. That's what's wrong with Bidenomics. It's not up to the government to dictate who is doing what and who's doing who, right? Do you understand the FTC chairman, the little fucking Biden's stupid ass cabinet? Do you understand how many people's lives have been changed for the good because of Amazon? Wasn't he just begging Amazon to come to Delaware to use that old Chrysler plant? Begging them, giving them money? Him and the state? Unreal. But they ultimately should be able to do what they want. Unfair practices. What makes it unfair? This is about the scale. This is about the scale and size of Amazon. That's all it's about. That's all it's about. That's it. The scale and the size. You can't be too big. Not to you, but to her. Unbelievable. Mm-mm-mm. I just said yesterday. Didn't I just say yesterday about how much... I asked a question yesterday and I said, do you really fully understand and grasp how much business they do and how much revenue they take in? Which they have a lot of revenue that'll come out, you know. But it's crazy. It's crazy. I mean, $1 trillion market cap, right? Apple's a $3 trillion market cap. Do the math for each quarter, right? If you're $1 trillion market cap, you're doing about what, 250 billion a quarter? Mm-mm-mm.
which is helpful today. Josh, you and Steph obviously own Amazon. You want to give me what your takeaway is from what Amy reported?
So it might be too soon to have a takeaway per se, but Amazon's online shopping business advanced only 5% in the last quarter.
That's it, right there. Exactly what Josh said. It's pretty hard to call them a monopolist when they've only increased 5%.
It's a very strange thing, and I understand the point. The point being that it's really Amazon's logistics that sellers rely on. Amazon competes against sellers on its own platform.
Come on.
And it brings interlocking technologies. It makes it almost
Apple
impossible for someone else to win.
share.
That
You're
part
correct.
I kind of understand, but there are competitors. But realistically, this is not a traditional monopoly. We're not talking about turn of the century, Gilded Age type stuff here.
Come on.
Whenever we talk about
Why is this not working?
space regarding one of the tech giants, and remember we've talked about a number of issues with the government going after big tech over the last handful of years. I find that investors that I ask often yawn. Shareholders also
All right, well, you guys aren't going to get that because it's not wanting to connect or play or anything.
Take a look at Microsoft's cloud business, Azure. It grew. Amazon is actually losing share in real life if you look at data. I know that people have feelings about it too. They feel that Amazon is ubiquitous, hard to compete with, etc. But realistically, this is not a traditional monopoly. We are not talking
there.
about turn of the century, Gilded Age type stuff here.
Steph, I feel like whenever we talk about, an FTC
That's true.
case regarding one of the tech giants,
all
and
about money.
remember we've talked about a number
all
of
about money.
issues with, the government going after big tech over the last handful of years. I find that investors that I ask often yawn.
Yeah.
Shareholders also always suggest, it is what it is. It's political. It'll be a fine. No big whoop.
Yep.
Is that the way you feel today?
Exactly. I think the stock, though, certainly will be volatile, right? Especially since it's up 51% year to date. And it's not exactly cheap. It's cheaper than it's been in the last 10 years, but it's not cheap. And also, you have higher interest rates, so that's going against growth in tech in general. First and foremost, I think this is going to take years.
Yeah.
That's number one. Number two, if they split up this company, I bet you the stock goes higher, because you can then appreciate pure plays, right? AWS, which Josh said grew 12%. It's stabilizing in terms of growth. Maybe it can reaccelerate. Retail, the retail business, margins were double expectations. And the company thinks they can get back to old highs in terms of operating margins. So profitability on the retail side is improving. So I actually think a split, if it happens, it would be positive. And then finally, this company just generated $6 billion in free cash flow last quarter alone. Any amount of fine, they're going to be able to handle.
So let's talk about the markets more broadly today. Tech's obviously down, and Amazon's among the stocks, as you see, even before this news hit, that was down. We're pacing for the worst quarter, Liz, in a year. We've given up 4,300 now on the S&P. Dow's below its 200-day moving average on an intraday basis. I've got 7 of 11 S&P sectors below their 200-day. As well, and 17 Dow components, more than half the Dow, is below its 200-day moving average right now. How do we view this as a rough month is winding down?
Well, rolling off those stats sounds scary, but the reality is that the local high was July 31st, and the drawdown's been reasonably orderly since then. And we've had rising 10-year yields. We've got a 10-year that since May is up 120 basis points. So it's natural that stocks should pull back. There has been this huge dislocation between where yields have gone and what PEs have done. PEs have continued to rise as yields have.
Has something going on.
right now from the market
Like, I feel like she's frustrated about something.
and the Dow, just because the Dow is sort of that
Maybe I'm
sentiment
wrong.
for
I could be
cyclicality,
wrong.
is that maybe
be
people
wrong.
aren't as
I
confident
could be
that we
crazy.
will avert
I
recession,
could be
maybe not as
cuckoo.
confident that we will
But look
avert a
at Josh.
contraction in the economy.
Look
And
at-
I think that that's also healthy. I think there needs to be a healthy amount of skepticism,
Stephanie
which we
Link
were
in the middle.
missing through
I
the
just
end
feel
of
like there's
July.
more
I feel like we've got,
happiness
you know, the
that
major
is
issue,
here
Steph, at hand
and here,
is
and maybe here.
what still
I just
is
feel
a
like
pretty
we have
strong
something
economy.
going on. I know
And
I'm out in
that's
the public
obviously
internet.
good.
I'm not trying to put
Okay?
business out there. I don't know
Versus
nothing
too
about Liz.
strong of an
She may
economy,
not have anything going
which
on.
leads to higher rates,
But if you see this
which
list, I hope
leads to more
everything's
sticky
okay, because
inflation,
I feel like she
which
has
is
something
bad.
going on.
Now, you, by virtue
I
of
feel
the
like
moves
she's
that you've made in the
maybe
market, continue to
taking
bet on
on
the
too much?
strong
I
economy
don't know.
trumping everything else. Because you must.
You gotta think
if your new
sometimes-
buys are Cisco and Deere,
Let me
that says I believe in this economy over everything else,
Let me
and
do
soft
something.
landing is in my playbook, and thus these types of stocks are going to do well.
Well, these stocks are also trading at 12 and 13 times forward estimates, and I do feel pretty good about the estimates, and that's the whole reason
So,
why I'm
what
optimistic.
I'm trying to say
because
is
the economy
there could be
has
a
hung in
lot
there
she is
for
trying
now,
to juggle,
driven by
is
the
what I'm
consumer,
getting at.
by jobs, by wages,
I feel like
pockets of
maybe
manufacturing with $2 trillion
TV,
of stimulus into the
SoFi,
infrastructure
the
segment
writing of
the
the
economy.
and the stuff,
That
other
is
stuff that
what
she
is
does.
keeping us
The
kind of alive, if you
now,
will,
and I
right? It's
haven't seen any of the
offsetting all
podcasts that
these
she's been on
unknowns
lately.
with-
Not podcasts, but they have them daily. I haven't seen that, right? So I haven't seen how she's acted then. I just, you know, from the outside looking in, I you know, maybe she's just overwhelmed. She's just frustrated. Who knows? You know, that's just my thought. Let me just get off of that because that's none of my business. You know, but why does this keep cutting out? I'm just, what? Come on.
Capital markets is definitely improving, and I think that is definitely troughed. I think you will see it improve in the second half of the year. Bank of America last week alone reiterated guidance for net interest income and net interest margins, and numbers have already come down dramatically.
Season is going to start, as it always does, with the banks. How do you think the reception's going to be? Are we going to cheer because they made a lot more money because in nominal terms rates are higher? Or are we going to say, oh my God, the IPO calendar sort of came back and then sputtered, and the housing market is like Superman frozen in the whatever that material, like which like narrative do you think is going to start earnings season off,
I think
considering those two?
Capital markets is definitely improving, and I
Let's
think that
go.
is
Let's
definitely
start making a
troughed. I think
push
you will
up.
see it
Let's
improve in
go.
the second half
I got
of
the Red
year.
Bull here, guys.
Bank of
We're
America
good.
last week
We get a
alone
pullback,
reiterated
and we
guidance
can
for
start
net
to
interest income
hold
and net
this-
interest margins,
Right.
and
this
numbers have
area.
already come down dramatically for
Let's
this
go.
space.
I'm with
So
along.
yeah, maybe that's not going to be the lift
We
off
got it-
to the
we got a
market
little bit of,
to bank earnings, but I don't think they're going to be a disaster, right? And I think the big 5, 6 are taking a lot.
We got
of
a little
market
bit
share
of
from the regionals,
green
and that
candles
is
there.
in their favor.
Call me an idiot,
Then
but
I
I'm
look at
going
American
long
Express,
tomorrow.
And they're talking about loan growth.
Give me a 430.
Up 18%
Give me a
in August
435.
alone.
I'm going
Buy
way
the
out of the money.
narrative that stimulus
I want cheap.
for
I don't wanna
everywhere
give
is,
anything
is
back.
running thin.
Again,
And
what
it's
do
gonna
I always say?
continue to
Don't
run
sacrifice
thin,
price
and
for
the consumer's
time.
going to run out of money as that runs
28,
thin.
even if we can get
and
to
the
like
economy's
432,
absolutely going to slow
431,
because
still
of lag
halfway
effects
there.
that we've
It's
yet to
still-
see. You don't buy that?
I'd buy some of it.
Oh,
I'd buy
shoot. I
some
can
of it.
go way
part of it.
more.
I think
Hold
we're going
on.
to slow. How could we not, right? How can housing not slow
433.
more with over 7.5% mortgage, 30-year
430. Give me
mortgage
the
rate? The
433.
thing
I'm trying to
is
see
that
where
90% of,
liquidity is.
of people that have a mortgage have it under 5%. So existing home sales have been miserable. I'll
But
give you
guys,
that. The
there's
new
a
home sales were
lot of
32%
open
last
interest
year
and
over year
volume.
Short term, it's a bigger headwind for auto
Up
sales.
there
That's a much
32K.
tougher market to borrow into as a buyer.
Volume,
The housing market,
32,000
it's kind of
volume
like,
at the
all right, can't
432s.
sell, can't buy, whatever.
But they're
we'll
10
stay put.
cents.
But you gotta
for a
look at
dollar
jobs.
there.
That's at the end of the day.
Which
Initial
makes
claims
sense.
are the
It's pretty
leading
much what it
indicator,
is.
and you're at 216,000
You know what? That's
on a
why.
4-week moving basis.
The
average,
432s
right?
are a lot
So
cheaper
if jobs start to go in
than
the other
the
direction, we get to
431s.
300, 320, 350.
Because you're
I
saying
start to worry.
on the
But we're
options chain, you're
the
going from
opposite direction, which is
432 to
amazing.
431,
What
right?
happens,
That's
though,
a
Liz,
dollar
is
difference.
part of
The
what I
options chain
asked,
itself
you
is
know,
going
earlier,
from 35
if
cents
rates
to
keep going up because the
57,
economy is
58
too strong.
cents.
What if the 10-year, for
They are
example, hits
increasing
5%?
faster because they're closer to
No
the money
less
on the way up.
7%.
I'm gonna,
Like,
I'm just
you know,
gonna do
Jamie
it. I'm
Dimon
gonna
says, I
do
think
it.
people should be prepared for higher
I'm
higher
gonna
oil,
hold it.
gas.
I'm going to see if I can hold it.
higher
So I'm
rates.
going to take a long,
So
guys.
the world may not be
I'm
prepared
going to
for
watch
the Fed
this.
at 7%. that
This
according
is
to the Times of
stupid.
India.
You do not want to take longs.
He
and
doesn't necessarily have to nail the number, but what happens if he nails the direction? And rates,
downtrending market.
as a matter of fact, haven't peaked yet. Is that a problem?
Yeah, nobody's prepared for 7%. I don't think anybody rationally looks at that and thinks that it's in the near-term horizon. 5% would be a big mental threshold for equity holders, and I think we would continue to see.
So, did
a
you hear
sell-off.
that?
If it happens in a spike, we probably
Witters,
see more volatility in the market. And look at the
Amazon
VIX right now. I mean, it's
responded.
quietly been rising, right? It's still under 20, but around 18. It's higher than it's been since spring. So
It's up 35% from the lows.
exactly, which is scary, right? It's still below 20
It's still
somehow.
below 20, right?
Wild, but it's been quietly rising, and strength under the surface in the market has been quietly weakening. So rates may continue to go up, right? I think the bigger risk in the near term with rates rising is, number one, you've got companies that
Tell 'em,
need to
Amazon.
refinance debt. Small caps are probably the most vulnerable
'em.
in that space. They're not going to be able to refinance all of it. You've got a maturity wall in corporate debt that starts to become an issue in 2024, really becomes a bigger issue in 2025. But as we know, markets look forward. So if people start to get worried that companies cannot roll it over at those rates, there's going to be stress in especially places like the high yield market or the corporate bond market.
I want to agree with something you just said, Liz. If you'll permit me. It's good?
Please.
Yeah? Okay.
By all means.
Proceed.
The strength underlying, to me, is the big story. And I talk to traders and people that are like living inside of the market. And this is, to me, what's notable, what's changed in the last week or so. So August was not a great month for stocks. Most of September, not so great. But what's really changed here, what's picking up speed, the breadth of the S&P 500 components themselves, about 8% of S&P 500 names are now at 52-week lows. Not just statistically, but some very big, important stocks. I know we'll get to Disney, we'll talk Nike, we'll talk about some of them. That's starting to weigh on sentiment. And then back to stats, about 20% of S&P 500 names have an RSI that's below 30. 30 being considered like where we say stocks are oversold.
Look, I told you this.
That's not
17,
enough for us to say the washout is over yet.
The names that we're talking about today, 17 Dow components, as I mentioned to all of you earlier, below their 200-day. Amex, Boeing, Salesforce, Disney, Dow, Goldman, Home Depot, Honeywell, J&J, Coca-Cola,
Told you.
McDonald's, 3M.
I've been watching
Home
Home Depot.
Across all sorts of sectors we're
I
talking
just,
about.
oh
That's,
man,
you know, that's
I missed
just
my
showing some
entry.
technical damage within the market with things that you look at.
But again, I don't.
Oversold, et cetera.
But again,
Damn it,
like if we're
35,
looking for like,
36.
all right, when is this?
All right, I just took a long, guys.
What do we want
I
to call
took a
it's not really
long.
correction yet. When is this at its end? My point is,
We gotta
I need
get
to see a
above that
lot
level.
more than 20% of the S&P names being technically oversold below that 30 RSI. I feel as though we
432,
have more work to do.
September
Of course,
27th.
that could change, but like as of right now, it doesn't look like we're done yet.
The problem is there's an alternative. There are a couple
That's
of
right.
alternatives.
That hurts.
Right? Fixed income, cash. You could get 5% on your cash, right? So I understand, right? And so more, right?
But
And
how
so,
do you keep making a more bullish case than most for the stock market?
Well, I'm thinking about. Look, I am not. It's not 100% like bullish.
I didn't say 100%. I
But
just
I'm
said
looking-
more bullish than most.
Well,
You're buying stocks like
because of the
Cisco and Deere. You've
because the
got to be
economy
pretty
is running
positive.
because the economy is running above trend, and the Atlanta Fed GDP tracker is at 4.9%. Even if we end up at 3%. That's really good. That's really good. And to your point earlier, though, what's bad is that inflation will stay elevated. So there are puts and takes, Scott. But I think when I can find blue chip companies
I
with
knew it.
stellar
I
balance
knew I
sheets,
shouldn't
number
have
one
done
in
it.
the industry, on sale with margin
I
upside.
don't know to just sit
and
on these
if
or
I think
what.
that the economy is going to hang in there,
Because if we
demand
start
upside,
falling out of
sales
the sky,
upside,
I'm not going to
that's
sit
to
here and
me
lose
I know.
very
money.
You know
compelling.
what I'm thinking about as you say that? Blue chip companies with pristine balance sheets where demand's going to remain good. I'm talking about mega cap tech, which the Nasdaq has been
That's
getting
clearly
hit
a
worse
lower
than the
high.
others. Right, it's down
I'm gonna
4%
sell
over
these.
a week.
'Cause I could have just got them at
rising rates have had a
32
more
cents. Look,
psychologically
see how it's
difficult
breaking
and
down?
tough impact on the performance of those stocks. So why wouldn't, in a more uncertain world, Liz, people continue to go to those stocks? Bank of America's flow show, they see the biggest outflows for the second consecutive week in tech. That money continues to come out at a time where maybe the
gotta
dynamic
be kidding
says
me.
that those are the stocks that are going to continue to do the best in a more uncertain environment.
Well, I think they will because of muscle memory to some degree. And remember, a lot of these stocks, the NASDAQ 100 was up, what, 35% through summer? So giving a little bit back, and again, we're not in correction phase yet, giving a little bit back is really still keeping these quite afloat. And I do think investors are conditioned to go back to mega cap tech as that defense trade. The issue is that it's been the trade that is supposed to work in every environment. It's been working in rising, it's been working in falling, it's been working as defense,
this is why your
offense,
entries
all of
are
it.
important, guys.
And there are headlines now coming out about a lot of these companies.
Yes.
All the headlines
Wow.
are different, but there are headlines coming out that are affecting company-specific sales that I think could send some of it into a little bit more volatile of a territory.
What is the low?
But the reality of what happens in a
High and
business
low.
cycle
Oh, shit,
is
the
that
low is
large caps
24
do
cents.
outperform as we stay in this late cycle behavior. So I would expect
high was
investors to
$1.
still have an appetite, a buying appetite for that. And if a pullback continues, they do look more attractive on a valuation basis.
Well, I feel like the most important
go,
question,
buyers.
Josh, in the
Let's
market
go.
is whether the buy the dip is still alive, at least in those names. They are the biggest ones in the market. And if you look at the declines over a week, Alphabet's down 7.25%, Amazon's down 7.5%. You have sort of declines of a lesser extent, maybe half as much from some of the other names, but nonetheless, you know, Apple's at 172. I've heard suggestions from even analysts who love the stock suggest it could go to 160.
Of course it could. Anything. Anything can happen. We've seen crude oil trade at
Come on,
-10.
I'd like to just get a bounce
the idea that
back
something
and
could,
retest
of course
that
it could.
area
But
here.
I honestly think that, to Stephanie's point, if you're talking about the next 6 months, it may
looking
in
for a
fact
little
turn out that a
bounce, guys,
5.25% T-bill
Market's like,
is the
nope,
best investment.
sorry, bro.
Most people are not
We're
investing
not-
for,
we're not
6 months
bouncing.
from now.
We're
Most
not
people are
bouncing,
thinking
bud.
about 10 years, 15, and
Get
20
over
years.
it.
And I
Get
think
short
they will
or
default
get
back
over
to this
it.
idea that
No,
if
I
can
do
buy
want
a
to get a
secular
test
grower
back
with a
to
great
this.
balance sheet,
Make
I'd rather
this
do that.
I hate to
429,
interrupt you, and I apologize on that. We do have
429.50,
Amazon
430
now
area resistance.
responding
I would like to see
to the FTC antitrust suit. Georgia Bosa has that for us, Dee.
That's right. That suit that was filed just about 20 minutes ago. This can be attributed to David Zapolsky. That's Amazon's senior vice president of global public policy and the company's general counsel, excuse me. I'm going to read you the whole statement. It says, today's suit makes clear the FTC's focus has radically departed from its mission of protecting consumers and competition. It says the practices the FTC is challenging have helped to spur competition and innovation across the retail industry and have produced greater selection, lower prices, and faster delivery speeds for Amazon customers and greater opportunity for the many businesses that sell in Amazon's store. Goes on to say, if the FTC gets in its way, the result would be fewer products to choose from, higher prices, slower deliveries for consumers, and reduced options for small businesses. The opposite of what antitrust law is designed to do. The lawsuit filed by the FTC today is wrong on the facts and the law, and we look forward to making that case in court. So lengthy statement, Scott, but Amazon here is making the point that its ecosystem essentially lowers prices for consumers and gives opportunities to small businesses by putting them on the platform.
I gotta get
so
out
it's
of
hitting
these,
back
guys.
pretty hard here, which is not unexpected for sure. We'll see how this plays out in the months and years ahead. As you guys noted, the stock was already down, hasn't really done much because investors know that this stuff takes time, and the FTC hasn't been particularly successful so far in its cases against big tech.
Yeah, they've also seen the playbook play out in many respects over the last many years. Dee, thank you. That's Georgia Bosa. Let's take a break. When we come back, our call of the day. It is one of the biggest Dow laggards this year. Goldman Sachs is staying bullish on it despite a slew of recent downgrades. Steph owns it. We debate it next.
Let's go. If it gives me profit, I don't want to take it too quick, guys, but I want to see if the Qs can get back up to, like, man.
Feels quick, to say the least, that all of these as are already back at these levels. Next, I guess Wednesday. Let's look forward. Either Tuesday or Wednesday next week. We get the.
You know what's crazy is I'm still down on these. I'm still down. So what should we do? Should we take profit here at VWAP? That's a low volume bounce. I want to see the Qs. I want to see the Qs get to 356.90, 357. End of day. I do. I think we can.
To do your laundry.
Yeah, 357 on the Qs. I think we can.
All right, it's a red Tuesday, as you saw. How about Nike? Let's show the shares. There they are. Not doing much. They've done a lot lately, though. Mostly go lower. So, Steph, Goldman Sachs today, call the day, reiterates Nike as a buy. They have a 60% upside to their price target, 145. Okay? In what has been a really negative environment, at least, I mean, stock performance, Wall Street commentary has been kind of brutal. What do we do with this?
I mean, it started with Foot Locker.
Another
right?
tail.
I mean, that's what
You gotta be kidding me.
started
Look
the
at that
decline.
resistance,
this
guys.
stock was really a good
We're
one.
gonna
in the
get
first
out
half
of
this
these.
year, right? And then it rolled over.
I feel like I
rolled over
need
hard.
to.
Wasn't
Look
there,
at that.
were we talking? I'm sorry to interrupt you. Wasn't there a stretch? We were talking about Nike where it had like 11 straight days of
Yes.
losses, like the longest streak
Yes.
that's had forever, right?
Yes.
Now it's on pace for its 8th straight.
I know.
So it goes through these stretches. Now, you must think that these are buying opportunities, that the stock's cheap.
You know, that's the problem.
It's not that cheap PE.
No, it's not. That's the problem, right? It's a compounder over the years. This is a
Come on,
longer
let's hold
term
this and
call
let's
for
go.
me. It's been
Let's
disappointing
go.
for sure, but you've had a derating in the stock. On average, the stock
Man,
trades at
I
28
can get
times
out, break
forward.
even
It's now
right
at
now.
24 times. Very rarely does it trade in this
I like the
area,
time and
that's
sit.
because
Man,
it is
that's
the
what I
number
don't
one
like.
company
Right there,
in the
it just-
industry. 78%
it can get so
footwear
red.
share. Right around the
Look at
world,
that.
they
Look how
do
red
have
we are.
exposure to
They're still
China,
selling,
which you know
guys.
I actually like the consumer recovering in China. I don't like China per se, but I think the reopening will help. I like their brands. I like their innovation. And I do think that one of the problems that these guys have seen over the last couple of years are depressed margins. We talk about it all the time. EBIT margins are 11%. If you believe, like I do, they can get back to the upper
I'm out.
teens.
I'm out of
this
those
stock has
until the
earnings
selling
power of
pressure stops.
$6.50.
Maybe I'll
They're
look for a
at
new
3 and
entry.
change right now. Over the next couple of years, how is EBIT margin? How are they going to get better? Well, you got lower freight costs, lower input costs. We'll see what happens with the dollar. That'll be a problem. But
It might bounce now
inventories
that
are
I
coming
sold.
down. Inventories were down double digits in Greater China and the U.S. last quarter, right? And they're flat overall for the company. I mean, they were so bloated a year ago. So there's a lot that they can do right, and I still think they are the dominant player in the industry.
It's Nike.
Right.
Say no more.
Just do it.
Just buy it or no? Josh Brown.
I want Stephanie to make money here, and I think ultimately she will. Technically, this is a falling knife. It's a new low now. I think if you want to buy the stock, and there's a lot of compelling reasons to want to buy the stock on historical valuation, I think there will be a chance. I just would say not yet, and definitely not into this earnings. Your risk is they have an amazing quarter, the stock gaps up 10%, and then probably by the end of the day fades and loses half of that. And then you say, oh, I could have bought it at 90, it's 92. Like, that's your risk here in not getting in. Your risk to the downside, I feel, is greater. I think it's also worth pointing out, over the summer,
We are starting to get volume that would help our thesis
if you
of
look
upside.
At Hoka and On Running,
Time and
stock, which I
sales
should
is
have made
just
money with, but I
so
sold too early.
red up
But if you look
towards
at those two
VWAP
names, he
that
pointed out they spent the equivalent of 2
it's
weeks
not worth
worth
it
of
to
Nike's
risk
marketing
30
budget
cents to make 2,
over the
3,
course
4,
of 4
5, 10
years
cents.
and managed to steal $3 billion worth of sales from Nike. And he referred to it as an unchecked competitive environment. And I know Nike's had competitors its whole life, so that's not new. But if you combine that with the fatigue, don't forget how many sneakers people bought during the pandemic. So that's the real inventory, not inventory in stores, inventory in people's closets, or in my case, in the garage. We're not allowed to wear shoes in the house. Hi, Sprinkles. But if you think about the sheer amount of athletic clothing and shoe buying during the pandemic, that inventory has to work itself off, and that could take a while. So I think Steph will make money here. I just feel like it's going lower before it goes higher.
You feel like, I feel like you almost alluded to complacency from the company to its potential competition.
It's tough. They're an incumbent, and Nike, spent a lot of its early life as like this upstart brand that was willing to do dangerous things with their marketing, etc. That's obviously not going to be the situation now, but they are the best shoe company on earth. The fundamentals are still very good. I just think it's a tough situation where they are right now.
And I hear
in
what
the
you're
calendar.
saying on Hoka because I actually wear them. And
I know you do. I
and so I
picture
hear
that.
you on that. And I haven't tried those yet either, but you turned me on to that too.
Like butter.
But you're talking like 2% market share.
No, I understand.
Do you know what I mean? Like, come on.
I understand.
78 or 2.
I understand.
Somewhere in the middle, right? And this stock is pricing in like it's losing massive
Yeah.
share. I just don't think that's the case.
All right, let's get the headlines now from Silvana Hanau. Hey, Silvana.
Hey, Scott. The U.S. is calling on Azerbaijan to protect the rights of civilians and to let aid in as Armenian families flee their homes. The Armenian Foreign Ministry said more than 13,000 people have arrived in Armenia from a separatist region after Azerbaijan launched an offensive last week. At least 20 people were killed and nearly 300 wounded overnight in a blast at a gas station around 20 miles from the region's capital. 7 candidates have qualified for the second Republican presidential debate. Former Arkansas Governor Asa Hutchinson is the only candidate who didn't make the cut after the first debate. Former President Donald Trump has once again opted out and will hold campaign events in Michigan. And chipmaker NVIDIA recently reached a $1 trillion valuation. And to celebrate today, it's returning to its roots by throwing a party at Denny's in San Jose. That's where the founders launched the company 30 years ago, Scott.
Silvana, thank you. That's Silvana Hanau with the headlines for us. Up next, 2 bullish calls on the only positive sector this month. We'll see where the committee stands on that trade in just a couple minutes.
So let's see here. If I'm gonna like getting out of this, it's holding. We're making ground, right? Okay, we're bouncing. Look, we have higher volume to the buy side, right? Not much selling, but that level 2 time in sales, I'm sorry, is still pretty heavy. It's pretty active. So with that, I still got to go with my gut and say that until we pull it back and make a higher low or a lower, a higher low, then I can't try to swim against the tide, right? I'm just fighting. I can't. It's better to swim downstream than upstream. It's easier to walk downhill than it is to walk uphill or run, whichever you prefer. I have a really good video that I'm going to do. Man, I want to see if we can break VWAP. We're going to, aren't we? We still have a lot of levels to get through. Like, look at the clear weakness. You guys have any tips for me? If there's anybody here, what could I do? Here was the other thing on why I got out of those. Look at the RSI. Right? It's like it's rising and the stock is still down at pretty much kind of by lows. So if we can pull it back and put in a higher low, I feel real comfortable. I will take a shot at the long. If we can stick 427.26, 427s, like low 427s. Oh shit! Come on. Jump on your bandwagon. Sorry, I didn't say that. It's disrespectful.
All right, energy pulling back today. It's still the only positive sector this month. Marko Kolanovic, J.P. Morgan, turning bullish once again on the global energy complex. Keith Lerner of Truist upgrades energy. We're using the recent pullback to upgrade the sector from neutral to overweight. Liz Young, are we jumping on the bandwagon here, or is this legit?
I think some people are jumping on a bandwagon. Steph and I were talking about this at the break, and now I'm nervous. Everybody's on it, right? And it's the only positive sector, so it looks like, well, why not? Of course we want to buy that. I still do like it. I've used it as my final trade a few times over the last couple months. Part of it is the sector is cheap, right? And it's not necessarily cheap for a reason. You could say that about financials too, but I think right now financials are cheap for a reason. Energy is cheap. You've got shareholder-friendly actions and companies, and the companies are lagging oil prices that have gone up. Oil prices have gone up because of supply constraints, not necessarily demand. So a lot of people would look back at me and say, well, you're bearish on the economy. How can you be bullish on energy? Well, because it's being driven by supply right now, not necessarily demand. So I am still constructive on the sector, but it has gone pretty far pretty quickly. Wouldn't be surprised to see a little cooling off.
Hand went in the air.
Yeah, well, no, I was waving to Mike, but I would say WTI just made another high for 2023, and now we're approaching those summer 2022 levels, and that's with overall inflation cooling off, or at least not accelerating higher as it was. I think this is its own story.
So I'm going to start covering.
I'm
going to be going over these option prices, and I want to see where they're at now.
But that's just recent.
Where they're at 2 o'clock,
the
1:30,
median
3
return
o'clock.
for the XLE
Close
names is only plus
tomorrow.
4%. Actually, they're trailing the market, definitely trailing
I'm
NASDAQ.
going to
now, over the last quarter and a half,
use this other
median return
chart
for
on the
XLE is
right-hand
like
side. I'm
16%.
sorry if this is
So
too
that's that
small.
rally that
Just
Liz
let
is
me know
referring
and I'll
to. And
widen
for
it
sure,
up if you need
these
it.
stocks have caught fire. They've definitely
the
become
RSI
more
is up at
exciting because they're one of the
56.
few things going up
MACD
since
is
August 1st.
even.
But I don't think that's a
Getting
reason
ready to
not
cross
to be in
positive,
the trade because
just
the
crossed
fundamentals
positive.
and technicals are
Is that
both
is that
lining
going to
up.
send on a
So
buy
I continue
trigger?
to stay here. I'm playing it
That
via
VWAP though, man,
RIG, which is Transocean, which is hugely speculative. Please don't follow me into it. But I also own IEO, which is a more conservative way of getting exposure, and I like that too.
These companies are just printing money. Free cash flow is off the charts.
Yes,
Schlumberger
that's what
last
I've
quarter,
said.
SLB, last quarter did $1 billion in their quarter alone. And you're getting 19, you pay a little premium because it's number one, 19 times, right? But for mid-20s EBITDA growth. If you want to get a discount on the oil services companies, I would look at Halliburton, which is trading at 14 times, and it's lagged Schlumberger substantially. But I mean, Chevron's at 12 times, and it gives you almost a 4% dividend yield, and they are a very diversified company. Diamondback Energy, pick an E&P, right? Is it Devon? Is it EOG? Is it Diamondback? They're all returning cash to shareholders while keeping production actually tame.
What if the getting is good? I hear you for all the reasons why, but the runway of opportunity is short once real concerns come in about a potential recession or even more dramatic global slowdown.
Supply
it's only
story,
a matter
more
of
than a
time.
demand story,
So it's
though.
supply trumps everything.
I think
Steph.
so.
It'll fall. Oil prices will fall if we go into a global recession. There's no question about it. That's why these are cyclical companies, right? And that's why they do trade at the multiples they do.
No, but I don't. I'm talking I'm wondering if the cyclical nature of these is a matter of months rather than a longer stretch because of those concerns that may still be to come.
Well, you know, it all depends on your outlook on the economy, right? I mean, Scott, I don't think we're going to be into a recession in the next 6 to 8 months. Is it a year from now? Is it 2 years from now? I don't know. But we're going to slow. But yeah, it is supply demand. There's very little supply. There's a lot of demand right now. I mean, there's even stronger than expected demand coming out of China. And that's surprising
Doesn't
$100
seem
You see
like
that,
it's
guys?
almost like
Do
a
you
magnet
see
right now? That's
why?
like where
See, it's at
everyone's target
33,
is.
32
$100
cents.
oil. These stocks may not be substantially higher, on $100 oil, they'll be higher.
The volume is telling,
that
though.
drives the day, right?
To
And
me,
Caterpillar
this
has
volume
said,
is telling.
The management has said their
You're
sweet
getting
spot
some dip
of where
buying.
oil should be, where
I
they
mean, we're
like
closing.
it, is like
We're
80
starting
to
to
90.
close.
Yeah.
They don't want it at
green
50,
candles at
and
a
they
higher
don't want
rate
it at
than we
100.
are
They want it
red
somewhere
ones.
in between.
All right.
So
We're losing a
that's a
little bit today in
positive.
the market, as you know. But coming
The
up, we're going to be
negative
talking about winning.
RSI
Because
high.
coming up, NFL front office veteran
Positive,
and three-time Super Bowl
MACD
winner
crossover. So we got
Michael
two in the
Lombardi joins us live at
long
Post 9.
bucket,
His
one in
lessons
the
in
short
leadership
bucket.
from a 3-decade career in the league, the big league. Halftime is back right after this.
Let's see what Apple does here at VWAP. Let's see what Apple does. So again, I'm just going to scan around and kind of just go back to the basics and go back to seeing if I can find some opportunity, man. I feel like I'm going to be really upset that I am not in these calls right now. That's what I'm starting to feel like. But when I'm in them, I feel differently. Why am I getting emotional? Because I don't want to fight the trend. I feel like I told myself that I would do it if we could pull back and hold and put it a higher low, right? And start cranking it up. Sorry, I can't get my eyes off the SPY right now. I'm really curious what we're going to do here. Here we are. This VWAP test is going to be important. So these contracts are only 34 cents. So they're still right around where I bought them.
And so then you're able to secure your shorts like that. And typically with Daytrader World, we have shorts to almost everything. Okay, that's awesome. You can't say that with other platforms. Yeah. They just don't have. Like I'll show you, like for example, look over here on my chart. See the light green? Yes. Those are all available for short. The dark ones are not available. So if I wanted to go short DMK right now, I can't. Yeah. Not available for me.
With the light green. Okay,
The light
that's
green,
that's a lot of options.
Exactly. So that's the move there. So that, and when you want to go short, obviously, is when it's having a weak day. Okay. Right. That's basically what you're looking for. Obviously, it's more nuanced than that. But
Yeah, like there's more analysis, but generally the vibe. Okay,
exactly. So that's what you want to go short. And you're basically the function of that is you're borrowing shares from somebody who owns them.
Yes. Okay.
Them into the market, and then you're going to buy them back at a lower price, and then you keep the diff.
Okay, perfect. So then that's how you bring on the short.
Yeah, exactly. That's anything you want to bring up, because I think we really kind of struck a good chord with people yesterday when we were doing a lot of explaining. Like, you guys are always
Go to fablens.com.
words and stuff.
So these contracts have been hanging around, 30 cents, 31
We're back.
cents.
Winning
I
one
wonder if
Super
we get
Bowl hard
buyers
enough.
step in.
3 is pretty rare,
Let's
as
see
you
if
know.
the
Our
see
next
if I was
guest, though, has
right. If
done
I was
just
reading
that.
time and
As
sales
an executive under 3 of the most legendary names in the game of football. Michael Lombardi is the author of Football Done Right, setting the record straight on the coaches, players,
Right. And look,
history
those
of
sell-
the game.
those
He's here at
buyers
Post
that
9.
were there at the
Welcome.
90
Good to
MA,
see you.
Thank you.
No
for people
relation
who
to Vince
just thought
Lombardi.
about
Let's just
getting
get that-
long.
Get on.
No.
You should just tell people.
Well,
Absolutely.
really, my last name's Smith, and I changed it when I was early, so I look like a Smith, don't I?
All right, so I mentioned 3
So I
Super
feel like I
Bowls
made the
under
right
3
decision,
legends.
guys.
Bill Walsh, Al Davis, and Belichick.
Yeah.
That's pretty remarkable
I'd like
to
to
work
know-
under
okay,
all
there it
3.
is.
I'm curious
I
as
was
to
gonna say,
what
I'd
you
like to
took
know
away
where my
from
chat
those
is.
experiences.
Well, I think all 3 of them had this incredible ability. You know how Steve Jobs describes focus as the ability to block out things that may be helpful but aren't helpful to the moment? And those 3 gentlemen all kept the main thing all the time. And their focus was constantly, and Belichick still is, on what is most important. I mean, the Eisenhower mantra, the list, the urgent and important, that applies to all 3, and that's how they behaved. And so they never really got distracted by other things that kind of set them off course.
and they were devoted to the game. Al Davis told me once, he said, you don't work in the NFL, you live in the NFL. And I think all three of those lived in the NFL.
You're wearing the fruits of your labor, and one of those Super Bowl wins, obviously the one where the Patriots beat the Falcons after trailing 28-3. That thing's like the size of an aircraft carrier. What's the state of coaching in the league today? Does it measure up? Now, take Belichick out of it because he's still coaching, obviously, but you know, you had some amazing coaches back in the day, and we could go through the list: Parcells, Joe Gibbs, et cetera, Ditka, et cetera.
We've subcontracted it a little bit into the sense that the job is so overwhelming. With the owners have hired coordinators to be head coaches, missing the element of leadership. I think it's one of the things that prevents the minority candidates to get ahead, because we're not spending enough time on leadership. Back in the day, leadership was important. Parcells led. Gibbs was a leader. They also called plays, but they also led. And I think we need to spend more time developing that. Ex-players are good at understanding the craft, but leadership is a whole element that you have to spend time on. In my first book, Gridiron Genius, I spent a lot of time on that in terms of culture and why those three guys were able to win, because they set the culture.
What do you think of the season as it's got underway here is the most interesting storyline from the perspective of somebody who's actually lived in the game for your whole life?
Taking Kelsey and Taylor Swift out of the equation.
No, you can keep it.
There's never been
I
more
think there's
attention on the
parity.
game, I'll tell you
I
that.
think there's parity. Burt Bell, the man who discovered the draft in 1946, talked about on any given Sunday. I think we learned that. I think every year it's so close. Like, you can't, other than the Miami 70-30 win, 30-20 win, excuse me, there's really hasn't been a dominating team. Philly played good last night, but they weren't as dominating as they were last year. So I think parity rings true. I don't think you could sit here and say in September this team's going to win the Super Bowl. I think there's some potential.
This is exactly
teams,
what
and
I
there's
have
some teams
said,
you can
guys.
eliminate. But
I
that's
said
what makes
this
the
year
league
is
so
going to be
good. That's
pretty
what makes
good
it
to
so
watch
exciting,
NFL because the
nobody
teams
really
are pretty
knows the
close.
outcome. You know, you
And
think
he's
you know
seeing the same
outcome
thing, and he
until
works
the
there.
Cardinals upset the Cowboys.
What do you make of the look? You work for DraftKings in a sense as a podcast host, and you own shares in the company as a result, I think, of that. But what do you think of the proliferation of gambling in the NFL? Both on the way that the league has embraced it like never before, but also in the way that some players have been punished for gambling, while at the same time the league has wrapped its arms around it.
Well, in 1975, here in New York City, the NFL Today started on CBS. And Brett Musburger, who actually owns the company that I work for, it's part of the DraftKings network called VSiN, he had Jimmy the Greek on. And they quietly talked about the gambling aspect. And I wrote about it in this new book about how back then it was something that they couldn't say the lines or any of that, but they talked about who was going to win the game. And that propelled the sport tremendously. It really has. It brought more interest in, just like fantasy football has developed the sport into this high level. And I think it's only good for the game. Now, I think there's mechanics that everybody has to work around, and there's protocols that you have to go through. But I think it's just generated more and more interest in the sport. And we see teams, you know, the Washington football team sold for over $6 billion. The value of the interest of the fans is
SLNO's going.
We talk about numbers literally all day long, every day that we are on the air. The NFL, to me, has embraced numbers like never before in terms of analytics.
Yeah.
Is that good or bad? You see a coach, for example, it's late in the fourth quarter, his team's ahead, he goes for it on fourth down in his own area of the field because the analytics suggest that it's the right thing to do. Have we gone too far?
I think we leave a big segment out. Let's take, for example, on Sunday, the Chargers have the ball at their own 24.
How'd you know I was referring to the Chargers?
4th and 1.
Gridiron Genius, that's how.
4th and 1. And they put up a graphic that says if they go for it, it's 88% successful, they win. If they punt, it's 82%. But they don't complete the sentence. What play do we run at 88%? The Chargers had 14 carries for 30 yards in the game. They only had 7 incomplete passes. If they throw a pass, they're going to win the game. If they run the ball, they're going to get stopped. What did they do? They run the ball, they got stopped. So analytics has to be applied to the game, not to all the games. It's what's happening at the game today that matters most.
I agree with that.
It's the same thing in your
That's
profession.
a valid
What's
point.
mattering in the market today applies to the analytics. You can't take the numbers and apply them, because they did this 20 years ago we should do this. No, you have to apply it, and I think that's the missing link. You got to answer the question. If we go for it, what's the play?
Best of luck with the book.
Thank you so
That's
much.
Michael Lombardi. Appreciate you being here. Football
you.
Done Right is the name of the book. Be sure,
Let's
by the way, to
go,
catch
Spy.
the
Let's
NFL on
bounce.
NBC this Sunday night. Got a good one. Kansas City Chiefs taking on the New York Jets. Who's the quarterback going to be?
Don't go there.
Tom Brady.
The Swifty's going to be at the game. I don't know. Coverage 7 p.m. Eastern, NBC and Peacock. Of course, up next, Michael Santoli. He'll join us with his midday word. We're back after this.
Or maybe they simply think their customers won't notice or care if they don't pay market rates. Whatever the reason, don't let them rip you off.
That might be a failed breakdown.
Move your account to Interactive Brokers.
It might be a failed breakdown.
You think those two have any idea that they could sell their life insurance policy for cash?
Man, we're doing the same thing we did yesterday in this little area here. It's just a little small grind. Moves up, moves right back down, and it's just like slowly making the longer term move. Longer term as in this afternoon. So SLNO has just received a pop from the buyers or shorts that are covering. One of the two. Wow. What a beauty. What a beaut. What happened to this thing? Excuse me. Oh, alright, we got some resistance up here.
DMK shares halted on a circuit breaker. Delta Michael Kilo on the way down now at
Delta Michael Kilo.
Things like the pure value index is holding up relatively well. Regional banks have done fine this week.
All right, we're back, and our senior markets commentator is right there, Mike Santoli. What's your midday word today? What's on your mind?
Well, obviously sloppy, but not panicky. It's kind of the market tone today, but some also very interesting wrinkles. Things like the pure value index is holding up relatively well. Regional banks have done fine this week. It seems as if there's a bit of a pile on the big index names to the downside. Once you get below a 5% pullback on a closing basis, you often have to see things to get genuinely oversold. So we're working on that. I think the conditions
there she
are running
blows.
into place. Not quite there. Final point is, I think
contracts are still at 34, 35 cents. All that headway to do what?
It's a good
Nothing.
thing when everyone starts to say, oh no, there's no end in sight. Yields can only go higher from here, because it shows you that the psychology started to over extrapolate the move. We'll see.
It doesn't mean that they can't
fact,
start paying.
eventually puts a cap on yields, which is what we're trying to digesting here. Can the economy handle where yields are?
Yeah, obviously, Diamond says things that, make us talk. Whether it's the hurricane comment that certainly we spent a bunch of time talking about, wondering how bad this might get as the Fed was on its, a path of raising rates to this degree. And now he's throwing another one out there for us to think about, though.
For sure, and I also think you have to take it as it was delivered, which is, risk management. He runs the bank that's going to be there when all the banks are gone if something awful happens, and that's his whole brand. That's his whole orientation. Be ready for stuff you never thought could happen. Great. That's an interesting premise to keep on the side. It's not a prediction, and again, though, I think when the talk gets in that direction, or even a lot of technical targets saying 10-year goes to 5.2.
Sorry, I didn't know my phone
right
was
now,
on.
that could very well happen. I'm just saying that the psychology has changed faster than the realities of the economy or the Fed policy have changed.
Tesla,
that's usually what gets the markets to
still
overshoot
holding up
one
at this
direction.
level.
See you back in a
Right,
couple
it's a
hours. Appreciate
breakdown.
That's
It
Mike
comes
Santoli.
up,
Final trades are next.
pulls back pre-market. You got some selling pressure that stepped up here at 248. How do we play this? What shall I do?
Fast Money is America's post-game show.
Basically, near all-time highs against the S&P.
We want to arm people with the information to make great decisions.
Valuations.
If you guys could, if you guys haven't done so, do me a solid. Hit that like button. Give me a comment. It really helps, I guess, the algorithms, whatever they call it. And, maybe it'll help somebody find this stream that wants to come out, hang out, trade with us. So for that, I thank you. If you do, if you already have done so, I just must send the reminder. Goes a long way. If you don't know, you have FTC and Amazon, so that'll be news that we can go over. We have the calls that I was out of. I took 2 trades today. Three. I took 3 trades. The very first trade of the day, I got very lucky. It's not that I got very lucky, like, oh my god, I would have blown my account up. No. We don't do that here. What happened was I was watching Tesla this morning. Because I was watching Tesla is why I
shares
missed
of
this
Amazon,
move.
of course, today under a bit of pressure. Already were really before this news even came out that the FTC was suing Amazon antitrust.
So,
And by the way, tomorrow,
Tesla, I got
FTC
short
Chair Lena
Tesla
Khan is going
early
to join
in the
Squawk
morning.
Box at 8:30 a.m.
I was looking for a
Eastern
rejection.
Time. Do not miss that. We're
Oh
back
my
with final
gosh.
trades next.
Nope. I was looking for the rejection up here. So when I took my position, I ended up hitting it twice. So as I hit it, I got into the order. So then I went back into the order that was filled, and I pushed limit order, market order, preview. Well, when I hit preview, I hit it twice. And it just I got in it, and then I literally got right out of it. But it gave me some profits. It gave me a profit on the pullback. Made a couple bucks, nothing crazy. So it was a little upsetting. But not really. It wasn't that upsetting. It was, at the time, it was like, okay. And then come to find out a half hour, 45 minutes later, I see that there was a price upgrade. And that's why, and on top of that, I knew Rivian you know, there were talks about Rivian and Fisker and stuff, so. That's why I was just pretty adamant on shorting Tesla. It had a lot of meat left on the bone. It's where I wanted to be, for no specific reason other than technology is, in my eyes, is pretty weak, or was pretty weak. But so there was that trade, Tesla trade, and then I went short the SPY, the test of VWAP right here, got short there. Might be smart to do it again.
Final trades on CNBC, IBM.
There she goes.
IBM, it's only up 2% year to date, but it's up 25% from its recent lows. It trades at 15 times earnings, good yield, and I like the software and consulting mix, which is 75% of total revenue.
Okay, JB, if you've been hiding out in money markets or cash, consider lengthening your duration a little bit. The SHY 1 to 3 year Treasury
Here.
yield is 5%.
All right, closing bell, 3 o'clock Eastern. Look forward to it. Adam Parker with me,
We're gonna
Alicia Levine,
hold
and Kevin
this?
Simpson. Always has some new moves in the market. He'll update us on what he is doing today as well. Final trades. Liz Young, what do you have for us?
I've got utilities today. I'm watching that slow rise in the VIX, the resteepening of the yield curve, and I think the sector leadership can switch.
Okay, good stuff. Definitely linked.
IBM, it's only up 2% year to date, but it's up 25% from its recent lows. It trades at 15 times earnings, good yield, and I like the software and consulting mix, which is 75% of total revenue.
Okay, JB.
If you've been hiding out in money markets or cash, consider lengthening your duration a little bit. The SHY
Just a
1
wee
to
bit.
3 year Treasury bonds, current SEC yield
Blood
is
red, folks.
5%.
We are blood red today.
No shoes in the house. We clear?
No shoes in the house ever.
Dude,
All right,
with
guys,
the
just make sure.
fucking
All right, good.
ads. Come on.
Thanks for watching.
So
I'll see you on the
biotech's
closing bell.
up a little
Big
bit
stake price
today.
now.
Thank you, Scott, and welcome to The Exchange. I'm Kelly Evans, and here's what's ahead this hour. Stocks are under pressure again, as you can see there, as the latest confidence report shows consumers very much under pressure as well. We'll have more on that ahead, including 3 names you want to avoid because of it. The Dow right now down 282, the NASDAQ down more than 1%. Plus, more on the pain points we are seeing in real estate, from rising defaults in one sector in particular to the lending pressures amid rising rates and soaring costs. And the 2 cities that billionaire investor Don Peebles says are ripe with opportunity as a result. He's back with us today. You don't want to miss it.
PGNY.
But first we begin with 2 other pressing developments. President Biden, who just touched down in Michigan and is set to join the UAW picket line.
Boo
First
this
president ever
man.
to do so, I believe, as negotiations show no sign of ending soon. Phil LeBeau is live on the ground there. And no resolution in Washington either, where Congress is running out of time to strike a deal to avoid a government shutdown. Moody's warning of the consequences on America's credit rating, the only firm to still give us a AAA.
He's such an
We'll
idiot.
examine the fallout in a moment.
Dude,
with
does
points
he
from the
not
2 chief
understand?
economists,
GM
Dean
cannot
Mackey,
afford it.
and our own
Let's
Emily
be real,
Wilkins and
guys.
Steve
I would
Lichtman.
love it.
But first to Michigan for the
I
latest
love
on the
America. I
auto
love
worker
American
strike and the
people.
arrival of the
But at the
president
end of the
any moment
day,
now, Phil.
each and every one of these people who
And the
give their
motorcade
hard-earned
has been
time
seen at
and
a
their
GM parts
their
and
hard
distribution
work,
center not far
they
from
need
here. I
to
believe
use
it's
that
up
time
in
and whatever time
Belleville.
that
We're
they
waiting
that they
for the
have
pool
away from
chief
there
to
and
show up,
make
then
something
we will
of their
get some
own
comments
business.
that are,
This
being
is why
taped
corporate
with
America
the president
sucks.
there,
Because
where he meets
GM
with
ain't
some of the
making money.
UAW members who are
GM
on
ain't
strike
going to
there.
continue
Whether
to
or not
make
you
money,
formally
especially
say
the
he
rate
is
that we're going
picketing
with
them
7%
or
interest
simply
rates.
meeting with them,
I'm going to tell you
he's
that right
clearly
now.
showing support
It's
for the
going to get
organized
ugly.
labor,
And they don't
movement
have
here
the
in
money
Michigan
to
and
not
for
only
the
pay
United
them more,
Auto Workers.
but
And when
they're
he's
going to
there,
start
he is
making
expected
less.
to give some brief
They had a
remarks
good year.
as soon as
They've
we
had a
hear
good
from the
couple
president.
years.
We will
But that's
relay those to you.
probably
Against this backdrop
probably
of the
going to come
president's
to
visit
an end.
tomorrow,
Things
and
should
Donald
slow
Trump
down.
coming to Michigan,
So
or
if you're
President's
talking about
today,
increasing
Donald
wages
Trump
and stuff
coming
like
to
that, when your
Michigan
balance sheet
tomorrow,
is about to
there is
decrease,
negotiations continuing
bad news
between
bears,
the
bro.
UAW
Bad news
and the
bears.
big 3 automakers. Though
You know,
there's probably
can you
some
bring
type of
in some
pause
type of
going on
other
as we
type
speak
of
right now.
work?
Here's the latest on those
I'm sure.
negotiations. First of all, Ford and the UAW,
You know, like they were
are
talking about
battling
batteries
over
and stuff.
an EV battery plant that is planned for about 100 miles west of here. We're not going to go into all the details here, but this is at the heart of the debate over this contract, the negotiation. What happens with those battery plant jobs, EV manufacturing jobs? Are they UAW jobs? And at what pay scale
do those people get represented if they are with the UAW? Then there's Stellantis. They put out a note yesterday saying, look, we are ready to negotiate and to award a large raise to the UAW, but our costs have to be competitive. And Stellantis says for its cost to be competitive,
It's a business at the end of the day. Oh my gosh, why is this?
Foreign
Why is this
automakers
spy
here in the
going
United
up?
States, and ultimately against Tesla. And finally, there's General Motors. It continues in its discussions with the UAW, but we get no sense that an agreement is in the offing, whether
Screw
it's
this
with GM,
man.
Stellantis, or with Ford. So again,
He's
we
such
are
an
waiting to hear
idiot.
from President Biden. That should be momentarily. And this is a little unusual, guys. They are not doing this where he's in a big rally and there's a whole bunch of press there. It's a pool reporter and a pool photographer who are with him as he meets with some of the rank and file members of the UAW, and then they will feed that out.
There's the president. We're looking for that black hat. He is making his way in a blue windbreaker. If you can kind of peer through those picket signs, he's about to take the horn. I don't know if we can try to listen in.
He said they're doing incredibly well. Why he feeding them the wrong message? They're not doing well. They're not doing well.
Folks, look, one thing is real simple, and to be very brief. The fact of the matter is that you guys, the UAW, you saved the automobile industry back in 2008 and before. Made a lot of sacrifices. Gave up a lot, and the companies were in trouble. But now they're doing incredibly well. And guess what? You should be doing incredibly well too. The simple proposition. Stick with it, because you deserve the significant raise you need and other benefits. Let's get it! Let's get back what we lost, okay? We say to them, it's about time them to step up for us. Thank you. Now, there's a guy I know you don't know here, but I brought him along anyway. Sean Payne, your president.
You guys see what's going on here? Let's rally up. Oh my gosh, I don't want to say it, but
There's President Biden, who just concluded some brief remarks into the bullhorn, which he just handed over to the UAW's President Sean Fain. Phil, just for a quick recap, the president said, you guys, meaning the union workers, you saved the automobile industry in 2008. You gave up a lot. You sacrificed. They were in a lot of trouble. Now, guess what? They should sacrifice too. The president said you deserve the significant raise you need and other benefits.
Exactly what he said, Kelly. And the argument that you would hear from executives at Ford, GM, and Stellantis are, we've made record offers. They are offering approximately 21% pay raises.
yeah, that's a
in
lot.
some cases, an increase in the cost of living.
Because you could
adjustments.
see
Actually,
10,
a return of
15, if
those.
not
Those were stripped out in
20%
2008,
decrease
2009.
if we go into a
reduction in the
recession,
number of tier
guys.
wages so that workers are hired in much closer to the top wage scale. And from the perspective of the big three, they have made sacrifices in terms of making a generous offer. But they also are balancing
is
that with
all
what they believe
to
they
get
need to do in
votes.
terms of being competitive with foreign automakers here in the United States, as well as with Tesla. And the fact
At
of the
least people
matter
in
is
Detroit like
they
him.
are
People in
the
his own
midst of
state don't care
transitioning
for
to
him.
electric vehicles, and they're nowhere close to making money on electric vehicles. And they believe that in order to do that, they have got to invest billions more over the years to come, and there is a
Look at his
limit
face.
to how much
Look at the
more
look
they
on
can
his
give the rank
face.
and file workers. So that's the rub of all this, Kelly. Nobody's arguing, and you won't hear it at GM that the workers
He's
don't
really
deserve
thinking.
more.
He's really
The
thinking
question is
hard what's
your
going
definition
on.
of more.
Sure.
Something
No, I'm
that's
still
sad.
struck by the fact
Listen,
that the
I love
median worker
America.
at
I
GM
love
makes
American people.
$80,000, and at Tesla, the median
And
worker
that means,
makes less than
you know,
$35,000. So
I
the
care about
structural
Joe,
challenges will
but
persist. Phil, we'll let you go for
he
now.
doesn't
We'll
have
circle
my
back
vote,
soon.
just
Our
'cause
Phil
I don't
LeBeau in Wayne County, Michigan. That's where we
agree
also
with
find
him at
President
all
Biden
whatsoever
this hour,
and some of the stuff
meeting
that
with
they
UAW
do.
workers as
You
the
know,
strike continues.
he's
Don't miss
definitely
last call
hurting.
tonight. Brian Sullivan
He's
will
hurting
also be
right
live
now.
in Wayne,
I just
Michigan,
keep it
with
real.
much more
That's
on
it.
the economic and
I'm just here to
political
keep it
fallout
real.
as the strike continues. That's
And I think
tonight
it
at
sends the
7
wrong
p.m.
message
Eastern, right here
to
on
have a
CNBC.
politic come out and
And
do
while the
that.
president is in Detroit for the UAW
I don't
strike,
think that's okay.
Congress is still trying to strike a deal in Washington.
Right?
to
So what are you
avoid
going to
government
do?
shutdown. Let's
What
get over
what
to
does
Emily
that start?
Wilkins on
Listen,
Capitol Hill
they
with the
already
very latest.
said.
Emily?
What was it earlier?
Well, Kelly, it is still
not looking like there is a clear path to avoiding a government shutdown that would begin on
You
Saturday
just
night,
had
Sunday morning.
something
And
else
Congress,
with people,
It's not that they're not working on trying to figure out a solution, but the fact of the matter
pretty
is
much
that the
walking
House
out
has tried
and
failed to bring up a short-term
demanding
spending
raises.
bill. So what they're going to be doing
What's the
today,
pop
we'll
about?
see this vote come a little bit this evening. The House is actually going to vote on trying to move forward on 4 major bills to fund the government. And they're hoping that that's a show of good faith to a small number of Republicans who have been holding out, and that those Republicans will then,
If
once
we
those 4
get-
bills are passed, come on board with that short-term funding. That's a lot of ifs, and there's no really guarantee that what we're going to be seeing from the House within the next couple of days.
Guys, watch if they say they come to an agreement. You're going to get a rip. I'm telling you right now, you're going to get a rip if they have an agreement.
That this short-term bill that he's pushing includes a number of Republican priorities for the southern border.
If we get a bill passed forward or something in the talks that can be agreed upon, this market's going to go higher, I promise. And I think this is what's going on here, is buyers are anticipating the deal's getting done, which I would assume it would too, but it's when.
I think that's the appropriate way to be able to keep the government funding, secure our border, while we continue to keep the government open to work on the rest of the appropriation bills.
Of course, even if the House does wind up passing that short-term bill, there is no guarantee that it goes forward in the Senate or ends a shutdown. Senate is working on its own bipartisan bill, which stands a better chance of potentially passing and ending a shutdown. But it's not clear at this point when exactly the Senate is going to be releasing that bill text.
I want to know when they brought this girl in. I just started seeing her on CNBC.
And then we do this all over again. Kelly?
Are there, Emily, do either of these bills
Has Emily
cut
always
spending?
been
Are
with
they trying
CNBC,
to
or is
cut
it just
spending?
me?
The Republican bill does try to cut spending. And I think at this point there is some sort of willingness to do that. But I think really the main priority right now isn't about cutting spending. The main priority is about keeping the government funded so Congress can work on some of those long-term spending bills. That's where Republicans are hoping to get gains in terms of funding cuts. Hopefully something for immigration is what Republicans want to see. But at this point, it's really not clear how things will ultimately shake out when it comes to funding the government in the long term.
You just had
Emily,
the
for now,
auction
thanks.
too,
We
bond
appreciate it. Our
auctions.
Emily Wilkins in Congress. We just had a 2-year note up for auction top of the hour, and way yields have been behaving. We've got some headlines from it. Let's get over to Rick Santelli for those. Hi, Rick.
Yes, hello, Kelly. And keep in mind, 2-year note yields are
Wow,
the
5.8.
coupon closest to what the Fed may or may
5.08,
not
I
be
should
doing,
say.
and it correlates, so it makes maybe the short maturities a bit more difficult. 48 billion 2-year notes. That is the largest offering going back to April of 2022. And the yield at this Dutch auction, 5.085%, which is exactly where the when issued market was. So that screams an average auction. And as you go through the metrics, one thing stood out. Dealers took 14% versus a 17% 10 auction average. I always like that because if dealers are taking less, investors are taking
I like
more.
what he
All the
said
other
there.
metrics were very
I'm
close
glad
to
he said that
10
for people that
auction
don't
average.
know.
So C plus is the grade, but there's a couple of unique things here very quickly. That's the highest yield at an auction since 2006. We'll call it 17 years. And it's a huge roll. The old guy is trading 5.13 and a half.
Listen to
so
what he says here.
5.13
I'll turn
and
it
a
up
half
for
yield.
you.
The new guy, as I pointed out, is trading 508 and a half. So all you technicians and traders out there, when we come in the morning, don't think the 2-year note yields drop 6 basis points. It's just a 6 basis point roll. Kelly, back to you.
Rick,
Hear
thank
that?
you very much.
That's what happened the
514
other
is the
day
latest
then.
print there. Rick
When I was
Santelli.
coming in, I'm like,
Now,
yo,
from the threat of a
what's
government
going on with
shutdown to
yields?
the
Yields
UAW
ripped. They
strike
were way up
to
there.
the high interest rates we
6%
just
roll,
mentioned,
or
the
whatever the
economy is
percent
facing a
was
lot of
then. It
pressure
was a
points,
rollover.
including a big drop in consumer confidence this morning as gasoline prices have rebounded lately. On top of this, J.P. Morgan's chair and CEO Jamie Dimon told the Times of India he's not sure the world is ready for 7.
All right, unless you guys want that on, I can keep it on. Right, I can keep that on. But I'm going to go over some. I'm going over some charts. If you want me to keep it on, I'll keep it on, and I can stay quiet if you guys want to watch it. Whatever. You just comment in the chat. Just let me know what you want to do. Here we go. Looks like we're reclaiming VWAP. And if you're just joining us now, if you could just give me a like, give me a comment. It would help spread the word on what we're trying to do here. What are we trying to do? We're just trying to get a group of traders. That's all. That's it. A free place that people can go to that can come up with ideas, ask questions, talk about trading, things of that nature.
Where they can't really afford at this point to take their foot off the brake.
All right, so I'm gonna keep watch here. I want to know what this candle was for. November Tango, November X-ray. November Tango, November X-ray. Shit. Looking back, I should have done this, and I'm gonna write these things down. Um, when we gap below yesterday's this area here, we gap below it. We need to watch and see. I was again this morning. I said 4:30 is where I was hoping to get to. We didn't get there. We did have a rollover. What I'm trying to say is, just seeing us start to roll it over here. Again, this is today and yesterday. You'll notice right down here at these lows, you can see how the price action is leaning bearish. And again, I would say that we do pop ourselves back up to this area and try to test 429.50. If we don't, what's the reason? Probably a shutdown. But the minute that we get talks revived about, come on, pull it back and give us a reverse head and shoulders. If we get talks that they've come to an agreement, I think would really help the case. Help the upside case, that is. Because even if we put in a higher low, even if we continue down, you would think we should still put in a higher low, right? But look at all the selling that's up here at VWAP. I know CTA models earlier in the week were like 60 billion to sell in a down tape. Don't quote me on that, but Monday. So today's Tuesday, Monday, Friday. This is it right there.
The same question, Kelly. And the deal is this. Remember, throughout a lot of this period, the long end was lower in part because it was banking on a recession. And I'm confused as to why that hasn't happened now. Right. And I think what's happening right now is the long end is reflecting three things. One was, first, it was higher growth. Second was greater issuance. And the third is perhaps baking in more inflation.
I put that in the wrong area by accident. So it's right on that white line.
With his headline, President Biden asked if the UAW should get us
Look at that, guys. Another rejection off of VWAP. This one's a little bit more serious, isn't it? Wow. Like I said, I want to see if we pull it back. And even if we can bring it back down here, give us like a reversal type of signal where we put in a higher low. Right? That's going to be important to where we open up tomorrow. I want to see if we can get down to like 427 something. These calls are still at 29 cents, 27 cents. Man, you probably just had people buy them there. What do you guys think? Should we grab them? Let me get a show of hands in the comments section. Let's see what we got. Yes, no. 427 call for tomorrow. Or, sorry, 432 call for tomorrow. Calls for tomorrow. Hold them overnight. I'm going to leave you guys in control of my destination. I'm gonna leave you guys in control of my destiny. All right, so if we could get the SPY to bounce, we could get Tesla to bounce. That'd be a pretty good process there, because that looks like a nice pattern there with Tesla. Cars going up. Let's check Carvana too. I don't know what the news is. Oh my gosh, no hourly chart, bro. Look at that. Pop, pop, pop. Just like you in Chicago. Get pop. I'm not sure what that means for Disney, that Hollywood news that just came through, guys. Look at that major level on Starbucks, guys. We get a pop back into 93. Gimme, gimme, gimme. I'll take it down to 89, if not 83. I'll take it down $10. I would love that. I would love a bounce back up into there on Starbucks. Some of these charts are nice, and this is going to have to do with the video that I'm going to put out later on this afternoon. There goes the SPY.
Value stocks tends not to be good for value in general because value stocks tend to be more cyclical. So we're going to get on the other side of this at some point. The Fed will stop raising rates and they will acknowledge what I think is true, which is that inflation is going to get down to about 3%. It's not going to get down to 2%, but it is not going up. And when they acknowledge that and when they start cutting rates, which they will, value should outperform.
Are you looking past the auto workers strike? Borg Warner is one of the names that you like here, and you seem to be bullish on autos longer term. Just want to mention,
Listen to what he
the
says.
president, when asked if the UAW should get that 40% wage hike, said yes. So that might add to the extent to which these negotiations drag out.
Yeah, that could be tricky. They cannot afford 40% wage increases. I obviously want workers to get, and they have not kept up with inflation, so they absolutely have reasonable grievances. But the American auto industry cannot handle 40% increases. So we need to get a settlement on this. I think the good news is we will. And when we do, there's a lot of pent-up demand for cars. The number of cars on dealer lots is still way below where it should be. And frankly, Borg Warner is very well positioned for electric powertrains going forward.
That's probably more critical. Listen, are you going to see U2?
I'm my partner and head of my firm, John Rogers, is going to be there opening night. We're very excited about the Sphere. Obviously, the market is now very excited about the Sphere. This was a hated name that has really recovered. People do think that U2 is going to be followed probably by Styles and some other younger rock stars that I would not have as much interest in, but there's going to be a great list of people performing at the Sphere. And I thank you for bringing this up. The stock's done very well. Probably time to be a little cautious about this.
It's up 80% year to date. And I think a classic example maybe of buy the rumor and sell the fact, as literally for those who are familiar with the whole saga, the Sphere opens, I think, right now or this weekend. I mean, it's imminent.
Yeah, and the shows are going to be sold out. Longer term, it's actually more important that the company-owned content, this Postcard from Earth, which is a film that the Sphere produced for its showing to take advantage of all the multimedia experience you get at the Sphere. There's a lot riding on that. If they can sell tickets for $100 during the day in Las Vegas, that could be a big success. If you have to just rely on concerts, it won't be quite as successful.
$100 a day. All right. Charlie, as always, thanks for your time, sir. We appreciate it.
Thank you for having me, Kelly.
Charlie Babrinskoy with Ariel Investments. 2 more days, everybody, until CNBC's delivering Alpha Conference on Thursday. And there's still time to register by using that QR code on the screen or heading over to cnbcevents.com. You know Bill Ackman's going to weigh in on interest rates. Coming up, real estate mogul Don Peebles says one city is about to get hit with a wave of defaults. And when that happens, he's ready to pounce on some properties. If you think you know which one he's watching, you can tweet me at KellyCNBC. We'll reveal it later on in the show. It's a mystery city today, not a mystery chart. And as we head to break, speaking of charts, here's the Dow heat map with only 3 stocks in the green and tech underperforming like Charlie was discussing. Apple, Microsoft, and Salesforce are the biggest laggards. The Dow's down 317, and we're back after this.
Daytrader.com/man.
Welcome back to The Exchange, everybody. I'm Tyler Matheson, and here's your CNBC News update. Fellow New Jersey Senator Cory Booker joined the growing list of lawmakers calling for Senator Bob Menendez to resign. Booker called the allegations against Menendez shocking, with, quote, disturbing details of wrongdoing. 13 Democratic senators have asked Menendez to step down since he was indicted last week on charges of bribery and corruption, his second indictment for such. A Russian court rejected opposition leader Alexei Navalny's appeal against his 19-year prison sentence. Russian state media reported the latest crackdown against the Kremlin critic. Navalny was sentenced in August after he was charged with creating an extremist community and financing extremist activities. Supporters of Navalny say his arrest and imprisonment are politically motivated. The Department of Agriculture expanding free breakfast and lunch to millions of additional students nationwide. The government will now cover meal costs at schools where 25% of families belong to income-based public benefits. The previous threshold was 40%. Officials said more than 5 million additional students will now be eligible for that very valuable program. Kelly, back to you.
Wow. Tyler, I'll see you shortly. Thank you so much, Tyler Matheson. Coming up, housing stocks are down since last Wednesday when the Fed signaled another potential hike before the end of the year, while inventories of new homes are starting to creep back up. What's the real state of real estate? We'll ask billionaire developer Don Peebles about that next. Welcome back to The Exchange. Is more trouble brewing for real estate? The 30-year fixed mortgage rate now sits above 7.5%. Commercial defaults are on the rise, and credit across the sector is tightening. Diana Olick is here with the latest housing data. With the XHB ETF now in correction territory from its highs, Fannie Mae's chief economist Doug Duncan has more on the slowing housing market despite the run-up we've seen in home builder stocks. And real estate magnate Don Peebles is here on set with me to weigh in on all of this, including where he is seeing the most opportunities right now. Diana, let's start with you.
Okay, Kelly, we got a read on sales of newly built homes in August this morning, and it missed expectations by a lot. Sales fell nearly 9% month to month, although they were nearly 6% higher than August of last year. The median price of a newly built home did come down 2% year over year. I would note that that median shifts not only because builders may be lowering prices, but also because more homes on the lower end of the market are selling than on the higher end. And all this ties, of course, into higher mortgage rates hitting affordability hard. The average rate on the 30-year fix started August in the low 7% range and then took off. Today, it's at 7.5%, according to Mortgage News Daily. Builders have been buying down interest rates to help potential buyers, but there's really only so much they can do, especially because some buyers are no longer qualifying for the loans at these higher rates. Builders are also up against much higher costs for labor and materials. They had been benefiting from the extremely tight supply of existing homes for sale. That supply is not getting any better, down 9% from a year ago. As a result, home prices continue to rise, now up 5.75% from a year ago, according to Parcel Labs, which measures prices daily. And it does seem counterintuitive that prices would rise with higher mortgage rates. Usually high rates cause prices to drop. But this is a very unique supply and demand situation, Kelly, as we talk about all the time.
And that little nugget about how now we're up from 7 to almost 8 months of supply in the new housing market because the pace is so slow. I mean, that does matter. We're not down at the 3 and 4 month supply levels that we were in when the market was much hotter.
Right. And the builders, they do have a lot of supply coming on. In fact, we saw the number of homes that have been sold but haven't even been started to be built yet rise in August. And that's an always interesting little tidbit number inside the report that I love. It just shows that they continue to get demand, but they're still not building at the levels we'd like to see and clearly not selling at the levels either.
Yeah. Diana, thank you for now. We appreciate it. Diana Olick. And my next guest warns that the recent rise in mortgage rates will test the resiliency of all those new home sales. And he's forecasting fewer than 5 million total homes will be sold this year. That's the fewest in 12 years. Joining us now is Douglas Duncan, Fannie Mae's chief economist. And we're by real estate pro Don Peebles, chair and CEO of the Peebles Corp, to weigh in on all of this. So welcome to you both. With you, and I think it's important, especially for on the strength of the home builder index, to understand that the housing market, you would describe it, quite slow.
Yeah, it's a tough market. If you're a realtor lender, you're feeling like this is a serious recession. If you think about it, we homes at an annual pace, or 4 million homes at an annual pace. That's roughly a third drop in the business in your industry. So when you put on top of that the disappearance of the refinance business, it's feeling really rough for the mortgage.
And I guess sort of on to that point is the question about whether the strength we've seen in the pockets of home building and for the stocks that we've been following can continue, because as rates go higher, you're saying it's all the more important they continue to do buy downs or something to make this more affordable.
Yeah, what's unusual in this environment is typically housing is, if not the most interest rate sensitive, one of the most interest rate sensitive sectors. So when the Fed starts raising rates, typically construction starts to slow. That's the first part of the cycle. And then that's followed by sales on the way down. In this environment, because the boomers are doing what they said they were going to do and aging in place, and because the Gen Xers have locked in 3% mortgages, it's really all on the back of the builders to increase supply. So this has been a pretty good market for them, surprisingly, even though the rates have been rising. Demographics are in their favor, and the slow supply suggests it's going to be the builders that are going to be adding to supply and trying to eventually equaling things out between buyers and the sellers.
And so, Don, if I may put it like this, would you still be bullish on the home builders, and in spite of or because of everything that we've seen? And what do you think happens with residential real estate at this point?
Yeah, look, I think that the future is still positive for home builders. What's happened is the overall fundamental of real estate, the very simplistic fundamental of supply and demand, is holding strong. Anyone who wanted to buy a home or refinance pretty much had done it by the time interest rates had moved up. And so you have to have new buyers coming in. People who are going to
I was playing with little
trade
turkey
up
butt.
are not trading up anymore because they've got lower interest rates.
She
But
ended up coming.
income's going up,
Coming
and
back
interest
here.
rates
Oh
are
my
going to
God.
stabilize. you'll see them pull back next year a little bit, and there'll be a shortage of inventory because most people
I
who
was
have
looking at
an
these
interest
calls,
rate of
they're at
2.5%,
18 cents, 17
are
cents
not
now.
going to sell their home
Wow.
because there's a
There's
lot
the
of
second
value
leg,
in
guys.
that low rate interest rate.
Are you bullish
There's
on
the second
multifamily?
leg.
That's the one area when we spoke to Willie Walker yesterday where he said, you know, and we've
What
heard
time
this from
did it
banks,
start?
but we
1
also know
o'clock?
there's an apartment glut in a lot of the country that's potentially
I mean,
forming. So is that
pretty clear that
an
there
area
was
that's
weakness.
attractive to you on the development side or no?
Well, I think it depends on where. If it's New York City is still supply constrained. There's a significant demand for housing, both workforce, affordable, and market rate upscale housing. What's going to hurt the apartment building sector is interest rates, especially on existing assets that have been purchased based on prior interest rates and have been bought at 3.5%, 4% cap rates.
Right.
Those are going to have a significant amount of stress as the interest rate swaps burn off, and they have to pay real interest rates. And I think, and there's nobody to refinance with right now. And I think that's
what's going on here.
disconnected,
Doug, let me ask you as well about
reconnecting?
one
Why
thing
would
that's
it
creeping into the
disconnect?
market. We spoke with a company called Rome, ROAM, that's trying to kind of match people to assumable mortgages. In other words, you know, saying for some of these properties, and this applies more to FHA and those kinds of pockets of loans, that when you buy the property, you could potentially assume the lower mortgage rate that comes with it as well. Could something like this ever go more mainstreamed, you know, across mortgages and existing homes of almost all types?
Well, they could, but it's difficult when rates change by a significant amount in a short time period because, of course, you need to make the mortgage holder whole, given the change in market rates. So while it's been out there for a very long time,
So like I said this morning,
particularly in the FHA
Meta.
category, you haven't seen a lot of action.
Wouldn't that
in
have been a
space,
great
simply because
sell?
the rate
Selling
rise
the
was so
305 calls, you're
significant
getting
and so
300 bucks.
So in other
Or
words, in
no,
order to
yeah,
make them
you were
whole,
getting
that means
300 bucks.
That means that if they
let's
have
go to Meta,
the existing
and it was the 305
mortgage
calls.
is 3%,
305
and
calls,
the market
guys.
rate
305
is
calls, guys.
6%,
305
you're gonna have to
calls,
make up
guys.
some differential.
So they're down to
for
250. And it will only keep going
value for that
as this
seller.
market trends lower.
so certainly with the way that prices have been too.
Which I'm going to look to
It's a challenge.
possibly
Douglas, thanks so much for joining us today. Appreciate your time.
A short or
Good to be with you.
sell a
Douglas
short.
Duncan, chief economist at
'Cause
Fannie
I gotta
Mae.
make something
Let's
happen,
turn
so
now
I
to the
may-
commercial
I may
side of
sell
things, which is
some.
facing its own share of
I might
headwinds
sell
with
some
rising
305
rates.
Meta.
Don, before we
Man, I
talk
wish
about
I
some
did
of the
it this
opportunities
morning,
there,
though.
first of all, do you think the full brunt of these headwinds has yet been felt, including just insurance and other costs that are getting more and more attention, like in the Wall Street Journal today?
No, I think right now there's a lot of kicking the can down the road for commercial office buildings, for example.
I
think
go
there's a
for
lot
it.
more stress coming there. Much more stress coming in the apartment sector
Is there?
because of the nature of how those assets were purchased. I mean, the market as a whole ran.
I think I may
towards,
just go
or
short
investors
Tesla
ran
now.
towards apartment buildings.
Even
because
though
they
the
thought they
market's
were
on the
safe.
lows.
People were going to pay their rent. People
I
were
wanna see if
paying
we can
their
get
rent.
another- if
and
we can get a
and it
gap
was a
down.
dependable income stream. What they didn't bank on is if you buy
what
something
did we
at
get?
3.5%,
So yesterday
4%
was
cap rates,
Monday.
you're
We had
making a
somewhat
bet
of
that
an
interest
up
rates are
day.
gonna pretty much remain
Friday
historically
down
low.
day,
They are
Thursday,
not now.
Friday.
And what's happening
Monday
is those
was
investments
flat.
are upside down,
And then
wiping out equity.
today
and
down.
beginning to take inroads in terms of depleting the value of the mezz debt. And so ultimately, there's going to be a lot of stress there as well.
Which is awkward if people were hoping apartments could bail out the office sector. Not that the remodel of those buildings is easy, or that a lot of people are signing up to do that either.
Well, I think there's an opportunity there. We're getting ready to launch a strategy in that area to convert office buildings into apartments, into hospitality, and into some affordable housing in various parts of the country. I think that there is an opportunity for that. You have to reset buildings, though. Buildings, I mean, you cannot take a 300, 400 unit apartment building in New York City or Washington, D.C., where there's some forms of rent control, and raise the rents in 1 year. So, but you can take a brand new building, reset the rents to what the market is at this point in time, and then also take advantage of some of your cost basis. I mean, converting an office building into a apartment building under the right circumstances will result in a much lower cost basis than, say, an investor who purchased an apartment building in 2020.
Absolutely. We were talking or sort of teasing earlier that there's kind of one city you're watching that you expect a wave of defaults, and if so, you're going to pounce. Which one is that?
Well, I think San Francisco. San Francisco's, in fact, when I was on the show a couple months ago, I thought San Francisco has a lot of opportunity going forward, and it's beginning to happen. The buildings are going back. They're being sold now. And so I think that's the first to come out because it's gotten the worst. I think New York City has to get a little worse, and it will. And then I think there'll be opportunities there. Washington, D.C., though, is the real hidden market because the federal government leases over 40 million square feet of office space in Washington, D.C., and occupies another 25 to 30 million. And they're at the peak attendance in their office building is 25%.
So what's going to happen to all of that real estate?
Well, those government leases are long-term leases, and investors always look at them as like bonds. However, they're the fine print. They're all subject to annual appropriations.
Oh, geez.
Congress is getting ready to close down the government. They're ultimately going to be looking for places to save. It makes they wouldn't cancel leases or not appropriate if the space was occupied.
Right.
But if they're sitting at 20% occupancy, then they're going to start canceling and consolidating. So there's going to be tremendous stress, in my opinion, in Washington, D.C. for these government buildings. And then, of course, the businesses and the professional services firms that do business with the government, you're going to see some contraction there. So I think D.C. is probably going to be worse than San Francisco in many regards in terms of office fundamentals.
Wow. Okay. With that kind of bombshell for people to contemplate, what about we've just sort of two DC things I want to quickly ask you about. The one is the shutdown. I don't know if beyond that, if you really make much of what's happening or if you're hyper-focused on any aspect of what looks like it's going to be a drawn-out fight for years to come over the deficit and debt levels.
Look, I'm from Washington, D.C., and I started our company in Washington, D.C., and have done business there for almost 40 years. And they've had shutdowns, they come and go. They're political stunts by and large because they're brinksmanship. And what happens is we're in a very highly polarized political environment. And so you're going to see Congress, kind of continue the battle. So I think we'll see a shutdown. I think it'll be short-lived. And I think the reality is the government needs to cut its spending. It cannot continue to rely upon all of us to fund some of these absurd expenditures. And so I think they're going to have to prioritize, like all of us have to do in our households and our businesses.
It's going to be tough.
Revenue's down, we got to prioritize.
So then what do you make? The president's out on the picket line right now, obviously. The UAW strike is one of many that we've seen across the country. What do you think as a business owner watching it all play out?
Well, as an American, it's a very bad move for the president. The president's the president.
To go to the picket line?
Yes. The president's the president for all of us. And this is a capitalistic democracy, and the pillars of our democracy rest on capitalism. And therefore, he has to be supportive of all of us. And what he should do is, like every other president does, is relies upon the private sector, the business, and the workers to work together to come up with a common sense solution. He panicked, and his people around him panicked because Donald Trump is coming there tomorrow. And so what he did is he broke presidential protocol, and he is showing up there to walk the picket lines. It's not presidential. It's not what leaders do. And it's a mistake. And I think at best, it's pandering, and most likely it's desperation because I think his numbers are plummeting.
What does it tell you, though, that President Trump was on his way out there, Michigan being a key swing state and the UAW not having endorsed Biden, and so, some of its members obviously had been voters for Trump, but they're not. It's not monolithic. Is it unseemly for the former president to show up out there as well?
Well, he's not going to the picket line, frankly. He actually, look, I'm a Democrat and generally support Democrats for president. He made a smart strategic decision. He's speaking in Michigan, in Detroit, but not at a picket line. He's speaking at a supplier facility, and that's different. And the UAW wanted to endorse Bernie Sanders anyway last time around. Michigan took Trump to the promised
Tells
land
you everything you need to know about the UAW. Are you kidding me?
Again.
UAW, Bernie
so
Sanders.
he's going
What?
there now to try to fight
What
that
the
off.
fuck has this world
And
come
at the
to?
end of the day, Trump's more appealing
What
more
has
towards the
this
workers.
world come
Biden's
to?
trying to appeal towards the UAW to endorse him.
Oh
not flirt
my
with Bernie
gosh.
Sanders. But the challenge he's got is that many Democratic donors are very concerned and looking for somebody else.
Please, I
many,
want to know why they would go to Bernie. That's okay.
Democratic
Like,
power
I want to
brokers
know
and
what Bernie,
Democratic politicians
what's
want an
Bernie's
alternative.
view
And Biden's trying to reassure people
that would
if this goes
want
wrong
that
for
make
him,
them
it
go
digs his
there.
hole deeper. And if it works out for
Other
him,
than
maybe it
whoever's
stops
the
the
new
bleeding.
person
But it's
putting a
not
personal
presidential.
political
He
view
should
on-
never have done it.
on
no one
things.
has
That's
ever
crazy.
done this.
I can tell you right
no
now,
sitting
some of the
president
shit
has
I've seen
ever done
Bernie
this. And
say
he shouldn't
and
have done
do.
it. And it's a mistake for him, but it's a sign, I think, of desperation But it also perpetuates this class warfare that somehow billionaires or successful entrepreneurs are bad people and the workers are good people. In reality,
You should
we're all
send
trying to make this
Ron
country
Paul
better,
over there.
and most
That's
of us
what we should
started
do.
in humble beginnings like I did.
Well, I think
You know
a
what
lot
Ron
of
Paul
protocols
would
have been
do?
broken.
He'd
Over
say,
the
let's
last
do
couple
it.
of years and presidential
He'd
cycles.
get
this
the
being one of
workers
them.
on one side
Don,
of the
thanks so
table,
much for joining us.
the
Share
other
your thoughts
people on the
across so
other
many
side
of
of
these
the
topics.
table.
We really
He'd probably
appreciate
get
it
rid of
today.
the union
Don
leader, so
Peebles,
you go
chairman
out of
and
here.
CEO of the People's
What do
Corp.
we want?
Dow's down more than
Okay.
400 points right now.
Well, we'll
Let's do a
give you
quick
this.
market
This is
check
what
at
you
session
want.
lows
This
for
is
the
what
major averages,
we would
with
like
the
to give you.
Nasdaq
We'll
down
meet in the middle,
1.5%
vice
as
versa.
the
He'll let
slide
them
has
work
been
it
in
out.
since July really continues.
Right, he'll let process.
Still to come, if
he'll
household
let due
debt is still
process
reasonable by
play
historical
itself
levels
out.
compared with income, why is one major firm sounding
He also,
the alarm
he's just
on
not.
credit losses at
He's
the
a
department
realist.
stores?
You know what I mean?
We'll have more on that coming
He's not
up.
going to sit there and say
take a
they've
look
had
at
record
shares of
profits, blah, blah, blah.
Amazon. The
It's not about the
FTC,
past.
along
We're
with
talking about the
17
future.
State AGs suing
First off.
Amazon for illegally maintaining monopoly power using what they call anti-competitive and unfair strategies.
And what
Shares are down
are you really
3.3%.
wanting them to go
FTC
under?
Chair Lena Khan will
You
join
know,
Squawk
it's like
Box tomorrow, 8:30
they're giving a
a.m.
20%
to defend
raise
and
to
discuss
everyone.
that suit. Don't miss it.
Over the course of what, 2 years? I mean, 20% is not much. But the problem is like the fact that the president continues to believe in his ways that, you know, he can just spend. He can just. He's the big cause of the inflation. I'm telling you right now. COVID is the bigger cause. Yes, COVID is the bigger cause, but the continuous spending. There was no COVID when Joe came in office. You can do the testing and stuff like that. This is not like, let's just pass bills because we're shutting cities down. No. I mean, this is all my personal opinion. But when you give $300 checks every week, which is starting up again, what? Why are you just giving people $300 for kids? I want to know. Why? What about the people that don't have kids? Because those people already get a tax break. What about the people that don't have kids? That aren't married, that are single? That's the person who's actually struggling. The single individual. The person that doesn't have 2 different paychecks coming in. The person that's got to buy a house on their own. Right? Person that's got to pay rent on their own. They don't have a sibling. They don't have, or not a sibling, but they don't have another half. Right? I don't know. That's just my thought. I mean, they're the ones not getting the tax deductions. And they don't have kids because they can't afford kids. Right? Does that make any type of sense? Am I sounding crazy here? All right, let's do this, team. I want to get into Tesla. Like, I'm really thinking about, like, I want to know where we can pull this in at. So I'm going to do a little bit of work here and see what I can't come up with. I don't know where this is going to stop. I really don't. You know, 425, 420, you know. The fucking move's already done. I should have just got short a long time ago. Kicking myself in the ass for not getting short yesterday. We got 3 days left in the week, 3.5 more days left in the market, so we got to make the most of it.
Com.
Welcome back to The Exchange. We've been homing in on various economic pressure points in the economy this hour. B of A Securities raising a red flag on one particular consumer segment, the department stores, lowering their earnings estimates and price targets on Kohl's and Nordstrom, citing a weakening consumer credit cycle, cutting their Kohl's 2024 outlook by 11%. As delinquencies tick up, she said, which the firm expects to turn into charge-offs. In fact, B of A now expects credit revenues at Kohl's, Nordstrom, and Macy's to fall below pre-pandemic levels. For more here, let's bring in Lorraine Hutchinson, retail analyst at B of A Securities. Lorraine, welcome.
Thanks, Kelly. Thanks for having me.
I bet to you this seems fairly obvious and straightforward, but the market's reacting like, did you see these headlines, right? I mean, you're just connecting some dots for us.
Yeah, look, I mean, I think what's underappreciated is that department stores last year generated about 60% of their income from credit card fees.
Wow.
So it's a very important income stream for the department stores, and I think that makes these risks of delinquencies really stand out to us.
Let me just repeat that for emphasis. Department stores last year generated 60% of their revenues, more than half, from credit card fees, not from selling clothes and shoes and other things.
That's exactly right. And we really see two risks to that revenue stream. So the first, as you mentioned, is delinquencies. We saw charge-offs for the industry overall rise in August versus pre-COVID for the first time. So as those charge-offs, the delinquencies move to charge-offs, we see some real risk to 2024 earnings, and our estimates sit about 20% below consensus for the group. That's the first issue. The second issue is regulatory concerns because the CFPB has proposed a rule that limits late fees that credit card companies can charge the consumer. That's a whole different risk and much harder for us to really figure out because we have very limited disclosure. We've run some scenario analyses. We've
That's
gotten
awesome.
to earnings risk of high single digits all the way up to 60%. So there's a real lack of clarity here, but I think it limits the potential stock appreciation of the group until we really have more clarity on this issue.
So tell me why, and this is a very dumb question, I apologize. We're not in recession right now. Why would credit card revenues at these major department stores be declining so much next year?
So look, some of them saw some nice increases after COVID. The consumer credit profile was excellent. The consumer had a lot of extra money and they were paying off their card balances. So in some cases, we saw consumer card revenues actually rise nicely above pre-COVID levels. Now we're not only seeing that unwind, but we're seeing rising delinquencies come in and affect that. So that's the first issue. The second issue is for the department stores, their revenues, so revenues actually selling things to people, are well below pre-COVID levels as well. So if the customer is spending less on the card because they're spending less at the department stores, that also has a negative implication for this credit revenue stream.
I mean, I hear what you're saying, and I'm like, sell. I don't even know if you have a sell, but it feels like it's not even strong enough. Like these companies are they in like existential crisis here?
Look, I mean, we have underperform ratings on the whole group. We have for a while. And the reason for that is twofold. The first is this issue with credit that we've been watching and tracking for many years. And the second is we do see some structural challenges to the industry overall. We don't think the younger generations are flocking to department stores as their primary shopping mode like prior generations were. So we do see some downward pressure on sales over the next several years. And those two factors are really the primary reasons for our underperform ratings on all three department stores.
All right, Lorraine, thanks for joining us today. Again, to read more, Lorraine Hutchinson's note from Bank of America with more on the impact to Kohl's and Nordstrom in particular. Thanks so much for your time. We really appreciate it. That does it for The Exchange, everybody. For more thoughts on the markets and the economy, you can sign up for my newsletter, one easy step at cnbc.com/newsletters, or just scan that QR code. Next on Power Lunch, with the NASDAQ underperforming again, Victoria Green tells us the big tech names she'd still buy right now.
Looks
Tyler
like
is getting
Citibank,
ready.
guys,
I'll join him
also.
on the other side of this break.
It's probably just a flush.
sheet.
Welcome to Power Lunch, everybody. Alongside Kelly Evans, I'm Tyler Matheson. Coming up, President Biden joining auto workers on the picket lines today in Michigan. Former President Trump holding a rally there tomorrow. We're going to assess the political and economic impact of the strike as it shows no signs of ending anytime soon. Plus, day 2 of our Powerhouse road trip. Today, we head to another hot under-the-radar housing market. That would be Dayton, Ohio, home of Courtney Reagan. Interest rates jumping above 7.5%. So how are those rising rates playing out in the marketplace, Kelly?
Excited to find that answer out. Hi, everyone. Let's get a quick check on the markets with the Dow just off session lows. We were briefly down more than 400, down 360 for the blue chips, down 1.3% for the S&P to 4282, and the Nasdaq, the laggard, down 1.3%. As you might imagine, big tech names are leading the way lower. Amazon, Google, even Oracle seeing 2 to 3% declines today. We'll have more on that trade coming up. And also on the housing front, another weak number out today. New home sales down 8.7% in August. The home construction ETF down nearly 9% just this month. And a big biotech mover to tell you about as well, Immunovant soaring 90%. The company's drug succeeding in a trial and giving hope it could be an effective treatment to many autoimmune diseases. Ty, again, ticker IMVT.
All right, Kelly, thank you. And as we mentioned, the auto workers strike heating up and getting more and more political. President Biden joining the picket line earlier today, and we sent 2 of our best there as well, Phil LeBeau and Brian Sullivan. So, Phil, let's begin with you. Give us the latest developments. Tell us where things stand.
About a half hour ago, the president wrapped up his trip to a GM parts and distribution center not far from here in Belleville, Michigan. This is what it looked like as the president was greeted by a number of UAW members who are walking a picket line there. I wouldn't say the president walked a picket line. It was more a case of him meeting those who were on strike.
Look who joined us.
Her
hasn't been in here in a while.
To give back. And then there's some
See,
video
look
that's
who
making its
joined
way on
us.
Twitter
Did you
of
come
somebody
to join
saying,
and hang
hey,
out with us?
should the
You
UAW
haven't been
members
up in here
get
in
a
a while.
40% raise? It
Did you miss
appears,
us?
he says, yes. Though
She's
it's
been
not
sitting
the
out in the
cleanest of
living. She's been
audio.
out. She's been
I'll be
out there.
curious if
She's
we
been.
see the White House
Here, I
walk
can
that
move
back.
it.
Here's the
I can
president
move it in
talking
this
about
spot.
how it's time for the
Oh, don't
automakers
fall,
to
baby.
give back to the workers who have made
Don't fall.
sacrifices about 13 or 14 years ago.
Wall Street didn't build the country. The middle class built the country. Unions built the middle class.
What does this have to do with Wall Street?
So let's keep going. You deserve what you've earned, and you've earned a hell of a lot more than you're getting paid now.
What about you, Joe? Can you
What's the
say that?
reaction of the automakers? We
Can
have
you
heard
say
from
the
Ford
same for
saying that
yourself?
Ford and the UAW
Huh?
are going to be the ones to solve this by finding creative solutions.
He says
to
Wall
tough
Street
issues
didn't
together
build
at the
it.
bargaining table. We have a shared
Neither did the
interest in the long-term
politicians.
viability of the domestic auto industry, the industrial Midwest,
Like,
and good-paying
it's
manufacturing
just funny.
jobs in the U.S.
Because he can look at
As
Wall
you take a
Street and
look
like say
at
those
GM, Ford, and
type of
Stellantis shares,
those
keep in mind
things.
that a big
Yeah, we
concern
can
people
turn around and
have
say
is
the
what's
same
gonna
thing
happen
about
to the
him.
inventory now that you've got 3 final assembly plants shut down. These are not
He didn't
super
say
high-volume
he didn't
vehicles.
say
They
Wall
are
Street
important
didn't
to the
build the
automakers, but
America
inventory
when
levels, according to J.D.
him
Power,
and Janet
they have not
Yellen went to
changed.
New
They're
York
roughly the same as where
to
they
meet
were
with
on Friday the 15th.
with all them
that's where we
people
stand
and
as
walk
the
out
president is gonna be
with a
wrapping up
shit
his
ton.
trip here to
I'm talking
Michigan.
hundreds of millions of
Certainly
dollars to be able
fired up the
to
UAW members who
campaign,
believe that
put a
this
little in
is-
the pocket,
can't do
pay the
anything
electric
but help
bill.
them in their cause, Brian.
Yeah, and we're going to be doing
I think
last
what?
call tonight, 7 o'clock live.
It was
the
like
entire
70
hour
million
from
or
here. There's obviously
700
other news out
million
there,
when
Tyler, but
Janet
this is gonna
Yellen
be our
walked in
focus.
with some
Phil's
of
been
the
doing great
CEOs
reporting.
like
It's critical
BlackRock.
to
And,
America as well.
I think
you can see
it was
it, yes,
Ken.
a lot of support.
I forget his
a lot of
name.
horns being honked. By the way, Tyler, we tried to get to that
But-
GM plant, our side, and we ran into the president's motorcade almost literally and figuratively. If I told you it was 100 cars long, I'm not exaggerating. I posted video to X as well. We tried to get closer, kind of blocked off. Very heavy security presence here as well. Maybe the president will come to this facility, we're not sure. But Phil and I are going to kind of double team it tonight. And I did have a question for you, Phil, which is, we talk a lot about that 40% number, okay, the 40%. How would let's say they get it. How would a 40% raise work? Is it all up front? Is it 10% a year over 4 years?
Well, it's 4.5 years, goes through May 1st of 2028. That's the proposed contract. It would likely be 20% right off the bat, and then 5, 5, and 5. That's how they plan to structure it at this point. But let's be clear. The automakers at this point are offering approximately 20% or 21% over 4.5 years. So there's still a huge gap in terms of simply the wages, and then there's a whole bunch of other issues, wage tiers, cost of living adjustments, etc.
And some big news today, this morning. I saw you covering it earlier about Ford, and I'm using air quotes if you're listening on the radio, pausing work on a $9 billion battery plant joint venture north of Detroit with China. Tell us about that. That seems like a really big story.
It is a big story, and Adam Jonas just put out a note from Morgan Stanley not too long ago saying he wouldn't be surprised if we start to see more OEMs, that's GM, Ford, and Stellantis, pausing their investments, not because of the UAW negotiations going on, but just because there is a moment here where they have to analyze, okay, can we do this competitively, which is the word that Ford used. Ford used the word, we have to assess if we can competitively run this facility. What does that tell you?
That's a trigger word.
And the UAW put out a statement minutes later saying, here we go. You're trying to shut down a plant before it's even open. This is another case where we want to transition to EVs. You've got to work with us. Clearly, that's a sticking point between the UAW and Ford.
Well, been standing here a little bit, not as long as you. Haven't seen a lot of EVs roll through. But Tyler, we do have a big show tonight. We've got Michael Moore on. I wish he was going to.
He's got a lot to say.
Roger and me, documentary maker. I wish he was going to be here in person. We got some Congress folks. I'm going to wade off into the crowd. I'm going to drop the name of Phil LeBeau, so I'm protected to go talk to some of these strikers behind us here. Try to get the voices, not only tell the local story, but the national story as well. Because Tyler, the longer this goes on, University of Michigan said if all three strike in a big way for 8 weeks, it could result in over 1 million jobs lost across the United States. We're a long way from there yet, Phil.
Oh, yeah.
But that's a Michigan estimate. This doesn't seem like we're getting any closer.
I don't think we're closer.
Looks like Tesla wants to break, guys.
Do you think we're going to see a solution by Friday? I would say no.
And I listen to him.
Yeah, well, always wise
I would
to
like
listen
Tesla
to him.
more
I am
at the
telling you,
50-day moving
seeing you
average,
and Michael
though.
Moore wrestle it out tonight is worth the price of admission. It's free, folks. Tune in. It's going to be awesome. You really can't overstate, can you, gentlemen, the political importance of what's going on in Michigan right now. Today, the president is there. He has clearly put his stake in the ground on the side of the UAW. Former President Trump is arriving tomorrow for a rally, and he last week was extremely critical, among other things, of the UAW and its leadership. Who would like to pick up on that?
Well, we were just kind of, you saw us do the, I'll pick up on it because I was in Grand Rapids, Kent County, Michigan, during the 2020 election. We were there for actually 3 days. And Kent County, Michigan, you could argue is one of the 5 most important counties, not in Michigan, but in the United States, because it tends to move like Erie County, Pennsylvania, Kenosha County, Wisconsin, with the elections. I'll give you the example. Donald Trump won in Michigan, the state of Michigan, by 0.3% in 2016. Joe Biden's margin of victory, a little bit wider, about 154,000 votes in 2020, but not by much. You could make the case, Tyler, that aside maybe from Georgia now, Michigan and Wisconsin are 2 of the most important, that was loud, 2 of the most important swing states in the United States, and the vote and the endorsement of the UAW will be critical to that. And the UAW, and correct me if I'm wrong, has not given its endorsement yet.
They haven't endorsed anybody. And let me be clear about this, because I've heard from people, friends and others who have, texted me and so forth, and they've said, well, yeah, that's, they're all Democratic. They're going to go for Biden.
No, they're not. No, they're not.
Talk to the rank and file here. A lot of Trump supporters here. Look, some have said it's about 25 or 30% Trump supporters. I don't have anything to back that up. But I can tell you this, when you talk with them, sure, there are people who are appreciative of Joe Biden being here today. But there are a lot of people who are supporters of Donald Trump who are out here picketing.
I went to, Tyler, I'll give you a quick anecdote. Went to a place called Steve's Coney Island. They have Coney Island, don't call it a hot dog. Just about an hour ago, about 3 miles from here, the Ford guy came in, had the Ford shirt on. I was trying to talk to him about what we saw at the motorcade. And he said, I got no time for that blank. And you can fill in the blank. So to Phil's point, they lean Democrat, but this is a different kind of Democrat.
Yeah, I would agree with that. I would agree. And look, the rank and file, it's not a lock hold for the Democrats.
Yeah, it's
at
not
all.
a monolith anymore. The UAW and labor generally is not a monolith by any stretch of the imagination. Gentlemen, we'll be continuing our coverage during the day, and then, of course, tonight, Brian, on your program at 7 p.m. Eastern Time, live from Michigan. Phil and Brian, thank you.
And as the president, as you can see, that news headline appeared to say yes when asked if the UAW should get a 40% raise. That headline nearly an hour ago could have been what pushed us towards session lows. We've recovered, but the September swoon is in full effect as the major averages continue adding to those recent losses. The
Why is
Nasdaq down more
so
than 6%
Joe
this
screams
month,
from the rooftop that
9%
inflation's
off of the high from late July, almost in correction
coming
territory,
down?
even with a still 25%
Why should they have to
gain
get
on
a
the year.
40%
Microsoft,
raise
Apple, and Nvidia having
if
the biggest
inflation's
impact
coming
on the
down?
Nasdaq. Nvidia down nearly 15%
It's pretty clear
in
that
September.
inflation's
But our next guest
not
remains
coming
fully
down.
invested into
People
the end
can't
of the year.
afford
Peter Anderson
to
is
live,
Chief Investment Officer
and
at Anderson
I'm not going to
Capital
say have
Management.
basic necessities.
You're not in
but
those stocks, are you, Peter?
afford to live.
Yes, I
mean,
do
when you
own
break
Nvidia,
it down,
and I've owned Nvidia
everybody's
since,
trying to break you
almost
down.
the day I was
From
born,
toilet paper
frankly.
to
So,
toothpaste
I've
to
been through
this
some
and
rough
that.
times with
Go ahead,
Nvidia
go buy a
in the
little
past,
$1.50.
and, this is
You know,
no
go buy
different from
50
those
cent
past
dollar
rough times.
toothpaste
You
and
have a
see
kind
what
of a Warren
happens in
Buffett
10,
punch card
15,
approach
20
here. Why
years when
not
you got to
sell
buy
at some
new
point
teeth
and
and you got to
go,
pay
okay,
30,
it
40,
truly
50
can't get any
grand
better than
to
this.
get new teeth.
Well, I think you
All
have to
right, so there's
focus
that.
now on
You can get
interest
the one
rates
ply
and this whole narrative about higher
toilet paper.
for longer.
You could get a second
And
job.
I've actually switched that
You could,
to
like I
higher
said
forever
earlier,
because I think
a lot of people should
mortgage rate is a
attempt,
equilibrium
at least
rate.
attempt
It is just that we've
to
kind of
use their
forgotten,
spare
Kelly,
time
prior to
and
2007,
to
those of us that
have
were
their own
around
business of
before then,
sorts.
you know, interest
'Cause
rates were higher
especially
then,
if you're
and we
single,
still
it's
have
not
market
enough
rallies, and
to just get
technology can
by.
still do well
Going
in
to
a
work,
higher
just
interest
showing
rate,
up
despite the
to a
mathematics
job
behind that we've heard
to
ad nauseam
exchange
about
your
higher
time
interest
for a
rates,
check.
Peter, let me
present
just-
values discount the
You know,
stock
for the
price.
most
glad you
part,
brought this up
depending on
because
what it is
if
that
you
you
said,
do,
well,
if
you
you're
know,
like a job
20
like
years
this,
ago, interest
where all you
rates
do
were
is
at this
show
level,
up and the
20
job's
years ago,
pretty
we
much
almost had a
done and you're
budget
not an
surplus.
engineer,
And the
like
budget
you don't
picture
have
couldn't be worse right now. I
any
don't really
brains.
understand how it's going to get
I'm not
solved.
saying that
Does
people are
make this
stupid,
time
but,
different?
like,
because we could potentially have
you know,
kind of yields spiraling for the wrong
It's
reasons
not-
and for reasons we haven't really had to confront
it's
before.
not going to be enough.
Well,
and
I
that's
think
the fact of the
path
matter.
that we took to get
Right?
here
If
is
somebody wants to make
extraordinarily
money,
different. You know, when you,
you know,
look at the
dig
history
deep.
of
Who makes money?
interest rates
Doctors,
and
lawyers,
stock market performance,
real
et cetera,
estate.
you
Real
know,
estate's
these
crowded. You
past
could always do what
COVID
you want. Doesn't
years
matter if it's
were
crowded or
something
not.
that no economics
Right? Doesn't matter
textbook
whether
is gonna
it's not
prepare you
if there's
for.
a
So it
demand
is
or
different
no
this time,
demand.
but we
you
also
know,
have to
that
have
doesn't
faith
mean you
in the
shouldn't go
fact
do
that,
something.
You know, it's risk and return. Companies that are going
ghosts are
to
back.
achieve excellent results regardless of what the interest rates are. I mean, I was joking with a friend the other day saying, do you think NVIDIA, for instance, in their C-suite, do you think they ever talk about making investment decisions or corporate decisions based on what the Fed said at the latest press conference? I don't think so, and I hope they don't. But that gives us a little bit more of reality about, you know, the balance of this. We have to focus on the economics, but it isn't all we need to focus on.
Let's talk a little bit about the persistence of higher rates. I mean, you and I are certainly seasoned enough, note my word choice there, seasoned
Very
enough
good,
to
yes.
remember when a 6 or 7% mortgage rate didn't seem all that outre. Now it does. What is the effect there long term if rates settle at these higher levels, inflation settles at a somewhat higher level than the Fed's 2%?
I've thought about that a lot, Tyler, and at first I'm thinking, well, you know, if that is the equilibrium rate that we've had in the past, so be it, and we can have economic rallies.
What I'm
However, I
doing
do
is I'm
think
looking
the
at
impact
Tesla from
is
two different
on
directions. I'm looking at
residential
it
real estate.
from the short
You know,
side
when
and
you
the
were paying
long
a
side.
7 or 8%
So if I
mortgage,
wanted to be long,
you didn't mortgage as much
I would
as
say,
you would
all
have
right,
to now.
I want to
So
say
think it's
that
going
this
to
is
cut out
level.
a lot of lower income people that just will not be
You
able to
know,
afford the payments.
It broke.
So that's the
It
main
came
thing.
back.
But other than that, I think
It
companies
regained
will
it.
chug right along.
Right?
I think
It
we will
never
see
retested. It
more
never broke
acquisitions,
through
more M&A
and
activity.
back to rally
Again,
higher.
with the idea that I imagine in
So,
the C-suite offices, they're
it's a
not talking
break,
too much about,
pulls
gee,
back,
should we
pulls
postpone this
back,
acquisition because rates
goes,
are at 7 or 8%?
and now it's pulling back.
I don't think that that's happening.
Is that a
I think
failed
it's
break
more
higher?
based on the
Quite possibly
strategic
could be.
analysis of companies
I don't know
combining
what's
with each
going on
other
with
and
this
the
thing.
outlook for the products, frankly.
Peter, as always, great to see you. Peter Anderson, we appreciate it.
Thank you.
All right, as stocks sell off to end this month of September, just a couple of days left, bond yields moving lower too, pulling back from their near 16-year high hit yesterday. So let's go out to Chicago, where we find Rick Santelli, who's going to explain it all to us. Rick?
Yes, and the pullback wasn't very much of a pullback. As a matter of fact, we now see that all yields from 2s out to 30s are back up on the session, and with a 455 yield in 10s, not far from the intraday highs of this cycle. And long maturities, Tyler, keep leading the way. Look at 2s and 10s for 2 weeks on one chart. Look at the way the yellow line separates off to the top there. Now, I just noticed, did an audible, you were talking to the last guest about historic interest rates. Well, today is close to the anniversary of the all-time high yield in the cash 10-year. And anniversary dates for you GAN technicians out there are always important. So, 43-year chart, but it was September, I think, 30th of 1981. We almost hit 16% in that 10-year. So we want to pay very close attention to the notion that we're going to have a top.
That's
rather
crazy.
soon. Now,
6%, 5.89%
the
down.
top, but it could be a top. And that chart also demonstrates there's room to run to the upside. Boons closing an 11-year high yield today at 280, and the dollar again on pace for a fresh 10-month high close, 5th consecutive higher close in a row. Tyler, we're both pretty seasoned. Back to you.
Love that, Rick. Thank you very much. Indeed, we are. Oh, and seasoning is always good, isn't it? We love it. Coming up, the FTC finally coming out with its lawsuit against Amazon, long awaited. 17 states joining the agency in saying Amazon is a monopoly. We'll bring you the FTC's case and Amazon's response in Tech Check next. And a power check now. ResMed, the medical equipment company, Goldman Sachs, saying the stock could rebound following a recent sell-off, and Cintas, the uniform company, is the biggest decliner in the S&P 500, even though its results this morning beat estimates and it raised guidance, though only slightly. We'll be right back.
Looks like TLT's getting ready to make another low, guys. Wow. I think I got what I need to take my short. What is it?
You're probably not easily persuaded to switch mobile providers for your business. But what if we told you it's possible that Comcast Business Mobile can save you up to 75% a year on your wireless bill versus the big three carriers? It's true. Plus, when you buy your first line of mobile, you get a second line free. There are no term contracts or line activation fees, and you can bring your own device. Oh, and all on the most reliable 5G mobile network. Means more. Wireless that works for you. It's not just possible.
Shit.
Amazon shares falling 3.5% today. Big drag on tech stocks. The FTC and 17 states now suing the company, saying it's a monopoly. Let's get to Deirdre Boza for more in today's Tech Check. Hi, Deirdre.
Tyler, so this lawsuit, it essentially targets Amazon's Prime flywheel,
Feels awesome
which
to
is
have turkey
the crown
butt back.
jewel of the business model. It encompasses everything from logistics to third-party sellers to its booming advertising business. Amazon, it did hit back shortly after the suit was filed, saying, quote, "This makes clear the FTC's focus has radically departed from its mission of protecting consumers and competition." Now, the showdown itself, it could be make or break for the FTC or for Amazon, depending on the outcome. This could literally break up Amazon's different businesses, or it could embolden the company to do more deals. It could also be the final blow to Lina Khan's credibility, or give her the teeth to take on more battles against big tech at the FTC. Now, remember that Khan came into this position determined to hold big tech accountable, but we went back and we looked at the record, and it hasn't been great for her in the FTC so far. 3 of Amazon's 5 biggest acquisitions, they have been done while she's been in charge. MGN, One Medical, and iRobot. iRobot, though, hasn't yet closed. But there's also all the investments in generative AI. This is just a few of the biggest ones. Hugging Face, there was up to $4 billion for a minority stake in Anthropic, announced just yesterday. These are more creative ways for Amazon to bypass the regulators, but it gives the company an edge, and it could even ensure its dominance in the next platform shift, generative AI. Not to mention, it does build on top of its already #1 position in cloud. So taken together, these deals, and they just happened over the last few years while Khan has been in charge, they have made the Prime ecosystem and Amazon itself stronger and more entrenched. Exactly what the FTC, guys, is trying to dismantle. So this is a win that Lina Khan and the FTC certainly need. It's going to take months and potentially years to figure out the impact, though.
Is the FTC principally going... Amazon is many things. It is a cloud company. It is increasingly an AI company, but it began as a retail company, basically a bookseller, but it went long past that a long time ago. Is the FTC mostly going after its retail operations and saying that they're causing higher prices and so forth, or are the other businesses included as well?
It's focusing on that core e-commerce business, and it's looking especially at the role that Amazon services play to third-party merchants and how it kind of keeps them, they might argue, trapped into that flywheel or ecosystem. But really, you're right, Tyler. Amazon is so many things now. That's why I always call it an ecosystem, because the reason they have Prime Video is to lock people into the Prime system so that they buy more on the website and so that they can sell more advertising dollars. It all works together. And I guess that's a big question. If you split it up, does it work as well? Certainly some on Wall Street think it could even work better, but you're seeing maybe some complacency or maybe not really a lot of worry on Wall Street because the stock was already down today, and I'm not sure it ever really moves much on regulation.
Yeah, I didn't even think to mention video delivery and production, which they're very big in as well.
And grocery, I mean, there's everything.
Yeah, there's everything. All right, Deirdre, thanks. Appreciate it. Deirdre Boza. Quick programming note, the FTC chair Lina Khan will join Squawk Box tomorrow morning. She will address this Amazon lawsuit and more. That's live at 8:30 a.m. Eastern Time, the chair of the Federal Trade Commission.
That's a no-miss interview. As we head to break, it's almost time for Delivering Alpha. Join us in New York City this Thursday, convening business leaders to provide insights to help you minimize risk and maximize returns. Tickets are still available. Scan that QR code or visit cnbcevents.com/deliveringalpha. Power Lunch is back after this.
For Eastern.
Well, we talked a lot about rising oil prices, with crude up 13% just in the past month, but the S&P energy sector up only 4% in that time. So why aren't stocks going along for the ride? Pip Stevens going to explain that one.
And for the quarter, there's even more divergence. So over the last 3 months, energy stocks are up about 11%, while oil's up nearly 30%. And so Peter McNally over at Third Bridge said that a lot of this is thanks to the shape of the curve. So right now we're in backwardation, meaning spot prices are above the longer dated prices. And so what that does is it takes the risk of negative earnings revisions off the table, but it also means that we aren't seeing earnings revised to the upside. There's also still a lot of uncertainty in this market, especially on the supply side. As we've talked about, Saudi Arabia could unwind those cuts at any point. We could see U.S. Private players increase their production. And so all of that means that it's hard to attract generalist investors right now with all this uncertainty, all this overhang, especially after energy stocks outperformed over the past 2 years. So one other thing to follow up on is we talked about that Russian product export ban last week going into effect with an indeterminate timeline. So analysts over at Kepler crunched the numbers and said that in reality, it can probably only last for between 4 to 6 weeks, thanks to Russia's storage capacity. And so right now they're in refinery turnaround season that will end in mid-October, at which point their storage tanks are going to rapidly fill up. And so the only other option would be to dramatically reduce refinery runs. That's probably not going to happen. So this is probably not going to have that much of a longer term impact. But once again, it does show that, Putin still does have levers to pull.
What clears up those issues of overhang that you talked about? Is there one thing that would sort of...
I think stability for prices. I mean, even you hear executives, Michael Worth, all of these guys have said that they don't necessarily want north of 100. What they want is steady, assured prices. And when you think about WTI swinging from, what was it, negative $40 to $130 in the span of literally just 2 years, I mean, when you're running a company and trying to forecast for the future, that's really hard. And so then when we hear, when we see all this volatility, and then we hear executives say, like, we're not sure where they're going to go, it means that investors who aren't experts in this space, those generalists, they're going to say, well, I'm going to sit this one out until there's some assurity. There's also so much political overhang.
Yeah.
And so if you could go elsewhere and find attractive valuations elsewhere, why would you be here necessarily?
Yeah. All right, Pippa, thanks. Pippa Stevens.
We appreciate it. And JP Morgan paying $75 million to settle the Jeffrey Epstein case. Let's get to Eamon Javers for the details of this settlement. Eamon?
Hey there, Kelly. Well, the JP Morgan and the U.S. Virgin Islands say they have reached an agreement in principle to settle the Jeffrey Epstein sex predator litigation with a payout by JP Morgan of $75 million. Now, the settlement ends a bruising episode in which each side accused the other of enabling Jeffrey Epstein's abuses and led to a series of embarrassing disclosures for the JP Morgan folks. The Wall Street firm says the payments will be divided into 3 categories. $30 million will go to U.S. Virgin Islands charities, $25 million will go to U.S. VI law enforcement, and $20 million will go toward legal fees. In a statement, JP Morgan says that the settlement does not include an admission of liability, but the firm deeply regrets any association with this man. U.S. Virgin Islands Attorney General Ariel Smith called this settlement an historic victory for survivors and said it should sound the alarm on Wall Street about banks' responsibilities under the law to detect and prevent human trafficking. But a dispute emerged this morning between the two sides over whether anti-sex trafficking measures agreed to by J.P. Morgan in the deal are new or are not new. The Virgin Islands say the commitments J.P. Morgan agreed to include informing law enforcement when customers are identified as involved in human trafficking, terminating customers' accounts if J.P. Morgan has credible information it is engaged in trafficking, and identifying and escalating clients associated with forced or child labor, trafficking, or slavery. But a spokesperson for J.P. Morgan said these are not new commitments. They are previous and ongoing efforts to fight human trafficking. So even as they settle this suit, guys, it's clear that the two sides are still talking past each other today. And separately, we should note, J.P. Morgan also says it has resolved its lawsuit against its former executive, Jess Staley, over responsibility for the bank's relationship with Epstein in the first place. The terms of that deal have not been disclosed, guys. Back over to you.
All right, thank you very much, Eamon Javers. Let's get over now to Steve Kovac for a CNBC News update. Steve.
Hey there, Tyler. Yeah, a U.S. official said today the United States is working with Kosovo to investigate a shootout at a monastery that killed 4 people last weekend. The ambassador in the region told reporters authorities are trying to figure out who sent a trained
Did I
and
really just
organized
see a
group
gun
of about
tax
30
on there?
heavily
A
armed
double
Serbs into
gun
the
tax?
contested region and why. The
What?
violence has prompted new international concern over
Why
stability
do you
in
need to
Kosovo,
pay
which
more?
declared independence from
What is
Serbia
the
in
cause
2008, a move which
in
Belgrade
effect
has never recognized.
where they got to charge you
Also,
more
California
money?
Governor Gavin Newsom signed a bill into law
Get him
that
the fuck
doubles
out of there,
taxes on
guys.
guns and ammunition in the state. The money will be diverted to pay for more security at California public schools and into violence prevention programs.
That
And
doesn't
finally,
sound
there's a
too
new
bad.
commander of the International Space
The
Station
violence
as 3
programs, I don't
astronauts
know, because the
prepare to
motherfucker
come
gonna kill
home.
somebody, they're
The
gonna
title
kill
was handed
somebody.
over
Right.
to Andreas
If you got to take them
Morgensen
to the
of
class in the
European
first
Space
place, that tells you
Agency
everything
in
you
a
need to know.
ceremony today. NASA
All right.
astronaut
But
Frank Rubio is among the 3 who
I
will
can get
depart
down with that,
ISS
but
early
I feel like
tomorrow
there's
morning.
more to
During
that
his
story.
mission there, he broke the record for the longest single space flight by a U.S. astronaut. Pretty far out there. Tyler, back over
All
to you.
right, thank you, Steve, very much. Still ahead, our Powerhouse road trip continues today. We head to a city in the Middle West that saw a housing boom from the rise of remote work. We'll get a report from the ground there when Power Lunch returns.
Yeah,
We're
you
going to
see, that
Dayton.
wasn't so bad.
Welcome back. It's day 2 of our powerhouse road trip. We've gone from Poughkeepsie to Dayton. We're getting an in-depth look at what's happening in different housing markets around the country, especially wanting to know how far a $1 million budget really goes now. Yesterday, we were in Poughkeepsie, New York. Today, we're heading to Dayton, Ohio, which saw its housing market heat up during that shift to work from home. Number 74 now on Zillow's top 100 metro areas by size. Dayton prices are up more than 11% from last year. Just under half of houses are selling above list price. Here to tell us what it's like on the ground is Chip James. He's a realtor and luxury specialist with Keller Williams Community Partners in the Dayton area. Chip, welcome.
Hi, Kelly. Thank you so much.
So would you say the market there is more balanced these days?
Well, it feels like it's starting to balance out because for the first time in years, we have buyers that seem to be heading to the sidelines a little bit. And so it's sort of a wait and see approach for us in the business to see how this plays out over the next couple of months.
Prices are up, but in part because supply has declined. I think you said declined even more than its already low level of last year. So in terms of price, the market is healthy. But from where you sit, how are volume of sales? In other words, how many sales have you done this year to date versus last year to date? Is it the same, higher, lower?
The market in general, from a sales perspective, is down 10 to 15%. Thankfully, I'm blessed my business is up a little bit year to date. But, you know, our inventory is just so tight. There's really nothing available. And so this shift with buyers, you know, not being able to afford as much and for interest rates going so much higher, it hasn't really impacted the good houses yet. So we're still seeing a really what feels like a seller's market.
I want, you know, my favorite part, Chip, is seeing the houses. So if you don't mind, let's look at this one. It's a little over our $1 million budget, but maybe we can get a deal and maybe not. Talk to us about this property that's on the market right now.
Yeah, simply just a beautiful home and location, right, guys? So it's sandwiched right between like South Dayton and northern Cincinnati. So it's going to get a ton of attention whenever it hits the market again. My buyer was lucky enough to scoop it up not too long ago, but it's a 60 by 18 saltwater pool. So just something really exceptional outside. And people in Dayton, we love to host and entertain outside during those 6 months a year that the weather allows. But this house is a great example of that. Just beautiful inside and out.
Kelly, I think we should open the Dayton Bureau. This is really a perfect example. Look at the scale of that. That's on what, more than an acre of property or what?
Yeah, typically people, so whenever I travel, I love to talk to people about like the same thing you guys are asking me about, right? Like how far does my money go? And in Dayton, Ohio, if you're getting $1 million home or say 1.2 million, you're probably getting a beautiful home site. Some people say a lot, but I like to say a beautiful home site. Probably an acre with some trees, and hopefully low property taxes and a great school district. So, I mean, that's why people are flocking to Dayton and choosing to live here instead of some of our sister cities like Cincinnati or even Columbus.
Chip, my other favorite question, other than seeing the house, is I like to know what's going on with your buyers and these 7.5% mortgage rates. When we talked to Poughkeepsie, I think he said 51% of buyers were financed. So in other words, a lot of this was still cash in the market and so forth. How are people in Dayton affording 7.5% morguage rates?
Yeah, good question. It's a great question. I really enjoyed the
244.50 is where I think we might find some resistance in Tesla, even though it is a bit stronger than the market. It's still holding up. Tesla hasn't put in a new low, so I'm watching. If we could get a bounce in the market, I want to be long Tesla. This is where I want to be long, because the market's going to just continue to go and go and go. Where are those 450 puts at? Not 450, but 425 puts.
So the house that we just saw there, it sold for what, 1.2? Did it sell above ask?
Yes, sir. Just barely, just slightly above ask.
So pretty much above ask. And how big is that pool again? That's a big pool.
60 by 18. We'd love to have you. We'd love to have you down. Dayton has some amazing breweries and restaurants these days, and that's why people are flooding the market. But we'd love to have you to town anytime to check it out.
Tyler's going to spoil the sale before it closes.
Yeah. I may come in here, swoop it up.
Chip, your high school buddy, Courtney Reagan, says hi.
Oh, that's so nice. I wondered because she's a superstar on the channel. I'm like, man, if I can just be 10% as good as her, then hopefully I won't bomb.
That's
the
crazy,
segment.
guys.
Also, I need to thank you.
I
guys
can't
for
remember what I
finally
got them
putting my
for. Let me go back
communications
in my
degree
order
minor
and
in
see.
broadcast journalism to use.
But we got
20 years
those
too
for
late, but hey,
for
we'll
There
take
you
it.
go.
Yeah. Well, you're in a good spot. Let me just
and
say,
they're still
you're
cheap.
in a
They're
good,
30
you made a
cents.
good choice, I think. But you did well on this segment. We give you an A. Chip James, Keller Williams, Community Partners, and we'll say hi to Courtney for you.
Thank you so much. See you soon.
We're going to see her in a couple of minutes, actually.
Oh, is that true?
Our Powerhouse road trip continues all week long. Guess where tomorrow we are going? Ready for this?
Dallas, Texas.
Yes, we are.
I just want to say two things. My arms are not as feeble as they look there.
And I don't wear
number
red
one.
tank tops.
And while I do have a large head, that is just disturbing.
I appreciate that I get to drive, though, because
Yeah, you get to drive.
I enjoy.
You get to drive. I'm the backseat driver there. Don't turn here.
Not in Denver. I'm sorry,
Don't listen
Dallas.
to Waze.
Dallas. No, never use Waze, by the way. Dallas is one of the top 10 Zillow metro areas in the country. It'd be really interesting to compare that metro area with what we've already described here the last couple of days. Don't miss it. 2 p.m. tomorrow here on Power Lunch.
All right, still ahead. The pinch that stole Christmas will explain why it could be a ho-hum holiday season for folks looking for seasonal work this year. And as we head to break, CNBC celebrating
16
Hispanic
cents
heritage, sharing the stories of influential
is where we got in. So that would have been 100%. That would have been 100%. For all that whole time. Now 100% is a lot. Don't get me wrong.
Are pioneers.
100% is a
They go
lot.
into the great unknown. He wasn't
But I
fully
feel
sure what
like
to expect when he emigrated. But he had hopes. He had
you did a lot
aspirations, he had
there
dreams.
for
And that's a lot of risk. When you
for
think about it,
those,
it's
you
a
know,
risk and
they
reward
may have
kind of
went down to
mentality.
1
And
to
you need
2
to be really
cents,
clear
3
what your
cents,
long-term
and
vision
all the way
is
to 30.
when you take such a risk. And I know my
It's
father
hard to
did.
say what it was. You want to come down? Come on down. You're okay. You're okay. That may have been our rejection. That may have been our rejection here to look into a... Let's see, that's right there at Thursday's or Friday's close. That's a rejection, a peak above Friday's close on the weekly candles. So I wonder if now's the time. Let's go to a weekly chart, right? What did we say? What did we do? See how we just peek our head above it? We went up, we couldn't do it, we hold, now we just retested it. Where are we headed? Where are we headed? Where are we headed? That's my question to you. Where are we headed? I really honestly think we need another test of this level here at 235. Give it to me. I'm going to roll the
Shrink
dice.
has been the buzzword of the year for
I'll be right back.
retailers. Theft getting the blame for a lot of weak numbers there. But a new report out this morning indicates that maybe the concerns over shrink are overstated. Courtney Reagan joins us now with the details. Hi, Court.
Yeah, Tyler, this is really interesting. So while retail theft has gotten a lot of attention lately, the newest, most widely cited data shows theft actually didn't increase over historical norms last year. So the National Retail Federation surveys retailers annually about their shrink. Remember, that's all types of inventory loss. And while retailers reported total shrink grew to $112 billion in 2022 from around $94 billion the year prior, the percent of shrink from theft was about the same. External and internal theft makes up 65% of total shrink, the same as last year. In fact, external theft, which includes organized retail crime, decreased slightly to 36.15% from 37%. Internal theft increased slightly from last year. But control failures and processes, things that could be in control by the retailers, those actually grew by 2% as a source of shrink in 2022. I do want to note that the NRF says that 78% of retailers that responded to this survey don't include e-commerce goods in their shrink calculation, and 57% don't include supply chain losses. So the lobby group said shrink itself is likely, quote, heavily underreported. And while theft may not be increasing as a percent of total, the violence associated with it is. More than 2/3 say
Got
there's
about
more
an hour and
violence than
15
last
minutes
year.
left.
And
I'm
that's
going to grab a
on
snack. I'll be
top
right
of
back.
that last year, when more than 80% of the retailers that responded reported an increase in violence. So to deal with store violence, 45% of retailers have reduced store hours, 30% have changed out the products available, and 28% say they've actually closed specific store locations.
I have to think added to that would be the cost of additional security, or maybe paying off-duty police officers to be in the parking lot during selling hours. Right?
Yes, absolutely. Yeah, more of that is detailed within the report. Different technology, of course, that goes into trying to combat that, as well as personnel training for their employees and all of that too.
Talk to us about Dayton, Court.
I know, Dayton is a great place to live. I got to tell you, it was a great place to grow up. It's a nice place to raise a family. Springboro is the town right next to the one I grew up in, Centerville. Go Elks. We beat Springboro at high school football on Friday, just saying. But it's a lovely place to live, and I like seeing that people want to live there, especially with some remote work options, and there's other good work options there as well. A lot of small businesses.
How far is it from Cincinnati?
It's about a 45-minute drive from
45
Cincinnati.
minutes, so it's not far from Cincinnati, which is a fun town
and
as well.
there's an airport in Dayton, there's an airport in Cincinnati. Columbus Airport's about an hour and 15 minutes away. It's about, I want to say, 95 miles-ish from Indianapolis as well.
All right, from the Dayton Chamber of Commerce, Courtney Raven
Exactly.
reporting.
I know. I'll be the bureau chief if you want to open one there.
All right, yeah, we were talking about it.
I know.
Cool. All right, thanks, Court.
Thank you.
Still to come, bullish on betting. DraftKings higher on an upgrade to overweight at JP Morgan. They say it has even more room to run, despite the share price more than doubling already this year. We'll trade it in a fresh 3-stock lunch momentarily. And a big interview tomorrow on Power Lunch. Byron Allen, the man reportedly offering Disney $10 billion for ABC. He's built quite a media empire. We'll talk more about the state of the media landscape tomorrow, 2:15. Power Lunch. Be right back.
What are they all gonna do? There's a motor. Okay, what are they all gonna do? They're all gonna be in each other's way. You're actually gonna make it more difficult to leave and go places and do things. Like, really? What? Yeah, that's awesome. That's so true. Um, you see that? The consensus and actual, it's been rising, right? For 4 months straight. Well, I'm sorry. Technically, 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4, 5, 6, 7. 7. So that's crazy. Look at this dollar, man. Dollar dominance. Insane, isn't it? It's actually pretty crazy. Look at that. This was my target because I felt like we did not make this area resistance. My target is 106.03. I've had this up here for quite some time. As you can tell, I'm running out of lines here. But that's okay. This is my target. I want to see if this works. I want to see if it works. I'm really curious to see if it works. Because if it does work, that would be cool, but I'll get into see what happens. I don't think it's going to work. I think the dollar is going much higher. That's a fact. I think you still need to retest this area up here. 109.5. We still got some damage control to do. This is crazy. I bought TLT on the high. Oh my god, what an idiot I am. Or like it's just going lower, 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 lower. That's hilarious. I didn't feel good about that trade either. The only thing I can say is I have a little bit of time. I don't even think time can save me now. I do have a limit order. I did take some profit off on that trade because when I was, you know, I don't know. Where's the fix? When I got, what I was saying was, is I got, I took some off of it. Let's see here. Can we do we have an anchored VWAP on Trading View? I need to switch to the white. Indicators. Anchored VWAP. Auto anchored VWAP, dog. Let's do it. No, I want to do it.
Speaking of disruption, something like that, Taylor Swift becoming the most talked about person in the NFL this weekend. Her endorsement may be helping Travis Kelce jersey sales. Fanatics says they're up 400%.
Sorry, guys.
Her popularity around Kansas City, her Eras Tour movie, which is set for October 13th, will be a global event with showings planned in more than 100 countries. And oh yes, I'm never on the pulse of anything. I am taking the boys.
You're taking the boys to see the film.
They are obsessed with Taylor Swift. They're 5 and almost 4.
My son told me last night that Taylor and
Come on.
bought out a restaurant so they could go have
I want.
That's kind of bad. But in truth, I realized you couldn't be Taylor Swift and go to a public restaurant.
You can't do anything normal.
Do it. I mean, it's
the burden.
How do we hang it ourselves?
Kelly, thanks. Welcome to Closing Bell, a busy one at that. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make-or-break hour begins with major questions about rates and stocks, whether one might keep rising while the other keeps falling. That's what's happened over the past month as a rough September heads towards an end. Here's your scorecard today with 60 minutes to go in regulation. There's yields. They have turned higher in today's session as the day has moved on. And to no one's surprise, perhaps, stocks they're weakening. Take a look. The Dow and S&P now pacing for their worst quarters in a year. 7 of 11 S&P sectors now below their 200-day moving averages. The NASDAQ were the biggest. Trust suit. We'll have an update on that in just a little bit. Alphabet, Apple, Microsoft, they're all lower as well. Take a look, at least 2% declines. That does take us to our talk of the tape. Is there still a bull case to be made for stocks in the year's final stretch? Some suggest, despite all of what we just said, the answer is yes. For more, let's bring in Adam Parker. He's the founder and
CEO of Trivariate Research, also a CNBC contributor. Alicia Levine, BNY Mellon's head of investment strategy, is with us too. Let's start with you, Alicia. You're sitting right here. It's good to see you. So let's just say that, I was talking to our Mike Santoli, came up to me and said, President Biden, obviously he went to see the striking UAW workers today, said him saying that he supports a 40% increase in pay for UAW workers sent stocks a leg lower. I was just looking at GM and Ford. They were lower. Just put that into context as just one of those areas that has us uneasy in the markets today.
Right. We have wages, we have inflation, we have bond supply, and all that is weighing on the market right now. And until there's some resolution in the bond market and on yields, you're going to have this heaviness on the index level. And as we've seen over the last 4 to 6 weeks, it's really sitting on the tech sector, which of course is still the best performing sector of the year. So places to take profits and where investors really had flocked. And once it was FOMO, it was kind of clear that it was a vulnerable place to be should something not go right. Now, the interesting thing here is that the fundamentals are actually quite good. We're going to finish the quarter at a 3 to 3.5% real GDP, supporting earnings going forward. You don't get a recession at the end of that, but the yields could stop this year.
See, that's the issue, isn't it, Adam? The biggest issue, perhaps, is yes, a stronger economy is good, but a too strong economy that forces rates higher, that keeps inflation in the conversation, is not good, apparently, for stocks.
Look, it's PE times E. That's how you get the P, right? So, I guess one thing that's interesting is for a very long time, November 21 through about May of this year, there was a strong and statistically significant relationship between perception about rates and multiples. And then it went away. And it didn't matter for a while there if they were hawkish or not, because people just felt like, well, we're close to the end of the cycle. One more hike, two more hikes, zero. It's all the same. And what's eventually coming is a combination. And you and I talked, 20 times about the fact that what was in the price was way too many cuts for next year. And people woke up to that, I guess, a couple weeks ago. But you led the program with this notion of, is there a bull case? And I think there is. I think frankly, the consensus view is that we end the year at highs. I think a lot of people felt like we were going to have a softer September and then a pretty good year end. And I still think that's, at least in the institutional investors I regularly talk to, I think most people think we're going to end the year on highs.
Because, Adam, there's going to be this great chase for performance from people who simply missed it, were unprepared for what the market was going to deliver to us through the first 8 or so months of this year, and then that money's going to rush in, and that's going to take us to the promised land?
I think there's a couple reasons. It does sound, remember, because I can tell from the look on your face, remember, I always sound dumber when I'm bullish than when I'm bearish, right? But, I think the number of meetings I've done where somebody said, I was really over-allocated to U.S. equities all year, and within the U.S. equity market, I owned a ton of the big seven, and so I'm kind of good, and I'm locking it in here, is basically zero, okay? Most people thought equities premium looked too small, short-end bonds looked good, they looked at other non-U.S. equities, and people did not have big positions there, and so they're way behind. And then the bottom of stock pickers that just are U.S. benchmark, most of them have not generated a lot of alpha. So I think people are going to say, October earnings are going to be pretty good. I don't expect, as Alicia just said, we agree. I think the fundamentals of the corporates are pretty good. The big seven fundamentals are good. Mm-hmm. And I think the case for a broadening rally isn't that great, because that you need to believe that margins are going to come up for lots of other companies. So I think you're going to ultimately get back to the big seven. I think energy keeps working. And that's not a great cocktail for a lot of hedge funds who don't own a lot of the big seven, don't own a lot of energy. But I think at the index level, it'll probably be good.
So, Alicia, you make the argument that the market right here is fairly valued, whereas some would make the argument that it's overvalued relative to where we started the program, talking about rates.
Right.
Where rates are and earnings are too optimistic, and thus the market's overvalued. How do you counter that?
I don't think the market's overvalued here. We're down 7% from the high, close to 8% if we hit 4,200. To me, that is a good amount of consolidation in a world where yields have risen 50 basis points in the last 4 weeks. That feels like the right reset. And when you reset, you can move from there. Most years, an average drawdown is something like 12%. If we're at 7.5%, 8% today, I call it a victory. This is very orderly. It is not the market puking stocks yet. And I think we're just in a time of the year where we expect to have some unease. The threat of a government shutdown is not helping. The supporting of 40% wage increases in UAW, not helping, obviously.
Student loan?
Not helping. But again, there's something remarkable
Target
about this
has
economy,
news,
which I
guys.
think has
They're
shocked
closing
all
a
of
few
us,
stores
which
due
is
to
ultimately,
theft and
if you have
stuff
an
like
unemployment
that.
rate of 3.8% and wage growth that's higher than the inflation
That'll be
rate,
starting in
going to
October.
support
I don't know where the
spending, and I
locations
think
are. I'm
that's what
looking
we're
into it
seeing
now.
here.
Do you,
that's
do you
coming
agree
across
with
the wire.
Adam about this great performance chase, and that's going to be enough of an engine that it's going to keep the market high?
So having worked in institutional asset management, yes, there will be a performance chase at the end. Everybody was offsides coming into this year, both on tech and on rates a little bit, and I think this will be a reset. I mean, people will be coming in to scoop some stuff up here. You're seeing stocks trading between the 50 and 200-day moving average. Those move much lower around the 200-day. That's where you're going to see institutional buyers coming in to coast into the end of the year. The last 2 months of the year are historically the best year after year. Once you have a September and October, maybe October, that look like this, you'll have buyers come in.
So, Adam, what if Jamie Dimon is correct in which he says people should be prepared for higher oil and gas prices and higher rates? He says the world's not ready for a 7% Fed. Is that just, the Dimonisms, things that just Jamie says? Or should we really put stock in what he's talking about? Because, in some sense, when he threw out the hurricane comments many months ago, people scoffed. And yet we did have a regional banking crisis of sorts. And we're still trying to figure out where everything is going because of a lag effect and rates that may be stickier and higher than some have suggested.
New York, Seattle, San Francisco, and Portland.
Dimon says is a possibility.
Target, I think that's the places that they're closing.
Yeah, look, I'm not an expert on the history of what he says and accuracy, but obviously he runs a huge organization that has access to a lot of data points. I tend to agree with the oil price will be higher. Energy has been and remains our biggest overweight position. If people want to make money in the equity market, they should buy oil-sensitive securities. I think the chance of big upward
This is the
revisions
area I'm watching.
in the next 12, 18 months is meaningful.
Really curious how this area does on
Tesla. There's a whole host of things you can own there. So I agree with that part of the argument. I guess, look, I'm really excited about the ability for investors to generate positive negative alpha between now and year end and beyond, because there are things that are really discounting recessions and some things that are not. And most of the questions I've gotten the last couple of days from investors have been about why does certain cyclicals
Just don't know if we're going to
like
keep making it resistance, if we're going to buy and break and what. Like, I really want to know, because I'm going to go long or go short this name.
Home builders are acting differently than they did in the past. Like, there are a lot of things to do underneath the surface that I think are pretty exciting. I mean, Alicia, you mentioned labor. I totally agree with that. We're creating a basket today for short ideas of heavy union labor industrial companies. You go to the government website, Bureau of Labor Statistics, you can look at who's got a CDA, you can look at who's got exposure, and assume that if these guys think a 19% pay increase is no good, that they're going to get, that's going to be a cost burden. So that's not great for all these industrials companies that have high earnings expectations, high inventory, and high valuations, right? So there's a lot of things to do under the surface, I think, no matter what your market view is. And I feel like more excited about that than I have at any time in the last few months.
See, you make the argument that people should own the banks. Why do you make that case when I feel like those have fallen so out of favor with people, other than for the obvious argument that they make is that, well, they're so cheap?
Me? Well, look, I've never really recommended the banks in most of my career. I would just say three are going to be better than the regionals. So I meant on a relative basis. I think the observation I was making, Scott, was I went 1 month without an investor in an institutional meeting mentioning financials at all, right? Not short, not long, just the overt indifference was incredible. Like, I spend most of my meetings going through what's dislocated. Is it industrials? Is it semis? Is it discretionary? The sector comes up, we do whatever meeting of the day, or whatever. And it was just, he cares. And I think we fantasize, oh, that's the best scenario, man, would be to be contrarian, right? right? And so, stare down at what they offer. I think maybe, that's why the title of the is right. Consensus is right. It's just not that interesting, even though nobody cares.
Alicia, you like industrials, given what issues as Adam spoke to. I've got global issues with economies around the world. Who knows what's going to happen to ours? Strong now. What's tomorrow going to bring? Don't know. What about industrials and why?
So we like industrials in the context of thematic investing. So reshoring and rearming and the transition to green energy and the
Watch that gamma spot. I know 425 has got to be the level. I know that's got to be the put wall. 425 has got to be the put wall. Doesn't have to be, but I'd have to look and do math and shit real quick. I'm going to make an assumption that that's the put wall. No, it's the market. Frustrating day. I got 3 days. 3 days. I wonder if this is I don't know where the sound went. I don't know if you guys can hear it or not. I got 3 days to get the getting.
Responding to that survey. Back over to you.
But you know, because you cover the space, right? We've heard from so many who have used this as a principle, for lack of a better word.
So that's what happens when y'all like tear down your city and shit. They just move out, and before you know it, they all move out, and y'all really ain't got shit. For anybody that probably ain't on this stream, so let me not.
Retailer site because Target is calling out organized retail crime and they're giving us quantifiable numbers. However, other retailers are saying shrink has increased, and shrink in general has increased overall in retail as sales have increased, and shrink includes all forms of loss. Yes,
and guess what? The other part of it too,
but as a percent of total, that is actually looking the same as in historical past
they can't.
On average.
It would save them money because the surrounding people aren't making any money. They're a bunch of, like, you know what I mean? They're peasants. So it's not worth it for them to keep the store open because they don't spend enough for them to make enough. So they say, you know what? We'd actually save ourselves money if we closed the store instead of being in peasant land. It's unfortunate, but, you know, we never used to have Targets. Now we got 2 of them. Within a distance, obviously. but pretty close. Like, they're not too far apart. But we never used to have a target around where I'm at. And we got 2 of them. There it is. Guys, I'm thinking really hard about this Tesla put. I'm thinking about getting short Tesla. But I feel like this is max pain for the market, and we should see a bounce. We should see a bounce. Not sure what it's going to take to see a bounce. I mean, I know what it would take, but I don't know where. Right? We don't have anything in this area to bounce. We're still a ways away from any type of resistance, like any type of price action. I had a feeling this was going to happen, and I said it. I said, if we get down into these levels, you don't have anything to hold you up. It was just straight up. We just went straight up. I know we go here, but it's like, do I buy puts now and then we curl it up to like 430 again? Right? And then they sell. So it's really hard. You know, that's what she said. That's what she said to me. So I'm really unsure what to do. It's like, do I hedge, right? Do I buy a Tesla call, or do I buy like a SPY call? No, see, Tesla would go up further. She said, why not take it out of there and let someone else cherish it? We still have, our gap fill isn't until here, is, by the way, 422. So what I'm looking at actually now, and I don't feel so bad either, look at the volume. The volume's not that crazy. The volume's not like extraordinarily, you know. I said it this morning when I was on the phone with my other half. Today might get ugly. Today might get ugly. And it did. And it did.
Athletics.com.
We're back. Just want to alert you here. We're at the lows of the day for stocks. Take a look at the S&P 500 down 70, an even 70 points. It's 1 2/3%. NASDAQ 1 3/4%. You see the Dow as well. This rough month is winding down. Let's get a check on some top stocks to watch today as we head into the wind down of the session. Christina.
Well, thanks, Scott. Let's start with shares of Fisker. It's having their best day, so some positive news since July as the EV maker plans to ramp up deliveries of its.
Look, there it was. It just hit 425.02. Let's see if we get a lot of buyers to start trying to step in and sell their puts. I know that's got to be the put wall. Nope, they're still selling the hell out of it. I'm kind of buying, but you gotta watch the amount too, and the speed and the overall.
2 months or so, you can see it declining roughly about 10%. But analysts say the sports betting sector is appealing with new market growth prospects as well. They upgrade this name to overweight with a giant.
There we go. There we go. Let's go, baby. Pick it up. Pick this thing up. Let's go.
All right, Christina, we'll see in just a bit. Christina,
pick it up.
Accelerating as we head towards the close today.
They're not enthused. They're not enthused to do anything with this market. There's probably some goofball right now. Yeah, I'm gonna get puts. Yeah, I'm gonna get puts, man. I think I'm gonna get my put. Yeah, all right, guys. Guys, I'm in 425 puts. There's somebody out there right now doing that. I'm sure.
Where is it?
First of all, I think that the markets are
Where are we at on the
taking
daily?
their cue from the weather in the Northeast. It's cold, it's dreary, it's generally unpleasant. And I think for many reasons that are correct. We don't have that same bullish backdrop.
Wow, look at that weekly RSI, guys. We're already down to 45. I'm finna buy the dip here in the next couple points. I'm telling you right now.
Not lowering rates as quickly as you want.
Bet I don't buy the shit out of this dip.
And that's giving us opportunities, Scott, because there are so many parts of this market that have been undervalued, not just for September, but really for the past year and a half. And it sounds
So tell us what the names are.
We're looking for companies that have dividends. We're looking for companies that grow their dividends and have low multiples, because that's how you can make
Like
money in a
MetLife?
range-bound market. And that's what I think we're in, a market that's going to be range-bound.
What are those
We're seeing a
names?
sell-off because Wall Street's digesting the reality, like it's finally setting in. The Fed's not kidding. Like they're going to keep rates higher for longer, and that weighs on multiples, it weighs on earnings, and maybe most importantly, Scott, it weighs on investor psychology.
Yeah, but I'll play along with your weather thing if you want. I mean, it's going to be 75 and sunny next week here as well. So will this pass? Are bluer skies ahead for stocks? As people like Adam Parker suggests, not out of the question at all that we could have a big run into the end of the year.
Yeah, I mean, I don't know that the big run is where my mind's at, but certainly the narrative hasn't changed. We're not at the precipice of falling off a cliff. It's just the Wall Street's finally digesting what the Fed's been telling us all along. And you need a bullish catalyst to move the markets higher. Maybe you get some of that from
That's what you
earnings.
gotta do.
Maybe that is ultimately the Fed becoming dovish, quantitative easing, talking about rate cuts, and certainly that's not in the immediate future. But I mean, that's the catalyst that we've been looking for
Well, what about a
for the
chase?
past 2 years.
What about a chase from people like you who weren't prepared?
Wow, look at that apple.
Who haven't
That's a
performed
nice
well,
break and
and
retest.
need to,
You didn't get all the way up to the
you know,
level,
missed
but
it
man.
and want to get some of it before the year is over.
Yeah, if I chase anything or try to miss it, that's when you want to fire me as a portfolio manager. I don't style drift. I don't try to do any window dressing. We have a little position in technology. We have some Microsoft. We have some Apple. It did well this year. We've been writing calls on Apple. That's great. But we're rotating into the other names that haven't performed. And the best part about my style box, the boring, the aristocrat, the dividend payers, when they go through periods of relative underperformance, and it happens once every 10 years or so, they generally respond very favorably after that. So where I've been lackluster, negative, somewhat muted for the past year and a half, now I'm banging the table and saying this is when you want to start allocating. You and I were talking about it just the other week, taking some of that profit from growth, putting it into fixed income, putting it into the dividend-paying stocks, these dividend growers. Because since the end of 1987, that crash in October, 50% of the S&P returns come from dividends and distributions reinvested.
Right.
So it's a theme that works, and the timing is now.
Let me be clear. I said that poorly. I wasn't insinuating that you were not prepared. I'm simply talking about investment advisors who were not prepared for where these markets went. And I didn't mean it to come off that way and put you on the defensive for no reason. So my apologies for that. But you know where I was going, right? That's the idea, that there's enough underperformance from those who weren't prepared, who are now going to spur this move into the end of the year. Now, specifics. You bought Cisco, you bought Conoco, you sold calls against Apple. What's your take on Apple, by the way? Are we heading towards 160?
Yeah, probably, but I mean, I love the stock, so if it gets to 160, we'll buy more. We were selling in, all year into the 180s. We were writing calls on it.
Listen to what this guy's saying, guys. Seriously.
7.5, and that would have looked genius. But this is a stock that we own for the long term. It's not something we worry about from a trading perspective. You've got a company that just prints money. They're always buying back shares. They talk about the fact that the sales don't increase as much, and maybe to a certain extent that's true. But they're incredibly well heeled in terms of their fiscal management, and it's a stock that if it gets to 160, you certainly want to buy it. We rolled our calls down. We had 185s, we rolled them down to 182s. We sold calls on Visa, we sold calls on JP Morgan, just because there's been a little bit of a hiccup in volatility here recently. Cisco, to us, the catalyst was this purchase of Splunk, because now they're able to look at their software, their cybersecurity, their cloud, really synergistically put that together in their whole piping system. Think of all the companies in tech that have come and gone, and Cisco just stays there, prints money and prints money. PE's around 17, so very manageable. You get a 3% dividend. They increase it like clockwork, 5% every year. So it's a stock that you can look at here. A little bit more boring tech, but at least it's in the tech space. ConocoPhillips and energy, I know there's some thematics there, but They're printing money. They've got special dividends that pay out like an unbelievable rate. They've been increasing that special dividend by over 30% a year for the past 5 years. You've got a 13 PE. You're getting over a 3% dividend. Well, probably somewhere between 3 and 5 when you break it all out with the special dividend. So whether energy is priced at $80 WTI or 110, these companies are making money. They're focusing on shareholders. They're also buying back stock. And that's how we want to position our portfolio moving forward.
You mentioned tech. I'm going to steer you. You haven't seen this headline that I'm about to read, but I want your reaction to it in a question that I'm going to ask you. Looking at a headline now, according to the Wall Street Journal, OpenAI seeks $90 billion valuation in possible share sale. Okay? OpenAI was valued at about $29 billion in January in a sale of existing shares. That according to the Wall Street Journal. So $29 billion in January. Here we are, some 9.5, almost 10 months later. $90 billion valuation in possible share sale, according to the Journal. Does that speak to a bubble at all to you? How would you read that when we're looking at the performance of AI-related stocks, when you're deciding whether to get on board that train, which has run away from a lot of people? It speaks to the performance chase, et cetera. How do you view that as a wealth planner?
So there's two different ways to look at it. If I was able to get that valuation and triple my company in the course of that short time period, they'd be crazy not to bring it to market. Now, have we seen the IPOs working over the past week? I don't think they really have to any great extent. So I don't know how much Wall Street would embrace it. But there's a sucker born every minute, So we saw meme stocks, we saw NFTs. You're talking about AI being the next bubble. If that comes out to market at that price, I wouldn't buy it, but I'm sure there are people that would.
I mean, do you feel like there's a bubble in this part of the market that we've yet to really feel the repercussions of? I mean, you could say, okay, the picks and shovels companies, the so-called picks and shovels companies of AI, the NVIDIAs of the world, for example. All right, that's tangible. We can see what they're doing. They're making the chips, and their sales, the company suggests their guidance is this. Their sales are already being felt. Some of these companies that are benefiting from the AI boom may not see the monetizable gains from it for a number of years, unquantifiable as to how long it could possibly take. And that raises the question as to whether those valuations are justified or not.
So we're thinking about it exactly the same way. I've said before, it's not a bubble. Like, these companies make money. You mentioned NVIDIA, you mentioned Microsoft, there's monetization. But when you read that headline, it kind of changes the thought process into, well, that sort of sounds like a bubble. I mean, in '99, it felt like a bubble. You knew it was a bubble. It was insane. This so far has been a lot more tame and a lot more concentrated, isolated. But when you talk about a headline like that, I think I have to change my comment and say that, to me, that does sound like a bubble.
All right, we'll follow it for sure. Kevin, I appreciate it so much. Thanks. That's Kevin Simpson, Capital Wealth, joining us once again. Up next, we're trading today's turbulence. Stocks are sinking as we head towards the close. American Century CIO Rich Weiss, well, he's been bracing for a downturn. He's going to tell us now how he's navigating it. That's after the break.
So AMD has already bounced off of this 200-day moving average. People, you can hear me out there. Don't make me scream. You can hear me out there. All right. I'm thinking about grabbing some calls. I think I'm going to get some calls on AMD, right or wrong. I will be in the bong. Okay. You have a 100-day. You have the 50-day crossing below the 100-day moving average. Come on.
That's probably the least of it right now. Certainly weighing on the markets, and at least one of them are already going to be weighing on the real economy. Add to that tightening credit standards, high and rising interest rates. Stay on Peacock. And last but certainly,
Stocks are lower across the board today.
Whoever came up with the word peacock?
Of a difficult month. My next guest warns it's likely to get worse before it gets better. Here to share his current investment strategy,
really
Rich
curious.
Weiss of American Century Investments.
I think
Good to
the
see you
little
again.
girl's
Welcome back.
calling me.
pleasure, Scott. Thank you.
Yeah, I think I'm going to get some
rough
calls
out
if we
there,
can hold
to
this,
say the
guys.
least. Why is it going to get worse before it gets better?
Well, a number of reasons. Where do you want me to start? I guess the triple threat of the three S's, right? The shutdowns, the strikes, school loans. That's probably the least of it right now. Certainly weighing on the markets, and at least one of them are already going to be weighing on the real economy. Add to that tightening credit standards, high and rising interest rates, and last but certainly not least, nagging inflation, right? I mean, it's there's a medical analogy I use where the Chairman Powell is the doctor. He's administering antibiotics in the form of tight monetary policy to try to get rid of this fever that the ill economy has. And the fever's still there. It's been coming down, but he's made it clear progress towards 98.6 isn't good enough. You got to get there. You got to get to the 2% inflation rate. We have a ways to go there. That's going to weigh on the economy. So they're steering between the proverbial rock and a hard place, right?
But how do you, everything you say obviously makes sense. I mean, they're all plausible and credible views. But how do you make sense then of why the market is here in the first place if all of those things existed for the most part over the last 8 months?
I think it boils down to fear and greed. Market swings wildly in both directions, sometimes overshooting, again, in both directions. And I think it boils down to valuation. Look, relative valuation, bond yields rising makes stocks less attractive. I think that's the new item which is pushing stocks down today. Higher long-term bond yields, relative attractiveness or unattractiveness of stocks. I think it's as simple as that as to why the stock market has been moving down these last few days.
It's so funny. I have a conversation at the very beginning of the show with
Funny
somebody who
how,
says
like a clown?
4,600 on the S&P by the end of this year makes perfect sense. Market is fairly valued. Earnings are going to live up to the hype as well. And then some 41 minutes later, I've got somebody arguing the exact opposite. Do you not think that earnings are going to live up to where expectations have come to?
I don't think so. Earnings may come in strong this third quarter, but I think
He said no, Jimmy. Jimmy, no,
right?
Jimmy.
It's not a matter of if we're getting a slowdown. It's to what degree. Are we hitting a soft or hard landing? I think earnings will be disappointing late this year and into 2024. But hey, that's what makes a market, right? And at least for the past, let's say, year and a half, 2 years, okay, being positioned prudently, cautiously, safely has been the way to go. We're not trying to call the market every twist and turn day to day. But over the last year and 3 quarters, it's been better to be hunkered down in cash.
We'll talk to you soon, Rich. Thank you. That's Rich Weiss, American Century.
Yeah, we don't want to hear that.
Investments.
We don't want to hear nothing
Mike
about
Santoli,
cash.
our
We want
senior
to talk
markets
markets.
commentator, has made his way to Post 9. Why? Because of that Wall Street Journal headline. To some degree.
Well, I show up here every day around this time.
Durable
anyway.
goods data. Let's remember, we have a little bit of data tomorrow.
ChatGPT fame seeks $90 billion valuation.
Kind of curious how this is going to affect our movement in the morning. God, I gotta get a fucking haircut.
Your thoughts?
It's a decent benchmark of, I think, how much AI enthusiasm in general has probably multiplied by that point. It seems as if the report
still not
is about
until Thursday.
A potential private sale. So
I don't even really care about
employees, those
GDP
who have
growth
been
unless it's a
compensated with a lot
surprise.
of OpenAI stock to
Initial
monetize.
jobless
They would be
claims.
the
I want to
sellers,
see
yes,
that.
to get some liquidity.
Yes, it would include employee shares.
Yes, but
according
of
to their
course,
sources.
it would also likely include some relatively up-to-date revenue and some details that are going to come out, because the piece in the Journal said that $1 billion in revenue this year, going to many billions next year. The growth rate, the being able to put some valuation on a pure AI services stream as opposed to hardware is probably something that the market would appreciate, whether it would mean a reality check for the excitement around it or just kind of fuel to the fire. We'll see.
Do you think we need a quote-unquote reality check around some of the fire? I mean, I posed the question to our guests this way, in that you can sort of quantify in your own mind and to some degree with real numbers, picks and shovels. Yeah. NVIDIA says this, they're making chips that are going to go right into this area. Other companies that have gotten a tremendous benefit from the hype around AI may not realize the monetizable part of it for who knows how long. I mean, years, decade?
I'm always in favor of reality checks. Let's try to knit prices, market prices down to something that's actually happening in the business. On the other hand, it doesn't seem to me there are that many names that are going wild to the upside that are not already established companies with other stuff going on. In other words, you could tell me Microsoft added $100 billion because of pure interest in the OpenAI relationship. Okay, it's like a $2 trillion company, right? So it's not as if there's a whole parts of this market.
There was a really nice bounce on AMD, guys. What are we saying? We thinking AMD for the long.
For AI down the road at wild levels, at least not right now. There was at one point when you had C3AI, all those things going crazy just because of the buzzword.
That's fair, but I do to some degree feel like you've gotten a big boost for stocks. And by mentioning names, I want to make it clear, I'm not singling these out. They're just the ones that sort of come to mind on the list. Salesforce, for example, 52 weeks ago, 126. Today, 200. Sure. Twilio. I mean, these kinds of stocks that we've talked about, and the list is long and distinguished, by the way, beyond the Alphabets and the Microsofts and the NVIDIAs and Broadcoms, et cetera, where you've seen big gains. If you make an AI benefit list, that list is vast.
Yes, and I would say except for NVIDIA, every one of those companies, their stocks were higher at some point in 2021 before anybody ever heard of ChatGPT. So I think it's just been one of the cover stories and excuses to get excited this year, to have them reclaim a lot of that market cap that they did lose last year. Not saying it's all justified, but again, if it's going to be a mania, let's see some real mania, because it's not, I don't think it's right here yet.
And I'm not going to say it's not justified, because I think the overarching point to what we're both saying is nobody truly knows.
You have no idea. Yeah. So the market is therefore just kind of latching on to the known beneficiaries, maybe giving them too generous a benefit of the doubt.
Why don't they just keep it at this?
All right.
There's a government shutdown looming. They've already downgraded their debt. Like, stop bringing up all this other extra junk. This is the fact. The market is worried about the downgrade. That's it. And credit. And them not coming to an agreement. Something not getting passed. Like, stop the shit. Right? Stop trying to twist and turn in every little which freaking direction. Fucking idiots, man. Fucking smack the shit out of them if I could. But like, yo, let's just be honest. Be honest here. I have not smoked a cigarette all day, too, just so y'all know. For anybody out there who wants to know. I appreciate you guys coming. I have to use my brain to think about how I can make this experience better for other people, and think of some things to do. I do have some questions for the football show that we're going to do, covering numbers. And I'm literally, I know I've said it for the past couple days, but I'm literally going to do it as soon as I'm done this live. I kind of want to see how we go into the close. I want to see what happens when we close today. This looks like some support, could possibly be support for Tesla. I want to get the long, but I feel like I wanted to get the long Monday, and I feel like if I didn't take profits and I would have stuck to my targets, I would have been doomed, right? Like Tesla, Nike, Nvidia, AMD, you know, some of these names that were already beat up. Apple got beat up, and then it stood, you know, it just stood right back up. You know, we're killers. You got to kill us here. Right? Unless you're willing to throw your life away and go to jail, you got to kill them. Right? Kill or be killed. Because we got no problem doing it. So it's a good thing we did not get long anything. At least I'm glad I didn't get long anything. I'm really upset that I missed this trade this morning. I literally said it on the phone. I said, I think we might be in store for an ugly day today. This isn't good. I said, we took back everything we did yesterday and pretty much turned it into resistance. It just was not looking good. Sometimes you gotta use those instincts and just get ahead of it, right? Just position yourself. I've been looking and trying to find a reason to get long. I have this here. Here's a, right? Do I remove it? What was that, NVIDIA? Oh, that's 30 minutes. Shit. I probably just messed up. Damn it. The only thing I need to focus on here is buying, like, when you notice that you're in a range, stay in the range.
Yes.
Just stay in the range.
59%, in fact. All right. And up next, the countdown to Costco. The big
range
box
right
retailer
now is
reporting in
that.
just a few minutes.
Right there.
We'll give you a rundown of what to watch
This
for
is
when
our
those numbers
range.
hit the tape, when we take you
Right.
inside the
Pretty heavy
already
support.
teased, but we'll tease it again because it's coming up. The market zone.
I gotta wash my face.
And later, don't miss a special edition of Last
Where's
Call
my
live in
teeth?
Wayne, Michigan tonight.
So there's
following
support.
all of the
So we
latest
made
developments in the
yesterday.
UAW strike tonight, 7 p.m.
I
Eastern,
pulled
closing
back
bell.
Friday.
Right back.
Bang, support. Let's go. You know what? I'm taking my long. Look at time and sales has been green. For the most part, this is NVIDIA. If it breaks down, I'm working at Wendy's, y'all. You guys gonna help a play out? You guys gonna help a play out when he's at Wendy's? I'm just kidding. It's obviously a joke. But I'm gonna show you guys what I'm looking at here. We have just 10 minutes, so don't rush the trade. Don't rush anything. There's no reason to do that. So this was the area I'm looking at. Right here. Why am I looking at this? Because I am, dumbass. Don't worry about why. No, I'm just kidding. Let me get rid of it. Let me just get rid of it. Remove. Remove. Alright, here we go.
What is N? It's a variable. A symbol of flexibility. Solving for the needs of today's investors. Finding opportunities across asset classes. Investing to sustain growth.
So what we have is resistance, a bit of resistance, and it comes down support, support. What are we doing? Support? We're gonna buy? What are we gonna do? Alright, so what we'll do is we'll use the 3-minute chart to really say, hey, our buyer's coming in here, Is Joey buying the pop soda? Are they coming in here to eat, drink, sleep, get all their goods? Or does sales suck? So, man, fuck. There's certain words I wish I could just eliminate from my brain. I'm getting kind of crazy. I'm sorry. I'm getting crazy. So when you sit here and look at a monitor and you don't have a cigarette, you have Red Bull coffee, it's what happens. I was jacked up to the tits earlier, and I did not have a position on. It's crazy. It's crazy. This right here is what I absolutely cannot stand. If there's one thing that bugs the shit out of me, it is not having a position on or being able to take a position off right now before the bell and not executing the way that I know that I can. How do I fix this problem? How do I fix this problem? If you guys have any answers, you can throw it in the chat. I will personally go over maybe some ways that I can fix this. I sensed it, I felt it, I did nothing about it. I literally said that the market was rolling over. You know what, looking back, this is why we need to look back and write in journals and stuff like that. I was too concerned with the wrong stock. That's what it was. I was too concerned with Tesla, and I was not watching anything else. Microsoft, Google, Amazon, and Apple. Go look at them and then look at Tesla. So stock selection on my part was done shitty. It's pretty bad. Should have never. I don't know. I don't even know what I'm looking for on Tesla. I do. I do know what I'm looking for. Right? It's got relative strength. If we would have gotten that bounce, you know, this rollover in the morning on the S&Ps told us early, and I said it. So if you're just joining us, if you could hit that like button. I said this morning, guys, right here on this channel. So look at us rolling it over. We're rolling it over.
And we're testing the uptrend line from the October lows. Could be constructive. We'll see.
All right. So 59%.
Amazon's the biggest loser. They said. It just sounded funny. Amazon's the biggest loser.
Given the psychology of the moment and the fact that yields
just the way the candles were closing and all that.
The atmospherics are
I
now
think I had a green trade today. I think I took 3 trades.
Mentioning 7% Fed funds. Whatever that all means in terms of predictive value or not,
I know I had one break even just about.
Scales for exactly how high this should go. That at some point gets overdone. Assets are surging in long term. You know, I mean, the trading volumes have surged in the long-term.
Sorry, I just got that word in my head. I don't know why.
We're at a point where maybe.
But we rolled it over.
We'll see.
Pick your pain point today in mega cap tech, but Amazon is the biggest
where
loser.
do we bounce back to?
Down 4%.
Right. What are we looking for?
Headlines.
Do we just continue? Do we come in with the gap down?
And so it was actually the upside.
Feels
the
like
biggest
we
contributor
could.
to the upside in the S&P 500. So it really was sitting up there.
This is
on a
crazy.
perch.
This is so
and Alphabet were the
crazy.
ones
I
that
just want to
seemed
get
like
sick
they'd
to my
outperformed
stomach.
really well. They obviously
That anger is
had
real.
a little bit of embedded profits and time to back off. And so that's what I do think makes sense in terms of the reaction, even though we're 2 days removed from the Wall Street Journal story about the hedge fund that has made a lot of money betting that Lina Khan is going to fail in all these efforts. Basically, that the FTC wasn't going to succeed in all these cases. And so it showed you the market was a little vulnerable to the idea that there still is this threat.
Yeah, taking the under, which may be brought up tomorrow morning when she appears on Squawk Box. Don't miss that interview, by the way. Courtney Reagan, Costco, stocks down about 1%. What do we expect after the bell in overtime today?
Yeah, you know, Scott, Costco's really the only large retailer that still gives us monthly comparable sales and revenue. So investors kind of have a good handle on a big piece of the quarter already. But the street is then expecting $77.896 billion in revenue for the quarter on earnings of $4.79. Comparable sales down 1.4% in June, but then got better, up 2.5% in July, 3.4% improvement in August. Evercore ISI's Greg Mellick points out that the quarter itself caps off a year with the lowest comp sales since 2017 for Costco, but it has growing traffic, growing membership, so a good setup going forward. Membership fees expected to be worth about $1.46 billion. And then membership renewal, that's going to be one piece that's in focus. The possibility of an increase in those fees. The last membership hike was in 2017. Costco usually hikes
4:30, man. No, I don't want the market to close. I'm not ready. I'm not ready for it to close. This is horse shit.
But inflation is falling, and
this is horse shit, man.
4:30.
I want to see us get back to 4:30.
Yeah, we think it's coming, but more likely
we broke into that weekly candle. We're trying to bounce here. Look at the buying. Give me that fucking AMD. AMD looks weak. Hold on. Let me shit. Let me shit. Let me shit. Sorry, I'm going crazy, guys.
What happens now
if
we're talking about a consumer that isn't as flush as it was?
I mean, look, I think that it's always a little bit complicated when it comes to a Costco, for example.
Come on, let me get AMD. Let me get AMD. I want to get AMD. Come on.
But I do think that the market
oh my God.
All out.
You're kidding me.
About the consumer resilience. That's been the
You're
story
kidding me.
Market. That's why
let's go.
So I still think it's sort of a suspect area of the market, but I don't think Costco is the big culprit, even though it always has.
No, AMD. So, oh God, I'm not going to get it off, guys. Shit. I'm not going to get it. No. Come on. Come on.
The speed of which, if in fact we get there, would be somewhat of a stunner, I think, for many.
It absolutely would. And you know, all the charts kind of project ahead up to 5-1 or something like that at this point. I do also like to mention, though, that breakouts in yields aren't always necessarily the kinds of things that.
Wow, look at that. Look at that block flow. I know we're going up. Oh, now you want to talk? Now you want to talk? Fucking dumbass. I'll see you guys on the live stream tonight. Frustrating day for me. So what did I do? I just got jacked to the tits. That's it. Nothing else to do. I love y'all. If you guys could hit that like button, link in the bio if you want to work with us. You got any stocks you want to promote, a business you want to promote, anything, hit me up. Gonna do some thinking how I can get this stream better. If you guys have comments, I would love for you guys to throw them in the chat. I appreciate every single one of you guys. Self-worth, strive for excellence. Okay? Be a killer. Get whatever you want out of life. Whatever it is that you want, go fucking get it. Now. Start now. Go work out. Go get your mind right. All that stupid shit, forget about it. Love y'all. Hit that like button. Subscribe if you haven't already done so. We're going to work to be better people, to get our wallets better. Better person. Better. Killer. I'll see you guys in just a little bit. Like, share, subscribe.
Why his state is joining the FTC.